ask you to follow Squawk Pod on your favorite podcast app and listen anytime. We'll be right back. Oh. Leaders have spoken up about the fatal shootings of American citizens at the hands of ICE officers, but comments are far from the social justice outcry that we saw on the C-suites in the past. Joining us right now to talk about it, Emeritus Reed, author and professor of marketing. Warden, good morning to you. Help us understand what you think is happening here this time around and how it compares historically both to what we saw just 5 years ago, but maybe even more broadly.
Great to be with you, Andrew. Yeah, I think that what we're seeing now is quite different than what we've seen in the past, as you've noted. And I think what's going on here, to try to get into the minds of these CEOs, is that the internal dialogue that they're having with themselves is to say, hey, we don't know what the next day is going to look like in terms of if we take the wrong turn, if we say the wrong thing, if we are critical of this administration, what might happen in terms of what this administration might do to us. We might end up, Andrew, in the crosshairs. And so there is a kind of logic here that says we have to be cautious, not indifferent, but cautious, because if we're trying to protect the long-term health of our company, then we've got to play the long game, which is to say we have to be careful and wait this storm out and not make critical errors where we might put ourselves in harm's way in the short run. Even though what we're seeing we may completely disagree with, we have to have some diligence and some intentionality around protecting what it is that we're trying to have in the long term. And to be able to do that, it's very clear that in this second administration, this administration is very, they will go after you, and they will attempt to potentially, garner retribution and punish you. So the CEOs are responding to this. They're saying, hey, let's be a little bit careful here. Let's try to stay a little bit under the radar. We'll send out a message as a group of CEOs to sort of signal that, hey, we understand and validate the concerns here, but we're going to do this very cautiously.
Do you think this is going to have an impact? I mean, one of the big questions has always been what the impact on the business is. So people may have their own views about all sorts of things about politics, but there's been a view, I think, maybe in the wake, actually, of some of the things that took place between 2020, 2023, and then there was a sort of idea, you go woke, you go broke. I never loved that phrase, but how do you think about that and the way the customer base may think about this?
That's a great point, Andrew, and your point is something that is perhaps not easily recognizable by the marketplace, and that is to say that consumers have a lot of power here. They may not realize it, but they actually have a lot of economic power here. And so if there was a multi-pronged, multi-coordinated effort to pull back on consumption, even just a little bit, en masse, that would have a great impact on the markets and the bottom lines of these businesses. So if you're walking around and you see the protests and you're outraged, and you don't like the fact that Jeff Bezos has bankrolled the First Lady's documentary, then you have the opportunity, you have the right as a consumer to say, hey, you know what? I'm going to cancel my Amazon Prime subscription. Now, if this were to happen at a certain level at scale, these companies would react to that because that's a specific sort of impact on their bottom line. But right now, I think they're looking and surveying the landscape, and they're saying, hey, we just need to sort of stay out of these crosshairs for now, because this is something that, a storm that will blow over. We don't want to make any sudden moves here and again put ourselves in harm's way, because
well, that's the question. Do you think it will blow over or it won't blow over? You mentioned Jeff Bezos. Right now, if you go online and look up sort of the temperature on Tim Cook, who attended the Melania premiere of this documentary, there is, a lot of people in tech land that are taking him on and seem to be quite furious about it. Having said that, it's not so clear that they're all running to, chuck their iPhone in the garbage and go buy an Android.
Yeah, to your point, disentangling, Andrew, what might be some virtue signaling versus real impact versus authentic desire to make change is difficult here. But again, it's a very delicate, nuanced sort of thing. And again, I'm not justifying anything. I'm giving you potentially the analysis that's happening in the minds of these CEOs, where they're saying, hey, listen, we just need to be careful here. But you're right. Consumers, this is not going to go away. And my prediction is that this is a movement and not just a moment for obvious reasons. And so this is going to be something that moral decision-making calculus, that economic decision-making calculus, CEOs are going to have to go through this every single day and figure out, what's the best thing to do and say in that specific moment.
So what is the historical, as a professor who's looked at this for a long time, is there a historical context to look at this? Is there a parallel to this moment for American corporations?
Yeah, I think that there is a parallel, and again, it has to do with the consumptive power. You want to move the markets as a consumer. Just look at what happened with Disney when suddenly subscriptions were canceled en masse, right? So there's a way to move this market. There's a way to impact change, but consumers don't often realize that they have the power of the purse book. They have the ability to change their consumption, to pull back from capitalism, and to have an impact in these marketplaces. And the sooner that they become mobilized and organized with a direction toward doing this, you're going to see some fast change pretty quickly.
And is that what you're expecting or you're not expecting?
I'm expecting it, because I think we're in a particular unprecedented challenge right now, especially with what we're seeing in Minnesota. And I think the fact that you're basically watching a case 101 of how exactly not to handle a PR crisis. And so all of this is blowing up now. And I think consumers have had enough. And it's one thing to sort of say, there's a political, ideological point of view that's happening, et cetera. It's another thing to be watching U.S. citizens potentially murdered in the streets. And that's a completely different thing that will land on the United States citizens very differently as it has. And you're going to see this continue to be sustained.
But you think it's going to play out in terms of how customers consume certain products based on the connections between their CEOs and this administration, just to be clear, because look, I've suggested, I said it yesterday pretty loudly, I think there's an opportunity for CEOs to stand up and try to push this government, frankly, to at least just press the pause button on how this is all being approached, simply because my view is that clearly, given the outcomes we've seen, ICE has whatever their training is to deal with protesters by default is not working.
That's correct.
I've sort of taken, I think, the most apolitical approach, which is just let's try to figure out how to fix that piece of it, irrespective of whether you think the protesters should be there, whether you think that politicians are inciting them to get all of those things. But there's a lot of folks who don't want to say anything, as you said, because I think that they're nervous. But the question is, do they have the reason to be nervous? You go online right now. There are a lot of people, when I said that yesterday, a lot of people who applauded, and there were a lot of people who said, down with you, that's terrible, you should never say that, do you not believe in dealing with illegal immigration? Have you not seen what Tim Walz is doing? Have you not seen what these other folks are doing to incite all this? And by the way, my view on that is that's not good either, but that's a different issue than the one we're confronting here.
Yeah, I think that's correct. I mean, two things can be true, right? So you can have affirmation for a particular political ideology in terms of public policy around immigration and a stance on that. But that's very different than, to your point, Andrew, calling out the fact that what we're seeing is just not acceptable in the United States of America and a liberal democracy. And so I think those two things are at odds, but they can be separate thoughts that people hold. And I think what you're going to see is you're going to see CEOs. This is very cautious. It's easy for you and I to sit here and say, well, you should be doing this, Tim Cook, or you should be doing this, Jeff Bezos. But they are also, and again, I'm not excusing what they're doing. What I'm saying is, I'm taking you through the logic of the internal dialogue they're having with themselves and probably with each other. Say, hey, listen, maybe we can do some backdoor things. We can virtue signal. We can try to de-escalate this thing and ask the president to say, hey, let's take a look at the protocols that are obviously not working, to your point, Andrew, and let's try to fix it in a way that doesn't put ourselves in the immediate crosshairs or in harm's way with respect to the healthy operating of our business.
Marcus, appreciate your perspective on all this this morning. It's a hot issue right now, and I imagine we'll continue to talk about it. Thank you.
Thank you, Andrew.
All right, when we come back, a powerful name in Washington is raising a red flag about Netflix's deal to buy Warner Brothers. We've got the details next. But first, the AccuWeather forecast with meteorologist Bernie Rayno.
We're going to be back to normal when it comes to travel today, thankfully, across the country. But boy, is it cold. Your clues are back with the forecast. Teams in Chicago, 20 in New York City, even Miami in at 68 degrees. Beautiful weather in the southwest, LA coming in at 72 degrees. Again, we're not looking at too many travel delays today. Some gusty winds can cause some minor delays this afternoon out of O'Hare International Airport. To help you make the best decisions and be more in the know, download the AccuWeather app today.
The chairman of the Senate's Antitrust Committee is raising concerns about the Netflix deal to buy Warner Brothers assets. In a letter, Senator Mike Lee said that the deal appears likely to raise serious antitrust issues, including the risk of substantially lessening competition in streaming markets. Senator Lee also said that he's concerned that the deal could operate in a killer non-acquisition by weakening major competitors while the merger review process is pending. He warned that Netflix could obtain competitively sensitive information under the guise of due diligence. A subcommittee hearing on this deal is scheduled for next Tuesday. In the meantime, overseas, the FT reports more than a dozen UK politicians and former policymakers are calling on the country's competition watchdog to launch a full review of Netflix's bid. In a letter, the group suggests that the deal, in its words, will, quote, cement an already dominant player in the TV streaming market.
Meantime, Northrop Grumman announcing its fourth quarter results, earnings of $7.23 a share, much better than estimates of $6.97 a share. Revenue increased 10% to $11.7 billion, also topped expectations. The company said its backlog grew to a new company record, $95.7 billion. For the full year, Northrop seeing earnings in the range of $27.40 and $27.90 a share. That's below estimates, though. $28.85. The stock off close to 4% right now. Revenue coming in, they say, between $43.5 billion and $44 billion. That's versus an estimate of $44.2 billion, and you can see the market reacting just a little bit. Coming up on the other side of this break, UPS shares, they are rising kind of big time right now after its earnings report. We're going to talk to a transports analyst next. It's a pretty interesting move to hear what's going on at UPS this morning and what it says maybe even about the larger economy as well. Plus, GM shares getting a boost from guidance. We're going to talk to CEO Mary Barra just a couple of minutes. This also in the same day that we're hearing about new tariffs from South Korea, where they do export vehicles from Squawk Box America. Welcome back to Squawk Box. The U.S. Army has signed a $5.6 billion 10-year contract with Salesforce. It says the goal is to modernize outdated practices. Now, Salesforce saying its technology is going to allow the Pentagon to shorten procurement timelines from months to days and allow defense officials to make quicker, more informed decisions. And, you know, there was a lot of questions about sort of the pivot that Mark Benioff had made, interestingly, politically, with the president being on the other side of him for a very long time and then shifting this way. It also has raised a lot of questions even inside Salesforce among some of the employees about how things have been shifting.
Again, we'll watch it, but as Andrew mentioned, that stock up by about 2.25%. UPS shares also rising this morning. Check it out right now. They're up by about 3.33% after the company came out with their earnings and talked a little bit about how they see the future. Ken Hexter at Bank of America Securities is a senior transportation analyst there. He's going to be on the conference call. And Ken, this is a pretty significant move that they're making, things that they're saying about this, because it is kind of breaking away from Amazon. How convinced are you that that process is going to work, just in terms of getting rid of some of the thinner margins that they had under the Amazon business, trying to make up for it with higher margins, but maybe taking a hit to the bottom line?
Yeah. Good morning, Becky. Thanks for having me. That's right. It's actually the outlook of Amazon now. You're going to have about 1 million packages that you've lost over the last year as we get through mid-year this year that will have come out of the network. But their revenue outlook is actually higher. So they are getting rid of lower yielding volumes, and it looks like their yields are up upper single digits. So you're really exchanging very low rated products, trying to offset that. They've gone through an exhaustive cost takeout program, so they're talking about another $3 billion next year, talking about tens of thousands of employees that they've reduced in this program to try to get more automated, to try to offset the loss of these large amount of volumes from Amazon.
And what do you think about that process, how it's taking place? The CEO, Carol Tomé, said that this is going to be an inflection year. You think that's the case, and are you a believer?
Well, look, we upgraded to, we had, last year was what we call, a year where everything that could go wrong did go wrong, right? So we were underperformed for part of last year on the stock. We recently upgraded to neutralize. We moved past exactly what you said, that phase where everything that can go wrong. So you lost the Amazon, 50% of your Amazon revenues. You lost the post office contract to move last miles for their short post business. They lost de minimis volumes. So you had a lot of things going wrong. They countered with about their entire MD-11 fleet, which they wrote off the entire fleet to start this year. So you had a lot, as I mentioned, that could go wrong last year. You've reset the bar. You're continuing to cut costs. So it is a reset, but on a smaller base, right? You've taken out a million and a half packages from Amazon that they're now working to offset with small, medium-sized businesses, with healthcare volumes. So really trying to offset it with higher profitable volumes. Their outlook for margins, while they're targeting $1 billion more in revenues, they're actually lowering their margins a little bit below where we were, below their where they finished this year by about 20 basis points. So it tells you there's still a struggle to try to offset those lower rated volumes.
How do you compare UPS to FedEx? They've always been the competitors that we kind of watch.
Yeah, and as you mentioned, a bellwether for economic activity, because they both are concurrent economic. So when you want to move stuff, you've got to pay that rate. FedEx, we prefer FedEx as a stock just because you are also in the midst of a cost-cutting program. They're a $6 billion cost-cutting program, $4 billion for Drive, $2 billion for this Network 2.0, which is the combining of their ground and express into one consolidated network. They're about to spin off their freight segment, which is their less than truckload division, the largest less than truckload provider in the country. So there you've got a lot going on the cost side, which could offset this kind of muted 4-year freight recession that we're in the midst of, or hopefully coming toward the end of.
Yeah, I was going to say, where do you think we stand in that? Because the idea of a freight recession compared to what the Atlanta Fed's GDP target is now above 5% for the quarter. When does that kind of reflect in these transportation stocks?
Well, we do a truck shipper survey every 2 weeks. We try and gauge the outlook from shippers themselves, and it has been in this freight recession level. In our survey, it's about a 54, so it's been below that signal for 3 years and 10 months. And for the last couple of surveys, we did bounce above it. Now, that is seasonally normal at this time of year. You typically have a run-up. We would expect that to come down, but it hasn't. Part of that is because of the winter storm we're going through, so there was a little bit of tightness on the shipper and anxiety side as we moved into that. But let's see. I think we'll really find out as we move deeper into February, into March. That's when you've got bid season for the trucking segment. You've got really finding out if that pullback is real or if there is some underlying demand kind of pulling up. So it does, in the last couple of surveys, seem to be a little bit stronger. We'll see if that's demand related or really just the supply coming out on the trucking side.
Okay, Ken, thanks for joining us on a busy
Thanks.
morning.
Have a great morning.
You too.
Okay, meantime, American Airlines just out with its quarterly results, and Phil LeBeau back with us doing double, triple duty this morning on those numbers.
Good morning, Andrew. Take a look at shares of American Airlines under pressure after the company missed on the bottom line in the fourth quarter and missed by a pretty wide margin, earning 16 cents a share. The street was expecting 34 cents a share. Revenue roughly in line with estimates at a little over $14 billion. By the way, revenue was impacted in the fourth quarter by $325 million because of the government shutdown. In terms of the metrics in the fourth quarter, American Airlines revenue per seat mile was down 1.6% compared to the fourth quarter of 24. Cost per seat mile up 3.7% year over year. The fourth quarter operating margin was 1.1%. Free cash flow, it was actually cash burn, $83 million. And then in terms of the metrics for revenue, domestic revenue up 1.5% in the fourth quarter, while international revenue was up 3.5%. The guidance, first quarter, the company expects to lose between 10 cents and 50 cents a share. That is the expectation for their loss. Right now, the estimate on the street is for a loss of 30 cents a share. Revenue is expected to grow 7 to 10% compared to the first quarter of 25. The storm impact, the one that we're currently experiencing, it's going to be between $150 and $200 million. So that is fresh guidance out from American Airlines about the current storm's impact. For 26, the guidance is to earn between $1.70 and $2.70 a share. Right now, the street's at $1.97. Lots to discuss with Robert Isom coming up in about a half hour, about 40 minutes from now. We'll be talking with him about not only the fourth quarter, the impact of the government shutdown, but the current storm. Guys, Dallas is a mess. It's frozen. It's hard to get a flight that goes into Dallas right now. Take it from somebody who's had a flight going into Dallas today already canceled. So we'll talk with Robert about the current situation as well as the outlook for the rest of this year for American Airlines. We'll send it back to you.
Okay, Phil, we are going to be talking to you a lot more in just a couple of minutes because I know you've got a big interview that you're going to be bringing us. Meantime, it's just past 7 a.m. right here on the East Coast. We're watching Squawk Box on CNBC. Still snow. It's not snowing, but there's still a lot of snow on the roads. I'm Andrew Russ working along with Becky Quick. Joe is off today. You're looking at a live shot there of Times Square, a little snowy Times Square. On today's top story is the European Union and India. This is interesting, saying they have now reached a free trade agreement. President of the European Commission calling it, quote, the mother of all deals, expected to double EU goods exports to India by 2032 and open up the European market to labor-intensive goods produced by India. So a new and very intriguing partnership that could change a whole bunch of supply chains. Meantime, President Trump raising tariffs on South Korea, he says, because the country's legislator has not yet approved a trade deal with the United States that was reached last summer. He posted on Truth Social that the rate in autos, pharmaceuticals, and lumber from South Korea would rise from 15% to 25%. Officials in Seoul said the announcement caught them by surprise. And the president sending border czar Tom Homan to Minneapolis and ordering the Border Patrol commander Gregory Bovino out of the state. Pivot coming after Republican lawmakers and other Trump allies raised concerns about losing public support as those shootings have overshadowed the president's immigration agenda.
All right, let's take a look at the futures this morning. We are continuing to see the Dow futures fall. They're now off by about 150 points below fair value. S&P futures continue to stay up. They're just over 22 points above fair value, with the NASDAQ up by about 183. Again, though, this comes after 4 days in a row of advances for the major averages. If you take a look at what's been happening in the Treasury market, most of the yields are higher this morning, with the 10-year sitting at 4.22. The 2-year yield is a little lower. It's at 3.59. And then you have energy prices. Right now, WTI up just slightly, but it is still above $60 a barrel at $60.64. Brent is at $65.56, and then you've got natural gas after its huge run-up over the last several sessions, off by about 4.6% this morning to $6.48. Gold and silver continuing to chip away at new highs. They're slightly lower this morning, but again, this comes after some really big gains. Gold right now off by about $7.80, $5,074 an ounce. And then you've got silver off by about 3.5%, $111.54. Cryptocurrencies this morning look like Bitcoin is higher. It's up to $87,877. Let's get over to Dom Chu. He's been taking a look at a lot of the morning's pre-market movers. Dom, what's topping your list today?
All right, so what we have right now is that tech trade and the Dow kind of diverging. I'm going to tell you the reasons why. First of all, check out what's happening with semiconductors, Micron especially, the S&P's top pre-market performer so far. Those shares are up about 4.5% after the memory chip maker said it plans to spend roughly $24 billion to expand its manufacturing operations in Singapore. The company said the investment would add 700,000 square feet of manufacturing space to an existing memory chip manufacturing operation. It says that new facility will help it meet surging demand for those chips, fueled, of course, by the rise of AI and data-centric applications. So Micron shares up 4.5%, helping that chip chain. Meanwhile, for the Dow, United Healthcare shares are sinking, and in a big way. UNH is down about 14% this morning after reporting a modest fourth-quarter earnings beat, but softer revenue guidance. The company said it expects a 2% year-over-year decline for 2026, reflecting right-sizing across the company. Health insurers as a whole have been taking this morning after the Trump administration proposed keeping the rates that Medicare pays insurers roughly flat in 2027. Now, that proposed rate increase falls short of Wall Street's expectations. Health insurers like Humana, CVS, Elevance, you can see here leading those decliners. A lot of them, Humana down 15%, CVS Health down 11%, and Elevance down 7% this morning. And then check out shares of GameStop. They're rising just about maybe 1% or so. Investor Michael Burry says he now owns the stock and has been buying shares recently. Burry famously, of course, bet against the U.S. housing market ahead of the financial crisis. His post on Substack praised the company's CEO Ryan Cohen and said he aims to hold this stock longer term. This original kind of meme stock, if you will, rose 4% during yesterday's trading on that bit of news. So we're seeing another incremental gain. Becky, keep an eye on GameStop and those at least meme ones. I'll send things back over to you guys.
Okay, thank you.
You got it.
So close and yet so far away today.
Yes, you're not just 30 feet away from me now. So.
I can't see you off the corner here. Anyway, we'll check back in with you in just a little bit. Thank you, Dom. When we come back, an exclusive interview with GM CEO Mary Barra. The automaker just reporting quarterly results in the last hour. Squawk Box will be back in just a moment. right, welcome back to Squawk Box, everybody. Phil LeBeau is back with us, and he joins us now with a special guest, GM CEO Mary Barra. Phil, take it away.
Thank you, Becky. Mary, thank you for joining us this morning. Just a few minutes ago, you reported fourth quarter earnings that were better than expected, and you gave guidance for 2026, forecasting an even greater profit than you posted for all of 2025. What's driving that right now?
Well, Phil, I have to really start by thanking the entire GM team and our suppliers and dealers for really having exceptional performance in 2025. I think what's driving it is a really strong product portfolio and services, as well as just the agility and the resilience of the team that is able to adapt to changes and continue to deliver these kinds of results.
One of those changes being tariffs and the tariff policy that seems to be changing fairly quickly. A couple of questions here. First of all, North Korea, the tariff there is going to be going up from 15% up to 25%. You manufacture in North Korea, export out of there some vehicles that come into the U.S. What are your thoughts on the impact there?
Well, we're hopeful that the two countries will get the deal ratified that they agreed to last October. In our guidance, we're assuming the 15%. And so we will, if we need to mitigate, if there's a period of time it's not, but we're really encouraging the countries to get the trade deal done that they agreed to last October.
And that's my fault calling it North Korea. South Korea is where you have production facilities. Do you expect USMCA to be renegotiated, this year? It's up. And a lot of people are questioning if a deal will get done.
Well, I think that's what we've been told by the administration, that they will be renegotiating USMCA this year. Like last year, we'll continue to work very cooperatively with the administration to make sure that they understand the auto industry and understand what's going to strengthen U.S. manufacturing.
They've also said that they want more affordable vehicles. Look, you guys should be applauded by investors for having one of the higher transaction prices among the mass automakers, and yet at the same time, the administration is saying, wait a second, people are paying $770 a month on average for an auto loan for a new vehicle. That's got to come down. The cost of vehicles needs to come down. Have you had these conversations with the administration in terms of auto affordability? I know you're rolling out lower priced vehicles, but can things truly change?
Well, I think when you look at the value that we have last year we sold over 700,000 vehicles in this country with a starting price of under $30,000. When you look at the Chevrolet Equinox, the Chevrolet Trax, the Buick Envista, and several other models. So I think we have affordable vehicles, we have premium vehicles, and we have true luxury vehicles and super trucks. We have a wide portfolio, so we can meet the customer where we are, and we truly have vehicles that don't break the household budget.
Well, you do have those out there, Mary, but let's also be honest. Very few people buy vehicles near the base price, at the lower end of the market. They add on various features, and that pushes the prices up. And that is to the benefit of you as well as other automakers. And look, you're giving the consumer what they want. But I guess the question becomes, we're going to hear about this from this administration for some time to come. What can truly change?
Well, we're constantly working on making vehicles more affordable, leveraging technology. But again, yes, people do add options, but their choice. And when you have a vehicle like the Chevrolet Trax that starts at $25,000, you can add some nice enhancements. There's great safety features that are standard on that vehicle, great technology that's standard. So I think we do have already great offerings, and as evidenced by the fact that we sold over 700,000 in this country last year. So I think we're meeting what is necessary from a value perspective, while also giving customers choice for things that they value and are willing to pay for.
Mary, you're trying to walk a fine line when it comes to electric vehicles, continuing to manufacture them while scaling back your plans from where they were a few years ago. You've taken a number of charges. You'll probably take some more here in 2026. When do you believe that you can be profitable, fully profitable with electric vehicles, given all the changes that are taking place and the changes in production?
Well, from an EV perspective, we do believe that that is the end game. We're continuing to work on, cost improvements. We have LMR battery technology coming out in 2028 that will take thousands of dollars off. I'm not putting an exact date prediction because the other thing that's going to matter is how do we scale the EVs. And we're still in this period right now where we haven't really recovered from the pull ahead before the consumer incentives ended. So we're going to be ready. We're going to keep improving the EVs that we have. We're very proud of the fact that we have a full portfolio, so we give customers choice, and we have affordable EVs as well. So we think we're well positioned in this period of time where the ramp will be a bit slower because the incentives are gone. We're well positioned to take cost out, and I think we'll be moving to that profitability quicker than many people think. But we're not going to put a specific time on it because it's really hard to predict when you don't know exactly what the volume is going to be.
And Mary, quickly, if you had to predict whether it's 27, 28, or later, when EV demand overall for the industry picks up, when do you think that will be?
I think we're going to see a steady increase. You know, Phil, we never thought it was going to be a straight line like many thought. Now that there's not a regulatory environment that's driving that, it's really going to be as consumers see, and consumers are incredibly rational. So as they see, they get used to the technology, they believe that there's robust charging infrastructure, I think they're going to shift to EVs. And what we've already learned is when somebody buys an EV, they're very likely to stay with an EV and buy another. So we think this is going to happen over the next handful of years. Again, there's so much around it, but we're committed. We do believe it's the end game.
Mary Barra, CEO of General Motors, joining us today from the company's headquarters in Detroit. Mary, thank you very much for joining us. Andrew, I'll send it back to you.
Okay, Phil, thank you for bringing us that interview, and please thank Mary. Appreciate it. Meantime, we come back as Zoran Mandami leading New York City through its first major weather challenge as mayor. Next, we're going to have a first on CNBC interview with the new head of the Partnership for New York, Stephen Fulop, who just took over that organization last week, and it represents the business community in its interactions with the new mayor. We're going to talk to him right after this. Keep it here. Squawk Box, come right back. Welcome back to Squawk Box. New York City Mayor Zoran Mamdani facing his first test leading the Big Apple as it faced one of its biggest snowstorms in a decade. Joining us right now to discuss the state of New York City for business is Stephen Fulop. He's the partnership for New York City president and CEO. He just took over the helm of that organization last week and joined Squawk Box this morning in his first TV interview on the job. So good morning to you, sir.
Good morning. Good to be here.
Let's just talk storm for a second. Looks like they did pretty well. Give him a good grade. How much credit do you get for that?
I was a mayor of Jersey City. I think he did a good job. I think it's tough to step in. You know, there's a broad bureaucracy in place, but.
So does he get the credit for that in your mind? Does the previous mayor get the credit? The bureaucracy of, or the...
Look, I think being the mayor, he gets blamed for a lot of things unfairly, so he can take credit for this, and I think that's fair game.
So the next sort of puzzle piece is he has a whole bunch of objectives that he's going to be putting forward, including budget things and a whole lot of other elements to this. And the business community has to have some kind of relationship with the mayor, or maybe doesn't. I don't know. What is the current state of that relationship?
Look, I think my interaction has been very positive. He's been proactive and listens. And how that manifests itself, we don't know yet. We're kind of in uncharted territory. I think this country hasn't seen a socialist in an executive position since probably Bernie Sanders in Burlington, Vermont. So, you know, we listen to what he says. I think we're going through a transition from being kind of an activist to an executive or a legislator to...
So what does that mean in practice to you? What does that shift mean?
I think that, you know, there's a place for an activist on the outside throwing bombs. There's less accountability. You know, there's a reality to math when you are the mayor or the president or the governor. And I think that there's going to be some transition. Our job is to be supportive and try to be helpful where we can and disagree where it's necessary.
So where can you be helpful in this moment, do you think, and where do you disagree in this moment?
Yeah, I think it's a good point. Look, I think when you have issues like childcare, important, right? I think 350 CEOs at the partnership, 500,000 employees, many of them provide childcare. We have a unique place with regards to an understanding of what works and what doesn't work. So we could be helpful there. I think on technology, on bureaucracy, we could be helpful there. Look, I think we disagree on the tax policy that he's kind of put out there already. I mean, New York is one of the highest tax places in the country. And if you look at trends on job data here, I think you would see that we're headed in the wrong direction as it relates to New York City, specifically on the job front.
So how much of a relationship is this going to be? A relationship where there is some give and take? Or do you think that this is going to be a contentious relationship?
Well, I don't think anybody's looking for a contentious relationship. I think one thing that the partnership is looking to do is get more assertive in the advocacy space. Last year, they put $10 million into a C4 to be more assertive with regards to policy. I think the starting point shouldn't be from the business community, just don't hurt us too bad. I mean, that's not a reasonable place to start. So, you know, we're part of the conversation. Most of those CEOs get vilified unfairly as it relates to tax policy. They're really talking about the 500,000 employees that work directly for them and how to create an environment that's better for them. So I think that they just want to be more part of the conversation, and that's going to be dictated by how the mayor kind of approaches them.
But more active versus passive.
More active for sure. I think that the tone is going to be more active. I think my background is being more active. And I think it's important for us to be assertive. I mean, if you look at kind of New York City, it's a very fragile environment right now. And I think it's important for us to be engaged.
So let me ask you this.
Yeah.
The mayor, I imagine, if you were sitting here right now and say, look, we have a budget problem in the city in particular. And as a result of the budget problem that we have, we can do one of two things. We can either raise taxes so that to pay for the things that we want, or we can cut services so that we can try to balance the budget. What do you say to that?
Yeah, so I was mayor of Jersey City for 12 years. I have a perspective on this. Multi-billion-dollar budget, it's the same sort of dynamic. I think the starting point needs to be looking at those zombie programs, looking at things that aren't working on where you can cut.
Okay, so what are those things? Because I imagine you're going to be hearing about raising taxes on either the wealthy or corporations. Like that's where this is going.
Let's say two things on that, right? So if you think about the talking point of the city and the comptroller last week, saying that you have a $2 billion budget gap and a $10 billion next year budget gap, and at the same time, you look at Governor Hochul, who's been very pragmatic, very responsible in a tough environment, saying that they're going to be able to achieve a lot of the things they want to achieve without raising taxes. The question that I would have as a starting point is normally a city and state trend in the same direction. It's very rare that you'll say one saying things are going great or in a better direction and one saying the sky is falling. And so the starting point is you should probably bring some of those CEOs into the conversation. They have billions and billions and billions of dollars in budgets themselves. They could be helpful.
So when you look at the budget right now and you look at these quote-unquote zombie programs, can you identify money that you think should be cut so that you're not getting the tax raise on the other side?
The short answer is the budget hasn't been introduced yet by the mayor. So I think it would be kind of a little bit premature for me to say what his priorities are and what his priorities aren't, right? I think that's fair.
But I think we can assume that he is going to intend to raise taxes. He has said that.
Well,
And he believes that there are things that he wants to do in this city. And he believes, I'm projecting onto him. One of the reasons I think he was so vocal about trying to make sure that the streets were clean was during this snowstorm was he wanted to be able to say, what you're paying for as a taxpayer is clean streets. We're going to execute. Because part of the problem is if you're not executing on what you're doing, nobody wants to pay for it.
I think people understand that what they're paying for. The question is, what are you getting for that value?
Right.
And when you look at the budget and the amount that it's increased over the last 5 and 10 years, there's questions about that. And the starting point is that the business community needs to be part of that conversation. You said that earlier, and I think that that is a fair place to be. Whether he includes leadership, I can't speak on that for that.
How important in your mind is the corporate tax issue versus the wealth tax issue or the millionaire tax issue, meaning on the individual?
The income tax.
Income tax issue.
Well, look, I think both of those are problematic. I think that the starting point for us on both of those is that we are not willing to go down that road. I think that New York City, and New York State is already one of the highest taxed environments in the country, and you could see in California, there is a tripwire at some point. There is a place where people say, look, I have options elsewhere. And maybe you're not going to see Bank of New York leave New York tomorrow, because it's not, but people will make decisions to relocate jobs elsewhere. So over time, it's death by 1,000 paper cuts, and that does impact budgets.
How much do you think it's on the individual level, though? So I agree with you. Companies, it's hard for JP Morgan, which just built a beautiful big building on Park Avenue, to move so quickly. That's not going to happen.
Look, but
that is, I imagine, also what the mayor is banking on.
Well, he would probably bank on that. What I think is lost sometimes in the activist community is, let's say you have 3,000 people that are super wealthy here, right? You don't need 1,000 of them to leave. You need only a handful to have a massive impact on budget. And, you know, everybody has their own kind of place where they're ultimately going to decide to leave. But if you have 5, 10, 15, that is a problem because it takes a lot of Stephen Phillips to make up for one of those people.
Right. Given that you actually have spent time with budgets, do you think that there's a lot of money lying on the table that could ultimately be cut without hurting the services of the city?
I think there generally are efficiencies that can happen when new administrations come in. I think over time, people get comfortable in zombie programs. I think looking at those, I think you need to have fair conversations and be able to mediate between unions and labor and service and obviously the private sector. I think that if the starting point is that you're on picket lines and you're protesting and you're still in that activist space, it's going to be very, very hard to kind of move the private sector in a place that's constructive. I think you got to find that balance. And, you know, it's been 3 weeks, so it's hard to kind of say he's good, he's bad, he's going to be great, he's going to be very poor. We'll see. But, you know, we try to be supportive.
One last question just on the affordability issue, because that is a huge touch point for the whole country, but in particular in New York, where I think we can all agree it is not that affordable for just about anybody these days. And so part of the argument that he's made repeatedly is he wants higher incomes for people. He wants people to be able to afford stuff. And so, you know, if a union is doing the work on the subways, I imagine his answer is not, let me try to cut back on the union. His answer is, I need more money from the wealthy and the inequality that's in the city. That's his argument.
Yeah, I would go back to what I said at the beginning, that we are in uncharted territory on a socialist matter. And again, every socialist that has been elected or DSA member has been on the legislative side. So there's very little accountability. You could throw bombs. We will see how that kind of moves over the next couple months. It's too early to say, and I'm not going to criticize him after that.
Okay, Stephen, it's great to see you this morning. Appreciate it.
You
Thank
sound
you.
like you're prepared to go
Well,
up there.
Dave, I mean, I was mayor for a long time. I kind of have some familiarity with this. I hope so.
Okay. Boeing just out with quarterly results. Obviously a pretty busy morning for our Phil LeBeau, who is handling all of these transportation numbers. Phil, let's toss one more on your plate. What do you have with Boeing?
Well, with Boeing, there are a lot of moving pieces in the fourth quarter. $9.92 is how much the company made earnings per share in the fourth quarter. We're not giving you a comparison because that $9.92 includes almost $12 of earnings per share gain from the sale of the Jefferson Digital Services unit. Strip that out, and it was a loss for the fourth quarter. How that compares with the loss estimate from analysts, we're still trying to determine that at this point. For the fourth quarter revenue, it was better than expected at almost $24 billion. Here are the metrics within the fourth quarter. Operating margin, 35.6%. Free cash flow of $375 million, better than $207 million, which was the estimate. Commercial airplanes, no surprise here, as they have been ramping up deliveries. You're going to start to see revenue increase. Better than expected, coming in at $11.38 billion. Defense revenue better than expected, coming in at $7.42 billion. Remember, Boeing is still in a situation where they are not giving formal guidance for the first quarter or for 2026. I wouldn't be surprised, though, during the conference call, if you hear about free cash flow increasing in 26 and 27 as deliveries increase. We'll be talking with CEO Kelly Wartburg about that, about where the company stands with a couple other important things that are on the plate for 2026, including the certification of 2 derivatives of the 737 MAX, crucial to its plan to increase deliveries in 26 and then obviously 27 and 28. That's coming up a little bit later on this morning on Squawk on the Street. Guys, we'll send it back to you.
Well, thank you. We have decided that we're going to make you our honorary co-anchor this morning. We appreciate all the heavy lifting.
Great, I take Joe's spot. I'm
Exactly. We will get back to you in just a little bit with more on all of this, but that is our Phil LeBeau, who obviously is doing some pretty heavy lifting for us this morning. We've also got some breaking news from Meta this morning. The tech giant is announcing a multi-year agreement with Corning to supply fiber optic cables for its data centers. That partnership is valued up to $6 billion, and it will be used to support U.S. manufacturing with a 15 to 20% increase in jobs at Corning's North Carolina facilities. Take a look at shares of Meta this morning. They are up by about quarter percentage point. Shares of Corning, bigger deal for them. They are up by about 3.5% on this right now. You can read much more on the story on CNBC.com. And a programming note for you, Corning CEO Wendell Weeks will join us right here tomorrow. We'll talk to him about this and much more. Very interesting on this. My quick read on this is, anytime you look at a deal where they're kind of propping each other up, you think circular deals, but this sounds really like Corning says, sure, we will give you a lot of the fiber optic cables that you need, but you're going to have to take on some of the risk in terms of making sure you're helping us pay for those things with a $6 billion investment. That's just my quick read on this, but we'll talk more to Wendell Weeks about this tomorrow. And right now, Corning...
Circularity, or not?
I don't know if it's a circularity as much as it's, yeah, we can build it. There's a huge amount of demand for it, but you're going to have to help us pay for producing the stuff to feed into that demand to make sure that it doesn't disappear overnight. You're going to be helping us do that. So again, those shares are moving on that by about 4.5%. Wendell Weeks will join us tomorrow. Squawk Box. We'll be right back. right, welcome back to Squawk Box, everybody. Let's take a look at the futures this morning. Pretty big divergence between the Dow and the S&P 500 and the NASDAQ. S&P is indicated up by about 21 points. The NASDAQ is indicated up by 182 points. The Dow is under some serious pressure, though. It's indicated off by about 218 points, and that is entirely because of United Health. Take a look at Dow component United Health. At this point, it is down almost 16%. That drop at this level would knock about 400 points off of the Dow at the open. United Health has a couple of different things going on. All of these big Medicare and Medicaid providers, Medicare Advantage plans, are under pressure this morning after the Centers for Medicare and Medicaid Services proposed late yesterday that payments for those Medicare Advantage plans would only rise by 0.09%. Expectations had been for all of these insurers that they'd be getting a rise of somewhere between 4 and 6%. Last year, the rise was 5%. So that was a big hit to the stock. It was already down by about 8% as a result of this. Then they came out with earnings this morning and lowered their revenue guidance for 2026. It looked a little weak, and that took things from bad to worse. So again, this is a huge hit on United Healthcare that is weighing out in shares of the Dow, or futures for the Dow this morning as well. And we will continue to keep an eye on that.
When we come back, American Airlines CEO Robert Isom is going to be joining us in an exclusive interview. You do not want to miss that. Squawk Box coming right back after this. Let's get back to Phil LeBeau, who's got another big exclusive interview this morning. Phil.
Let's bring in Robert Isom, CEO of American Airlines, joining us from the company's headquarters in Dallas, Texas. Robert, you made it into the office today, but it's hard for people to get in or out of Dallas right now, given the situation with the storm. We'll talk more about the fourth quarter results, where you fell short of estimates in terms of Q4 earnings. But I want to first ask about the storm. Where are the status? What's the status of things in terms of getting back up to the level of flights that you want?
Well, Phil, you're right. It's a skating rink out here at DFW, and I stayed on campus last night so I could be here. Apologize for canceling your flight last night, but one of the things we're trying to do is make sure that we get in front of disruptions as much as possible, tell customers with as much notice. I apologize to our customers. We're going to get back on track. I think over the next 2-3 days, we should be there as the sun comes out and DFW and things thaw out. But again, our teams are doing a wonderful job. Credit to them. We've got to get crews, aircraft in position, but we'll recover. We're best in the business at this in just a couple more days.
You had a $325 million hit on revenue in the fourth quarter due to the government shutdown, but you missed. Your earnings were well short of expectations for the fourth quarter. Robert, what do you say to investors who look at this and they say, what's going on with American relative to their competitors? They just seem to be able to be struggling in a way that some of their competitors are not.
Well, fourth quarter, it hit us hard. We were on track, really like what we saw in October in terms of bookings, on track to have a really solid turnaround in terms of our fourth quarter performance. Government shutdown hit us. It hit us harder than others. We're more domestically focused. Have a lot of our operation out on the East Coast, DC and government traffic. The good news on that is that as soon as the government shutdown got over, we've seen bookings return. First 3 weeks of this year, our best bookings on record, premium led the way. And while we're dealing with the storm right now, I really like what I see out in February and March. And as we come and take a look at this year, 2026, we're returning to solid profitability. It's not where we will be eventually, but I really like that our product is resonating with our customers, and they're certainly responding to what we're doing.
Hey, Robert, I've got a quick question for you. I mean, it's great that the bookings came back as soon as the government shutdown ended, but there is now talk that we could be facing another government shutdown as early as the end of this week because of the Democrats who are saying they're not going to fund ICE at this point. What would that mean if the government shut down again?
Well, Becky, it was really caused a lot of disruption to us and the entire system and to our country. We need our politicians to get together, fund the government, and I'm confident they'll do that. They don't want to see what happened in the fourth quarter. While airlines were the focus, we just simply can't have that happen again. And so my push is, let's get together, fund the government, and certainly let's make sure that our economy stays on track and that the airline industry can do what we need to do, which is connecting people. So that's my push right now.
Robert, it's Phil again. When you talked about premium products and the growth that you have seen there and how it helped you to a certain extent in the fourth quarter, you're going to be accelerating that in 2026. Do you need to move even faster with things like the lie flat seats on the A321 XLRs that are now entering the fleet?
Oh, Phil, we're moving fast. So the 321 XLRs are coming in. Really pleased with our Boeing 7879Ps with the flagship suites. We've got lounge work going on throughout the system, and that's a cornerstone of what we're doing going forward. And this is not work that's just happening now. It's work that we've invested in, and it's really coming to fruition now. We've got reconfigurations on our 777-300s, our 777-200s, our 319s and 320s. All of those will start coming out. I like where we're headed. Premium traffic is going to stay strong, and our product, again, is resonating. That product matched with our network, what we're doing from a loyalty perspective, and the rebound from a sales and distribution perspective. It's all headed in the right direction, and I like what I see for the year.
Quickly, Robert, what about corporate bookings? What are you seeing so far this year?
Corporate bookings are strong as well. Our managed corporate up 12% year over year in the fourth quarter, and we saw that strength continue in the early bookings. Again, this storm has taken, it's been a punch in the gut. I want to thank again our team members and all of our customers. We'll be through this and back on track.
Robert, thank you very much. It is a punch in the gut, this storm, but we'll get there to Dallas at some point. Robert Isom, CEO of American Airlines, joining us from the company's headquarters. Becky, I'll send it back to you.
Phil, thank you again. I feel like I said that a bunch of times today, but we mean it, and we appreciate everything you're doing. Phil LeBeau. All right, folks, when we come back, mega cap tech companies are starting to line up to report results, including Meta, which is scheduled for tomorrow after the bell. We'll check out the expectations for the social media giant right after this quick break. That stock right now sitting at $674. Squawk Box, we'll be right back. right, welcome back, everybody. Several mega cap tech names will be reporting results this week, including Meta, Microsoft, and Apple. Alphabet and Amazon are next week. Joining us right now with a preview is Brad Erickson. He's RBC Capital Markets Senior Analyst. He covers Meta, Amazon, and Alphabet. So, Brad, why don't we start with Meta, because it's the first to report on all of these.
Yeah.
A lot of moving pieces, but we've seen a lot of what they can do lately, and maybe a little more improvement. What do you think about where the company stands? What are you listening for?
Yeah.
With what they're going to signal.
Yeah, certainly a lot of moving pieces. I think you try and simplify it, right? You've got kind of two or three things. One, there's a core business that's directly enabled by AI that's growing really fast. I think our checks through the quarter indicate a lot of strength of the demand, even into January. So that's good. Number two is they've got this super intelligence unit, right? This group of very gifted engineers, we'll call them. It costs a lot of money, that are trying to come out with new models that hopefully will kind of shoot Meta AI up the App Store rankings and raise the visibility there. And then three, I think this is something I'm having more conversations with investors lately, is about compute, Meta compute, right? The idea that maybe they do get into the commercial hyperscaler business. And I think the question there in particular is that a pivot, right?
You didn't even mention advertising in any of the things that you're watching here.
That would be the core business, right? Directly enabled by AI. Yeah, sorry. Yeah.
Okay, so the core business going with that. It's kind of amazing to see what they have done in terms of really going after AI. And by the way, you wonder if they should change their name at this point. It's not really Meta anymore.
Yeah. I don't know that you're allowed 2 name changes inside of 5 years, but yeah, we'll see.
Have you been impressed by what they've done? Do you have questions about what they're doing?
Yeah, for sure. I think back 3 or 4 years ago, we were doing work. Remember when Apple changed the software and they lost all the signal and it was in disarray. We were fortunate to sort of hear from the channel that they had solved that by hooking up to advertisers' data, right? So they were getting a direct feedback loop. And that was really and the models are far more advanced now than they were 3-4 years ago. But I think the information they get from advertisers, the ability to prove value to them, that is what has sort of driven this. And honestly, that can continue for a long, long time.
Can we talk a little bit about a trial that's starting in LA today? This is the social media trial that raises questions about whether Meta and other social media companies are responsible for mental health issues among the youth, or at least the youth from the last decade or so. There's a lot on the line. There are thousands of cases like this kind of waiting in the wings. How big of a threat is this, and how seriously do you take it as an analyst?
It's a challenging situation is what I'll say, right? Because as somebody who has a daughter in high school, as an example, you certainly think about these things close to home. Meta has had, I would say, on the order of a few thousand lawsuits in play at all times over the last 5 or 10 years. So this is not sort of like a new thing, but certainly the issues that are raised and a lot of the use cases that are sort of materializing with AI look even scarier, right, in some cases. So from a philosophical perspective, it's very troubling. My job obviously is to cover the fundamentals of the company, and so you got to kind of compartmentalize for better or worse, but that's how I think about it.
Is it a risk to the company? I mean, I'm looking at it from that perspective. Is there something here that if they were to lose the case, and by the way, these questions come down not only to First Amendment rights on the internet, but also whether they're responsible through their algorithm with trying to get kids addicted and spending more time on it. I don't know how the court's going to rule on these ways, but there is a risk.
Yeah, for sure. Not to oversimplify it again, but if it has a sort of impact on engagement at some point, it's a problem, right? These guys sell ads on a volume basis. The more people use the platform, the more ads they get to sell. It's a pretty simple business model from that perspective, and so.
All right, so do you buy or sell this stock ahead of earnings?
So I'm outperform rated, just to be clear. I think, fundamentally we're quite positive. We think it could be a challenging quarter from a narrative perspective. CapEx is going up, and they have to show that they have another business besides core advertising that they can get into, and those two things would be a chatbot with Meta AI or AI compute.
Right. Hey, Brad, thank you. We appreciate your time, and it's been
Thanks for having me.
in studio.
Okay. Coming up on the other side of this, the Fed meeting kicking off today. That means we got the results of the brand new CNBC Fed survey. The one and only Steve Leisman, the professor, is going to be with us in just a moment to break it down for us. All happening when Squawk Box returns after this.
It is just before 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Andrew Ross Sorkin. Joe is off today. Been watching the futures, and there's been a little bit of a battle. The S&P 500 and the NASDAQ both trading higher in the pre-market, with the S&P futures up by about 20 points, the NASDAQ up by 172. It's a different story for the Dow, which is off by about 256 points. That is entirely, though, because of United Healthcare. That stock is under pressure, down by about 16%. That is about 400 points of negative activity for the Dow futures. So the Dow would also be in positive territory if it weren't for what's happening with United Health. We're going to talk more about that just a little bit later this morning, but obviously that's being pressured not only by its earnings this morning, but by the government's move to say that Medicare Advantage plans are not going to be receiving any increase this year from the government, or a very slight one, 0.09% versus 4.6% that had been anticipated. In the meantime, investors are in wait-and-see mode as big tech earnings and the Fed are in focus. We'll have more on that later this hour. Treasuries this morning, it looks like yields are mostly higher. The 10-year is yielding 4.21. The 2-year is a little lower of a yield. It's at 3.59. And then oil prices slightly higher the last we looked. WTI is up just slightly by about 7 cents to $60.70. Brent is up slightly as well. It's basically flat at $65.60 a barrel. Natural gas is where you see some big movements. Natural gas has been higher because of this cold snap here in the United States. It's been up sharply, but this morning it's pulling back by about 6%. U.S. oil producers lost up to 2 million barrels a day, or about 15% of national production over the weekend because of that winter storm.
Washington is still shut down from the storm. The Federal Reserve convening its day one now of a 2-day meeting. It's a biggie, and senior economics reporter Steve Leisman joins us now with the CNBC Fed survey. Mr. Professor.
Good morning, Andrew. Neither snow nor rain nor sleet nor gloom of night looks like it will keep the Fed from an expected decision not to cut rates at the January meeting. Take a look at what we call Fed expectations. Just 2 rate cuts expected this year. Have more to say about that in a second. And none are expected for 2027. The year-end funds rate, 3.13. There's your 50 basis points of cuts. But the likelihood of recession declining from 30% to 23%, it had been as high as 53 in the wake of the Liberation Day tariffs. And a decent contingent or minority out there, 31%, do think the Fed should be cutting at this meeting. An improved growth outlook could explain why only limited rate cuts are forecast this year and next. Take a look at the average forecast here. GDP 2.4%, that's well above potential of 2% or 1.8 and up 0.4 from September. CPI 2.7, coming closer to the Fed's target on a PCE basis. And unemployment rate unchanged at 4.5%, seen just rising by 1/10. Kathy Bastianczyk, chief U.S. economist with Nationwide, writing in with the survey, we anticipate continued solid and more consistent economic growth in 2026, underpinned by fiscal stimulus and easier monetary policy. The rate outlook shows fairly even distribution among hawks and doves in our panel here, with a plurality in the center at 17. You can see there, forecasting 50, and 9 see fewer cuts and 10 see more than 2. So pretty balanced distribution. And separately, while BlackRock's Rick Reeder leads in prediction markets, that's not the case in our survey. Kevin Morse, the former Fed governor, he leads at 50% with Reeder down low. Now, maybe some of these answers preceded this surge in the Kalshi markets, which is sort of inexplicable anyway. Hassett, the former frontrunner, down 11%, and Governor Waller at 11%. But remember that, because asked who the next Fed chair should be, Waller once again topping our list with 44%. Morse in second place, third is Hassett, and Reeder is in fourth place about who should be. It remains interesting, guys, that both the market and the survey show the Fed holding at around a 3% funds rate, even though President Trump will have his man at the helm of the Fed.
Steve, thank you. This is fascinating. And to think about sort of just the way Kalshi's reporting this and the sort of the should-be component is fascinating. We're going to talk all about this and continue this conversation in just a moment. Steve, thank you for this.
All right, the Fed's 2-day meeting kicking off today with the central bank widely expected to hold rates steady. Joining us for the latest is former Cleveland Fed President Loretta Mester. She's now a senior scholar at Princeton University's Griswold Center, an adjunct professor of finance at UPenn's Wharton School, and a CNBC contributor. And Loretta, thank you for being with us this morning. What's your take? You think the Fed stands pat here?
Yeah, for sure, the Fed's going to stand pat. There's no rationale for doing another cut. You know, they've cut 75 basis points. They took out the insurance on the softness in the labor market. Now's a good time to watch and wait. Inflation's still elevated. And, you know, there's no urgency to do one thing or another. So standing pat now just makes a lot of sense to me.
Do you think there's an argument for cuts later in the year, or is that entirely dependent on what happens with the economy and with inflation?
Oh, for sure it's going to matter what happens with the economy. We don't know that. You know, the baseline story is that they've been telling us that once we get past the pass-through of the tariffs, inflation is on this downward path. That could happen. We've seen the rent component of inflation moving back down, and that could be a pull of inflation down overall. But we have to see that happen before the Fed will feel comfortable, I think, in cutting again. Of course, if the labor market does weaken considerably, then they may react to that. And, you know, they've already shown they're very, patient with inflation, and they've weighted things towards the labor market in the most recent meetings. So it just depends on how the economy evolves. Good reason to think that the economy actually will hold up next year. There's the benefit of the past cuts in rates. You know, financial conditions are pretty accommodative right now. Look at the stock market. And then also we have fiscal policy, and I think that'll be a support for the economy going forward next year. So I think it just makes a lot of sense. Wait and see what happens. And if things strengthen a bit, they may wait for a while to cut again. If things look like it's weakening in the labor market, they may be deciding that it's better to cut. So we'll have to see.
When you've been with us recently, you've expressed more concern about inflation and worried that it's not going the way that that people have been hoping. Is that still your concern, that inflation comes back or is stubbornly persistent?
I mean, I am concerned. I need to see more evidence that it's actually on that downward path. I mean, it's been over 5 years and we haven't gotten it back down. And I think people keep pointing to the fact that long-run inflation expectations are stable. But that would be the last thing that would happen, right? If you're waiting for that to destabilize and in longer-term inflation expectations move up, you've waited too long. So again, I think they should be much more focused, keeping their focus on inflation. Yes, they have to ease if they think the labor market is really deteriorating. But right now, it's a low hiring, but also low firing labor market. And so I think they do have this time now to wait and see what's happening with the economy, because they do want to get inflation back down to 2%. They all have said that is their goal. I believe it's their goal. And I don't think they should look away from that given how long inflation has remained up.
Yeah, Peter Brooklar was here this morning and just pointed out that the dollar's weakness adds to that inflationary aspect because of what it costs for sourcing to put things into goods that are being made. That, you know, anything that's being manufactured, anything that's being imported, obviously would see higher prices as a result. We've also heard the opposite, though, or counter argument, that is that because AI is working so well and because productivity is so strong, that you could see what we saw back in the 90s, which was this extended period of really high productivity, an area where it was okay to keep rates low, as Greenspan chose to do, because there was this technological advantage taking place in the background. And so people have said the AI boom is kind of the new equivalent of that on steroids. How do you think about that?
Yeah, so I agree that if there is an AI boom, and I think that their productivity is rising and is higher than it was, the Fed shouldn't react to just seeing strong economic growth and thinking that that necessarily will be inflationary. So I agree with that. But I also think that inflation is still high and it remains high. And so again, you don't want to react necessarily to strong growth as being inflationary, but you also want to say, wow, we better have a bit restrictive policy, monetary policy, if we want to have inflation move back down to 2%. So I think I agree with what they're saying in terms of not overreacting to strong growth as being a signal of inflation if productivity is high. But you also need to keep policy restrictive. And moreover, if productivity and potential growth are higher, the neutral rate in the economy is a bit higher too. So you're less, right, restrictive than you perhaps think you are. And so again, you have to be very watchful and look at those inflation numbers. And I would need to be really convinced to conclude that inflation's on this downward path back to 2%. And I would be cautious about cutting too far, because it would jeopardize that. And that is what the Fed should be caring about, is price stability and getting back to price stability.
Loretta, thank you. We'll see you again soon.
Thanks.
Coming up, a reaction from the business leaders to the clash between ICE and protesters in Minneapolis. And later, social media's big tobacco moment. We're going to talk about the high-profile case that could shape the future of Meta, YouTube, TikTok, and so many others. Don't go anywhere. Squawk Box is coming right back. Welcome back, Squawk. After the second fatal shooting of a U.S. citizen in Minneapolis at the hands of an ICE agent, a collection of 60 CEOs of Minnesota-based companies co-signed a letter calling for calm in their state. Joining us right now is Bill George, Harvard Business School senior fellow and a former chairman of Medtronic, a company whose current chief signed on to that letter. Good morning to you. We've all been trying to make sense of what we've been seeing on screens, on television and social media, but also about the role that business leaders have played historically in terms of speaking out publicly on issues of political and social importance. Clearly, the world has shifted over the last several years about companies speaking out in these moments, and I'm curious what you think the right call in these polarized circumstances should be.
Well, I think clearly, Andrew, that CEOs did the right thing in putting out a statement. Some people thought it was too soft and wasn't specific enough. I think they had to tread a narrow tightrope between upsetting the White House and the behind-the-scenes negotiations going on and being advocates for significant change. But they got it done. And I think it is the tipping point in Minnesota. I think the president, being a businessman, has trouble ignoring all 60 CEOs of major companies in Minnesota. Not one failed to sign on. They did take a few extra days to get everyone to sign on. And I think Alex Preddy's murder on last Friday, I think that, or Saturday, that kind of turned the tide. And but I think it's had a very positive impact. And you see the president now taking action, not just solely because of this, but he's at least moving Homan in and moving Bodino out and some of the other people. And he said he had very positive calls with Governor Walz and Mayor Fry. And I've been in touch particularly with Walz and Ellison. So I'm encouraged.
What do you think? Can I ask you something as someone who knows this state well and knows this city well, what do you think is going on here? Because we do have a number of viewers who continue to point out this continues to be a problem in this particular place. It is a sanctuary city. There is a history of protesting and the like. But what's your sort of, if you take 30,000 feet back looking at all this?
Well, the protests have been remarkably peaceful, and there's been a huge community coming out in different areas where people are working together. So they've been quite in contrast, Andrew, to what happened after George Floyd's murder, when they typically 11, 12 o'clock at night, they turn violent. We've not had any of that. So I think students have been very respectful. Look at that one downtown with 40, 50,000 people when it was minus 21 degrees. So I find that encouraging. I think this particular group of CEOs is a little more hesitant than some of the ones in the past to really step into these things, and they'd rather work behind the scenes and work through their own contacts rather than coming out publicly. And
so what is the right approach? Here I was, we talked about it on television yesterday. I said, this is one of those moments that the CEOs have an opportunity. It's not an opportunity, it may be a moral obligation to say something if they think that there's a problem. Having said that, clearly there is a polarized country on issues that for some seem obvious, on others seem very different.
Yeah. Andrew, I say stick to the business aspect. This is very negative for every one of their businesses. First of all, your obligation is to provide a safe, secure place of employment for your employees, a sense of well-being, and that's been in many ways shattered, particularly those that have retail stores like Target. So that's a very serious thing. Clearly, Minnesota, these big global companies like Cargill and 3M, Medtronic, Ecolab, General Mills, all move people in and out from all over the globe, all over the country. They have to attract from East Coast, West Coast. It's cold there, but we've had a very high quality of living, and I think I'm very concerned that this will deter people from wanting to move to Minnesota. I think that's a big negative. And I think the third is the impact on both productivity and innovation is quite negative. And hopefully the president finally recognizes this. But look, they don't want to get right in the middle of politics or for fear of retribution. I understand that. And I know
what do you make on the other side of this? If you go online, even in the past 24 hours, there's been a lot of consternation in the tech community, interestingly, about Apple and Tim Cook, the CEO of that company, who was at the White House celebrating the documentary premiere of Melania on the same, on Saturday. And there are people out there saying they're not buying iPhones. Do you believe that? And do you think that's going to impact things?
Well, it certainly can. I don't think it's a big impact. No, there have been boycotts against companies. I don't think those hold very well. But, let's face it, there are companies, the tech community, which has a direct access to the president. Others, wealthy business people, have that access. The people that signed this statement, to my knowledge, they don't have real access to the president directly. They're not going to Mar-a-Lago and having dinner. So they're more one step removed from that. But they do, there is some fear of retribution, I'll be honest, in talking to people. But again, I think I'm concerned. I say stick to the business issues. These are big, it's very negative for the business environment, I can tell you that. And not just locally for Target stores and things like, it's negative for your ability to attract top talent. And Minnesota has to do that. It's cold in the winter, so the only way you can attract people is with a great place to live.
Bill, but there is an issue, which is if you talk to a lot of CEOs, some of who spoke out on other issues in the past, they say two things. They think, look, I was burned by doing some of that in the past. There's a sort of go woke, go broke concept. And then secondarily, or maybe even more in the forefront, is the issue that this administration, I think unlike other administrations, has used the bully pulpit of the administration to go after companies that they disagree with.
No doubt, and that's what people fear. They don't want to be, and I actually advise people, stay below the radar. No sense tweaking the bear and stay below the radar. But I think what happened, Andrew, let's go back to Minnesota, because in 2020 when George Floyd was murdered, there was a big swing to really focus on DEI, and it went too far. And I think that pendulum may have gone too far the other way. And I think now people are trying to figure out what's the right place. And again, I think the feeling is stick to your business and focus on issues, but this is hurting business. And so I think a lot of them don't want to be in the spotlight. Yes, the tech guys are way out in the spotlight. They're way out in front. But I don't think that the business leaders I know who signed this letter, and I know all of them, did not want to be out in front. They don't, but I think there was a certain collectivity. And frankly, the associations have not said, you haven't seen the business roundtable. Now, so do we have the business owner partnership. But the people, the guy that really got this done was a guy named Doug Loon, who's with the Chamber of Commerce. He and
that's my question to you. So obviously, you could say this is I don't know if you think this is a local issue or a national issue. So locally, that group spoke out, spoke about it, did it as collectively. What do you say to other CEOs around the country whose employees are saying to them, "What are you doing here?" Or customers?
Yeah, I think first of all, the associations have been very reticent. This is a big area for lobbying. So, but I think you better listen to your employees. A lot of people say, let's just listen to stay out of the way of the government. But I think you better listen to your employees, and not enough people have done that. That worries me. Target's been really hurt by that. Compare that with Costco that just said, this is who we are. We're going to say who we are. We're going to be that. And that's what I encourage. I do not respect people that change their values because of political pressures. Look, the government changes every 4 years. These companies want to be around for another 100 years. And they have to figure out how to navigate through that and not flip with the wind, because that's where you lose respect.
Phil, it's always good to talk to you. We appreciate you joining us this morning. Thank you.
Thank you for having me on.
Up next, a high-profile case involving the biggest social media companies in the world kicking off today in Los Angeles. So we're calling it social media's big tobacco moment. We have the details right after the break. Check out the futures this morning. Again, a mixed picture. Dow futures down by 263 points, thanks entirely to United Healthcare. S&P futures up by about 20 points. The NASDAQ futures up by 172. Squawk Box will be right back.
Welcome back, Squawk Box. Social media on trial in LA with a jury selection beginning and a high-profile lawsuit starting today. This case is against Meta, TikTok, and YouTube. Our own Julia Borston joins us now with what this trial means for the industry. Good morning.
Good morning, Andrew. Well, this is the first in a wave of trials on the addictive negative impact of social media on kids and teens. Now, these trials are drawing comparisons to the crackdown on big tobacco that came in the 1990s. Now, the plaintiffs in this first trial are a 19-year-old woman and her mother. They claim that social media companies knowingly designed addictive features, including autoplay and infinite scroll. The co-defendants are Meta, Google's YouTube, and TikTok. Snap was part of the suit, but is settled just last week. This trial, which is expected to last 6 to 8 weeks, could draw some big names to testify, including Meta CEO Mark Zuckerberg and Instagram chief Adam Mosseri. Both Google and Meta denying the claims. Meta shooting back saying, quote, "For more than a decade, we've listened to parents, researched the issues that matter most, and made concrete changes to help protect teens online." YouTube saying, "In collaboration with youth, mental health, and parenting experts, we built services and policies to provide young people with age-appropriate experiences and parents with robust controls." We have not heard back, no statement from TikTok. Now, this case is so important because after years of Section 230 shielding these companies from legal liability for the content shared on their platform, this and the following cases focus on the issue with the company's algorithms, which could totally change the way these platforms are held to account. Andrew?
Julia, how quickly do we think all this whole situation is going to play out? And I imagine no matter what the outcome is of this particular case, we would be living in a land of appeals if, in fact, a jury found them guilty.
Yeah, this is going to take a very long time, Andrew. There's this case. There's a case that's happening in New Mexico, filed by the New Mexico Attorney General. Jury selection for that case starts next Monday. There are other cases that are set to go to trial over the course of this next year. And I think that even though this case may only take 6 to 8 weeks, there could be appeals. This will be a very long process.
Okay. Julia Borston, thank you. Appreciate it.
All right, General Motors reporting an adjusted $2.51 a share for earnings. That beat expectations, but revenue was slightly below what the street was expecting. The company also announcing a 20% increase to its quarterly dividend and a new $6 billion share repurchase program. That stock right now up by about 4.25%. Here's CEO Mary Barra earlier on the show on vehicle affordability.
Last year, we sold over 700,000 vehicles in this country with a starting price of under $30,000. When you look at the Chevrolet Equinox, the Chevrolet Trax, the Buick Envista, and several other models. So I think we have affordable vehicles, we have premium vehicles, and we have true luxury vehicles and super trucks. We have a wide portfolio, so we can meet the customer where we are, and we truly have vehicles that don't break the household budget.
Again, shares of GM up this morning on that news by about 4.25%. Up next, what matters more to investors, the Fed or earnings? We will ask JJ Kinahan of CBOE Global Markets. And airlines still digging up from this weekend's monster winter storm. We've got an outlook for the sector straight ahead. Squawk Box will be right back. Health dragging down the Dow this morning after a combination of events. They had earnings that showed revenue a little lighter than expected. Guidance was light of expectations as well, but really it's the big U.S. government proposal to keep Medicare payments to insurers basically flat for this year. That is really crushing this whole industry. United Health down by about 15% this morning. John Ransom is an analyst at Raymond James, and John, separate how much of this is the earnings slight miss, or at least on the top line, and the guidance, and how much of this is just the changes that are coming from the government when it comes to what they can expect to receive from those Medicare Advantage plans next year.
Hey, good morning. Thanks for having me. I think it's 90% plus the rate notice last night. Investors were expecting about a 5% update, and the update was 0. We did a buy-side survey. 56% of the people expected 4 to 6%. So plus 5 versus 0, that's a huge miss. And the company, United, did say on the call this morning they're going to be working with CMS to try to get an improvement on the final rate update. And there's a lot to pick at on the rate. I won't get into all the gory detail, but 2 things I'd point out. One is the cost trend appeared to be way lower than expected. And number 2, they're either going to phase in or put in place this change that doesn't surprise us. We've been calling for this for years, is that just because you put something in a chart, if you don't treat for it, you don't get paid for it. So those were the 2 things. There's some other detail in there, but those were 2 things. And I'd also say, Dr. Oz has been pretty dovish, and a lot of people who've had these sidebar conversations were optimistic that the Trump administration will be dovish on MA. And this follows a 5% rate update effective this year. So yeah, you're seeing this in the stocks, but it clearly was a big surprise to everybody.
But you said yourself that the cost increase that we've seen with inflation was really starting to flatten out. Is this the right move by the government to say, forget it, we're not paying more if the cost increases are starting to slow down?
I think what I was saying is I don't think you should, this is just John's opinion, but the fact that the man on the street, if he said, John's depressed, we're coding him for being depressed, we're going to put that in his chart, but we're not going to pay any money to treat John for depression. Should you get paid for just putting something into a chart and not treat for it? I think that's the technical change that was in this rule that people didn't expect.
Okay, so that's trying to root out fraud. Just to make sure people understand it, CMS is proposing to eliminate insurers' use of diagnostic information from unlinked chart reviews that then they can come up with their own diagnoses and charge the government more money for. The government is saying you can't do that anymore.
Exactly correct. You nailed it.
Okay, so is that the bigger part of this problem, or is the rate increase the bigger part of the problem, or is it a combination, just both of them?
So if you said we expected 5 and we're getting 0, 1.5% of that is this change in unlinked chart reviews. The rest of it is a number of things, but they do this thing called fee-for-service normalization, where they compare the rate of growth in Medicare fee-for-service versus MA, and that change was the other big piece of it. And United Health said on the call, we're going to work with CMS to make sure they understand what's going on in cost trend. I think if you looked at the numbers for the insurers, it would be hard to see that the cost trend's really slowing down in their medical loss ratios. I mean, United Health's MLR was up 300 basis points this year, which is a ton. So that's the piece, that's the technical piece where the actuaries are saying costs are X and the insurance companies are saying cost is Y. And we do expect there will be some modest improvement in the final rule, but the lobbying, they've got to come out with the final rule in the first week of April, but the lobbying is going to commence in earnest, starting right now.
So this is just the first step in a negotiation that will continue. Where do you think they wind up? Because I'm just looking at numbers. The proposed increase of 0. is worth about $700 million to the health insurers writ large. The rate that they got this past year, 5.06%, was $25 billion. That's a really big difference.
Mm-hmm.
Where do you think we wind up?
So 13-year average, the average improvement is only about 0.5%. Last year it was a bigger number for a technical reason, but there'll be some improvement. We expect, the team expects something like a 50 to 100 basis point improvement. So the other piece is, do you phase in this 1.5% change on chart reviews, or do it all in 1 year? So those will be the 2 things I think that will form the nut of the negotiation.
Well, it seems ridiculous that they're allowed to charge for things, for diagnoses that they're not treating.
I've had a 30-year career, hopefully not defending the indefensible. So it is something our two kind of man on the street points on MA, number one, don't get paid for stuff you don't treat for. Even, I think the whole industry agrees with that. And secondly, there's no credible definitive study to say MA costs X per member versus regular Medicare. You can have one study showing it's 20% more expensive. There's another study showing it's 10% cheaper. So there's no agreement. When we spend $500 billion plus on this program, and we don't even agree if it's a good deal or not for the taxpayers. Because, I mean, and United just linked to a study from Milliman saying that it's cheaper. And then there's a group called MedPAC that's saying it's more expensive. So that's another thing. It's like, Pentagon's fail every audit. It's another thing. We should have some agreement on, is this program a good deal for the taxpayers or not, for the average person on the street.
Hey, John, we got to run, but very quickly, UNH down 15%, Humana was down 17% the last I looked, CVS down by about 13%. Do you buy any of these companies on this decline or not?
Our call has been, and I think this will continue, is that the multiple for United Healthcare is based on legacy. It's trading, even with this correction, at about 14.5 times 2028 earnings. So rebase the earnings in our note this morning, put the new price in as 14.5 times. You can buy CVS for about 8.5, 9 times rebase 2028. So we think that CVS is the way to go here because we're just throwing all the companies out. We think the multiple spread between United and the rest of the group will continue to diminish.
Okay. John, thank you, for joining us.
Thank you.
We appreciate it.
Bye.
Very quickly, take a look at the futures. You will see that, again, Dow is down by close to 250 points. NASDAQ's up by 164. The S&P up by 20. Joining us right now is J.J. Kinahan. He is Senior Vice President of Retail Expansion and Alternative Investments at CBOE Global Markets. J.J., what do you think about the markets you're seeing this morning?
Well, you talked earlier about Fed versus earnings, and right now, since Fed seems to be a, almost done deal, looking at the probabilities, we're at a 98% probability they won't do anything this week, and we have so many earnings coming out. And at the end of the day, there's the old adage, earnings drive markets, and that really is true in this case. And I think we have an incredible lineup over the next few days to see how we will drive the markets when you have Microsoft, Apple, Meta, all reporting in the next couple of days. And what's interesting, though, is if I look at what's happened on the expected moves for those stocks, last week Netflix had over an 8.5% expected move. It only moved 2.2%. And so what we're seeing because of that is these other, Mag 7 stocks have come back in a little bit on their expected moves overall. So maybe not quite the volatility event that we thought it would be 2 weeks ago.
Where are people positioning themselves ahead of this?
Well, it's interesting on a couple of notes I just talked about. So in terms of the Fed meeting, normally you'll see some people coming in the SPX, which trades here, and buying some puts ahead of the meeting. We're not necessarily seeing the hedging from some of the big institutions ahead of the Fed that we would normally see. Again, reinforcing the non-expected event today. It's more about the press conference that happens afterwards. In terms of the individual equities, what we have seen this week is particularly Microsoft and Apple, some out-of-the-money call buying activity, a lot of it generated by retail. So expectations, again, that we could move higher. Apple's pricing in about a 5.2% move heading into their earnings. We see Microsoft at about 6.5% heading into their earnings. And then you have Tesla with 7.75% expected move after their earnings. So we do have some definite possibilities that we could have some decent moves as as these come out. And again, retail has continued to drive the markets, and so maybe 5 years ago we'd say you don't really listen to retail. I think now people are like, what's retail doing, because that's pretty interesting overall.
How much of that is a reflection of the volatility we saw pick up just last week, in the last week or so, and how much of that is?
Yeah, I think. Sorry.
Go ahead.
No, I think some of it, as I said, if you look where the VIX was last week and the overall market volatility is about at 18. Right now we're just under 17. So we've seen volatility come off a little bit. But I do think that it is definitely a function of the fact that, whenever we've seen stocks sell off over the last 5-6 years, we've seen retail come in and buy them. And now we have a catalyst for people to want to buy them, of course, in earnings. And, a lot of the talk, particularly again, Microsoft Meta, will be about what's going on in AI. I think particularly with Meta, people are going to want to see what they're doing in CapEx spending on AI as well as, of course, their ad revenue. But that, to me, is really interesting overall. And I think whenever we have seen the sell-offs, again, people have gone to what they think are the quality stocks. It usually starts with Microsoft and Apple from a retail point of view when they come in to buy these stocks. So those stocks, again, have seen the call buying out of the money as people get a little bit more confidence in the money. And to your point, this started last week during the sell-off.
Okay. JJ, thank you very much. JJ Kinahan.
Great to see you, Becky.
You too.
Okay. Coming up next, snow, ice, and extreme cold grounding flights across the country, making travel conditions extremely difficult. We're going to speak to an analyst on the impact on airlines. We're going to do that next. Check out shares of American Airlines, by the way, this morning. After reporting results, we're looking at that stock moving a bit higher, a little over 3% right now. We're going to have comments from Bob Bison on the storm's impact. That's right after the break. Don't go anywhere.
One of the things we're trying to do is make sure that we get in front of disruptions as much as possible, tell customers with as much notice. I apologize to our customers. we're going to get back on track, I think, over the next 2-3 days.
That was American Airlines CEO Robert Isom earlier in the program on the winter storm's impact on flights. Airlines continue to face disruptions after this weekend's winter storm. Joining us right now is Brandon Ogolensky. He is Barclays Airlines analyst. Good morning to you.
Good morning, Andrew.
What do you think?
Well, it's been a tough weekend, and I hope not a lot of folks are trying to travel because it's been a disaster across the board. I think on average, most major airlines canceled at least 20% of their flights over the last 3 days. For American and JetBlue, it's closer to 40 or 50%, and JetBlue's in Boston and New York pretty heavily. So it's been difficult, but I think we're going to see.
How much do airline investors sort of see through or sort of discount the weather, if you will? And are they supposed to or not?
With most institutional investors being here in Manhattan, we see snow, we say, uh-oh, like it's going to be bad for airlines, but we forget it snows every January.
Right.
It's not snowing as much out west, so it's push and take. Most airlines will factor in a cancellation rate into their guidance. I suspect this storm is probably a little bit above where that normal cancel rate is, but nonetheless, I don't think we should be putting like a long-term multiple on a one-time storm disruption. And more importantly, it's about the recovery, because I think most airlines have really focused the last few years on adding buffers and a little bit of block time to their schedules, having a little bit more crew available. That way, once there are disruptions, they can recover pretty quickly. I think that's what Robert was saying.
Oh, the airlines on the screen. We got American Airlines, United, Delta, Southwest. Who do you like? Who don't you like right now?
Well, I think and if we can move past the storm, because I think there's some really big changes happening to the industry this year that are going to make these stocks maybe some of the best performing in the market. They're just so cheap right now, but cheap for a reason. We have what I think is continued preference by consumers for premium products and international travel. And I have to say Delta and United are really leading there. I know American's really trying to catch up. But more importantly, as I'm sure you guys know, Spirit's in its second bankruptcy in as many years. And we suspect it might not be moving towards a liquidation, but a much smaller footprint. So the problem for the industry has been there's too much capacity point to point from big city to big city. We can't get price. Margins are still below pre-pandemic levels. But with Spirit exiting or potentially getting a lot smaller, this is a much better setup than we were looking at a couple of years ago.
So that's the industry writ large.
Yep.
Let's sort of go down the line here though in terms of who actually is the beneficiary of this.
Well, all carriers should benefit from better domestic pricing, but again, I think it's really the two leaders right now, Delta and United, that are in the driver's seat. They've really made investments for the long term, focused on premium, differentiated product strategy. That's driving better revenue compared to what just used to be like a seat in the schedule, which is where the low-cost carriers were stuck.
Well, what does it mean for the consumer?
Well, it means we need to pay higher prices, because if you look at airfares, they're actually not really that much higher than they were in 2019, believe it or not. And CPI is up, 15% from there. So we could argue consumers are actually getting a benefit. And that's why we're seeing most airlines not being profitable right now.
Well, we have seen, it feels like, some airlines that know how to better react to raise prices, especially for business trips. I'm crazy, but it feels like United has done a pretty good job from a shareholder's perspective of raising those prices recently.
Absolutely, Becky. And actually, United might be the closest to their pre-pandemic margin of all the airlines. But I mean, Delta set out on this strategy 15 years ago. We're going to differentiate. You can stay at many different hotels and upgrade your rooms, but airlines just used to be about seat and a schedule. So I think now they've tapped into this consumer psyche that, all of us kind of want to sit towards the front, and there's a willingness to pay for that. And incrementally here, Southwest is changing their strategy too, because they used to be a seat and a body and a schedule.
Yeah, no fee for baggage, any of the rest of it.
That's right. And I think what investors are going to be surprised by, they're going to guide to pretty significant revenue upside here in the first quarter. Because just this week, assigned seats and premium seat options go live for that airline.
So what are your favorite stocks in this area?
Well, like I said, I think Delta's at the top, then United, and incrementally Southwest, which, again, I think the street isn't...
Like he said.
...of revenue improvement they're going to see.
And Spirit, it's just...
Unfortunately, and I'm not trying to make light of the situation, because there's thousands of employees here who are going to be impacted by this, and obviously a lot of a customer base there. And, but I think ultimately they need to get smarter. They're burning through cash every month. And it's really just amazing when you think about the Biden administration saying, hey, this is going to be anti-competitive for consumers when they bought the JetBlue Spirit merger a couple years ago.
What's your bet, though? Okay, we've got 3 more years of this administration, which is arguably more open to transactions and deals. Is there a deal to be had for some of these airlines that I think you put more at the bottom of your list?
Well, I mean, I think economic reality is settling in here. JetBlue is still burning through cash as well. They're going to need to raise incremental capital this year. And I think a lot of folks in the industry would say, I mean, we've already seen a merger between Allegiant and Sun Country, smaller airline. But nonetheless, I think there's a lot of expectations that some of the low-cost carriers could see consolidation under the Trump administration.
Well, you didn't want to hear about Biden getting bashed. Little piece of shit.
I think that's a lot of the market speculation.
But who's the partner? Who partners with who? If you think the Spirit JetBlue deal can't happen, or you think it can come back?
Well, no, I think, you know, the logical deal for Spirit would be Frontier, but Frontier's effectively said that's not going to happen. But again, you know, Alaska, there's JetBlue out there, you know, what really matters in this industry is scale. Because if you look at the top 4 airlines, American, Delta, United, Southwest, they all roughly control about 20% of market share. And then you have JetBlue and Alaska that are considerably smaller. And what every airline CEO believes is that the credit cards have become so important, and you need to have scale. So the more people in the ecosystem, the bigger your rewards program, the better your credit card deal is going to be.
Okay, Brandon, it's great to see you this morning. Appreciate you
Thank you,
staying
Andrew.
warm
Thank you back
out there.
Thank you. Great to see you. All right, a roundup of some of the stories making headlines on the show this morning. We'll have that in just a moment. Squawk Box. We'll be right back.
Man, I'm hot. It's 68 degrees in here. I'm burning up. Okay, well, take off his shirt for one, put on something more comfortable. Your body burns 20% more energy in the cold. I asked a girl one time, I said, I invited her over for a house concert. And she was playing music, and I went up to her and I said, you know, if you drink ice water, you burn more calories. And she looked at me and she said, are you telling me that I'm fat? I said, no, God, you're gorgeous, baby. She took offensive to it. I said, damn, can't you ever say anything right? Hey, honey, how about drinking ice water? You might burn some of that fat off. How dare you? Are you insinuating that I'm fat? No. Okay, I got that off. Snow boots. Ugh.
All right, welcome back, everybody. Shares of U.S. memory chip maker Micron are higher this morning, up by over 4%. This comes after we hear about plans for a new facility that the company is going to be opening in Singapore. Let's take a look at this. It does say that that new facility will help meet surging demand for memory chips that will be fueled by the rise of AI and data-centric applications. And Andrew, this has been one of those new choke points that we've been talking about. That, you know, with AI, first it was energy. It seems like we've worked some better solutions for that, not that it's resolved. But this may be one of the huge choke points, and that surge in demand is what they're now trying to.
It's a big issue.
Yeah, to find a way to make sure they meet demand.
Meantime, the U.S. Army now signing a $5.6 billion 10-year contract with Salesforce. It says the goal is to modernize outdated practices. You can take a look at the stock right there, up about 3%. Salesforce
CRM.
Technology will allow the Pentagon
Gonna be a good day.
to shorten procurement timelines from months to days and allow defense officials to make quicker, more informed decisions. Meantime, we've got some other news from Anthropic now.
We do, and this is a pretty big story. We're getting to it now, but it's something that people are going to be talking about for some time to come. Terry Amode, Anthropic CEO, warning of the potential consequences of superhuman artificial intelligence. He is urging AI leaders and governments to take those threats more seriously. Specifically, he says that within a year or two, we will have a country of geniuses in a data center, meaning genius-level machines will be able to build things autonomously. He says that that will lead to massive job losses. He also warns of power dislocations, including more power in the hands of AI companies, more power for authoritarians, and rising risk of AI-backed terror attacks. This is something he put out, and it's called The Adolescence of Technology, before he had written about all the great things that can come with adult
19,000 words.
Right, with adult AI, but it's got to go through the adolescent stage first, and he says there are a lot of really bad things that could happen in time, things that they've even seen in their own lives.
Do we believe that any part of the essay was written by Claude?
Oh, that's a good question. That's a good question. It would be hard for him not to rely on the tools some, but this feels like this is something that he has written. But I don't know how well Claude knows Derek. Yeah, very good question.
Meantime, investor Michael Burry is saying he's been buying shares of GameStop, the investor famously betting against the U.S. housing market back in the financial crisis. He posted on Substack that he owns GME and he's been buying recently, and he said he's getting in on a young Ryan Cohen. That's GameStop's CEO, deploying the company's capital and cash flows. Perhaps for the next 50 years, he says he plans to hold that stock long term. Burry recently closed his hedge fund and wrote that Cohen is, quote, making lemonade out of lemons, milking a, quote, crappy business, he calls it, while taking advantage of the beam stock phenomenon to raise cash and wait for an opportunity to make a big buy of a real growing cash cow business.
And happening on Squawk Box this morning, United Health shares falling by about 15% in the pre-market because Medicare is planning on keeping payment rates for 2027 below what Wall Street analysts predicted. Humana shares are down 15% as well. CVS shares down by about 13%. Elevance is down by 6.5%, and we will continue to watch all of these. GM beating Wall Street estimates. The stock is up by 3% this morning and up 45% in a year. CEO Mary Barra said in the last hour of Squawk Box that she is hoping countries where GM operates, including South Korea, will soon have official trade deals with the U.S. government. And Meta announcing a multi-year deal with Corning for fiber optic cables for data centers. The deal is valued at up to $6 billion, and Corning is, as a result, planning to add 15 to 20% more jobs at its North Carolina facilities to meet the demand that this will create. You've been watching shares of Corning. They're up by 7% this morning. And Corning CEO Wendell Weeks will be with us live tomorrow morning, right here on Squawk Box, to talk about this and much more. Final check on the markets. You do see the Dow under pressure, down 316 points. That's because of UNH. NASDAQ and the S&P are indicated higher.
Okay, that does it for
Dow
us.
Jones down 330.
Squawk on the Street begins right now.
Good job, Becky.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber, and Course 9 of the New York Stock Exchange. Earnings season kicks into a new gear today with Boeing, UPS, GM, American. UNH is knocking the wind out of the Dow on these proposed Medicare rates. And the Fed meeting begins, 10-year near 4.25. Our roadmap begins with this flood of earnings this morning. We'll get to GM posting a profit beat and a nice div hike. UPS and some defense names also making moves.
Health insurance stocks are tumbling in the pre-market. This after the Trump administration proposed keeping Medicare Advantage rates pretty much flat next year. And that is a double whammy for United Health. Also issuing some guidance that investors are not particularly taken with. Boeing's quarterly sales jump almost 60%. CEO Kelly Ortberg, says there is a lot to be optimistic about. He's going to explain why. We'll have a CNBC exclusive with Mr. Ortberg coming up.
Let's begin with these earnings. GM's up in the pre-market. The automaker posts a bottom line beat, issues some full-year profit guidance above 25 levels. Company also announcing a 20% div hike, authorizing a $6 billion buyback. This is what Mary Barr had to say about car sales and affordability with Phil LeBeau earlier on Squawk.
Last year, we sold over 700,000 vehicles in this country with a starting price of under $30,000. When you look at the Chevrolet Equinox, the Chevrolet Trax, the Buick Envista, and several other models. So I think we have affordable vehicles, we have premium vehicles, we have true luxury vehicles and super trucks. We have a wide portfolio, so we can meet the customer where we are, and we truly have vehicles that don't break the household budget.
Very much in focus today between the EU, India trade deal and the threats about South Korean tariffs.
South Korea, I felt, has always been the free rider here. We defend them. They're bulwark
coming from a multi-millionaire.
They've had a free run of the joint. Mary Barr's been able to negotiate that even without it. I will tell you that I was very worried about tariffs. They came in lower in tariffs.
And you all fucked up.
Per car. They are a beneficiary, David.
See, this tariff thing, man, has just been a total illusion. I know some companies that would charge people, and the tariffs weren't even in place yet, an extra tariff charge. It's just a scam to make more money. And I've been saying it for ever since they've been talking about it, that it's a bunch of bullshit. The only way we get inflation is when the government overspends. The only way we get inflation when the government overspends. The only way. That or we have short of goods, but
it is run so far that it's in its own trading world right now, the metals. So they're worth watching, and I expect more volatility out of that sector.
Yeah, I really do want to see a silver chart too, just because it's a particular interest to someone like Stephen Orr. We were talking yesterday, there's silver. Okay, so now we're down 1.7%, well over the 100 ounces that we had talked about, right? So at 111. But yesterday morning we were saying silver was up 8%, and people have come on and still thought there was more room to run for silver and gold. And I mentioned Stephen Orr on Friday and Monday, and he, was probably elated that I did so because we saw it pull back, and it continues to pull back here. At this point now, copper, gold, nat gas, which had an incredible week last week, right? It was up 60% or something, also pulling back. let's get to the Fed as we talk about tomorrow's meeting. So a lot of folks are expecting 2 cuts this year and nothing tomorrow. Your thoughts about tomorrow's meeting?
Exactly right. Today actually is day 1 of the Fed meeting. As you know, no news, nothing happens on day 1. But tomorrow, even though there's about a 97% chance that the Fed will do nothing, there is still Jerome Powell's press conference, which might be his last. It's hard to say. And after that, he's going to do Q&A. And the wide range of topics that he could talk about is what puts a little bit of interest in that. Even though normally, historically, when they don't move on interest rates, there wouldn't be a press conference. But the new, more transparent Fed, they have a press conference at every meeting. So Jerome Powell will give his overall thoughts. And Nicole, do we get a new Fed chair announcement? President Trump said it was going to be January. We're bumping up against the end of January here, so that's worth watching as well. But I expect some news, some headlines to be made, not from the announcement, but definitely from Jerome Powell's press conference.
All right, well, he also said, like, Christmas time, too. And we didn't get that, so I don't know. I feel a little fake out coming. We'll see. All right, Boeing, did you give me Boeing?
Boeing! Hey, baby!
We talked about Boeing. They put up good numbers, $24 billion in revenue, earnings per share of $9.92. Now, that's a little distorted. They had a $12 per share ad because of the sale of one of their companies, but their free cash flow went up to $375 million. Their backlog,
that's not enough.
600.
That's not enough. 300 from a fucking Boeing? Free cash flow of only 300 some billion? That's not good, you idiot. They need at least 15 billion in cash flow. Case closed. I have a 241.37 support on Boeing, and we hit 242. I was going to see if I could take it there. I'm going to still wait for that support. That's what I'm going to do. Oh, God. Let's see what they look like today. What'd you do to your hair? God. Do something with it. Did you just have sex before you got up on the chair? Jeez. How embarrassing. Ginny's getting a 7 today. I'm sick. God. Somebody come to work looking like that, I'd fire him. Okay. UNH, a big knife with a double bottom appearing. Intel's got 6 million in volume, almost 7 million, and it's had a good pullback. 3 days. Down 12 bucks in 3 days. So that's 10, 15%, 20%. And Google, now somebody bought Google. Oh yeah, Pelosi. Pelosi bought a bunch of Google. Google. Look at backs. CVS. Shares of health insurance companies are trading lower. Reports that the Trump administration proposed a 9% average payment increase for Medicare Advantage plans. How much you want to believe in that? CVS plunge after Medicare rates blow. So United Health Group reported worse than expected fourth quarter sales. Obamacare was a fuck up. I was paying up to $1,100 a month for that shit. And it was, before that bill was passed, it was only $138.
Opening bell. We'll be right back.
And I don't even use healthcare much. I've seen too many people that, you hear a prescription. Well, side effects are high blood pressure and the runs, and you might get some cramps in your belly, and who knows, you might keep a heart on for at least 10 days. /ES is hovering above the VWAP. So if we go below the VWAP, we're bearish. If we stay above it, we look for an inverse head and shoulders, or a head and shoulders. Oh yeah. Right it open. And then a pullback. Let's bring it down just a little bit right there. $7,003.49. Wow, that's a lot of money. Jenny, do something with the hair. Hey, Lord, I'm his mom.
Sometimes, you could have better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at
I told her one girl one night, I said, I had a good time tonight. How about if we just go ahead and take you over to my mother and see if she approves? And she looked at me. This is just our first date. How dare you?
relatively calm day after 2 days of shoveling out some tremendous amount of snow and sleet. So as you can see, I am locked and loaded for what we have today and really tomorrow with the onslaught of big tech earnings in the Fed.
I thought you were going to say I'm happy not to have a couple of days of these headlines after all the weeks that every Monday we'd sort of get a punch in the face with some sort of headline. But I do fully understand the snow comment, no doubt. So how are you feeling about earnings? I mean, it seems that people are being more positive than negative. Would you say that?
I think so far that is right, but I would say, the big push that we've had so far was on the financials. It's really this next slug of big tech earnings. I think you mentioned earlier Microsoft, Meta, Apple this week. Next week we have Amazon, we have Google. A lot to take. Those companies, as you know, Nicole, account for a significant percentage, not only the S&P 500, but the NASDAQ. So their quarterly results, but really their guidance are going to be extremely important. When it comes to the hyperscalers, to me, it's going to be CapEx, and whether or not it not only increases, but if it's kind of backed by expectations that can be supported. And I say that because, remember, we continue to have electrical capacity issues in this country.
Before we get to Apple on Thursday, tomorrow is Meta, Microsoft, also IBM. I'm not sure which day Tesla is, one of the 2 days. Of those names, do you feel confident in any of those? Meta, Microsoft, IBM?
Well, I mean, let's kind of break them down, right? So Microsoft, has been capacity constrained. There's some questions about agentic AI eating into software. So we really want to pay close attention to what they have to say about those two things. For me, though, what I want to see is a sign that Microsoft is starting to monetize all this capacity that they've been bringing on stream. And I want to see what their backlog looks like. If you remember the September quarter, they really shared a very big multi-year figure. I would like to see that move higher. With Meta, we have some news out today that looks like that we start, using some subscription business models. What do they say about that? But by and large, the bulk of the business remains advertising. I want an update on what they're doing as they look to spread advertising across WhatsApp and Instagram and Threads.
Understood. And then what about Apple for Thursday?
So Apple, I mean, the general consensus is that they're going to have a good quarter, and I think that's the case. My concern is a little bit on the guidance. We've heard from Micron and others that they're shifting capacity for memory towards AI and data center. Prices are trending higher. This seems to potentially impact shipments of, PCs, smartphones, and tablets. That's Apple's hardware wheelhouse. So their guidance, could be a little disappointing, but I would counter, Nicole, and say that they've, I think smartly tipped their hand that we could finally be seeing this AI-enabled Siri in about a month's time and then coming to market a little bit later. So maybe that guidance gets a bit of a pass.
Okay, and last but not least, when we think about some of the other things that have been happening, what about a name like Eaton? You're bullish on that?
I like Eaton a lot. Go back to my comment about the electrical capacity issues in the U.S. That's a great tailwind for Eaton. You mentioned, I think, Jenny, some really nice record backlog numbers for Boeing. That speaks to its other business, aerospace. And the nice thing about Eaton is they understand where the strength is, and they announced earlier this week that they are going to spin out their vehicle and e-mobility business. I like this for a couple reasons. It makes a cleaner story for Eaton. It removes cyclicality out of the business, and they will be retaining and focusing on significantly more profitable businesses than they had with vehicle and e-mobility. So I like it a lot.
Understood. And what about something like CoreWeave, which, has been getting some positive comments from the analysts? I see Deutsche Bank has buying a 140 target, for example. I see a $100 target from Mizuho. Is that a name that you follow, and do you like that?
So we pay very close attention to CoreWeave because we own NVIDIA, but also because of a position we have in a business development company that focuses on disruptive technologies. I'm talking about Suro Capital. The symbol is 4 S's. I think that the Suro is likely to continue to monetize its position given the strength that we've seen in CoreWeave. But this is a great sleeper company because they also have positions in OpenAI, which, as we know, could go public this year or next year. They also have some other great exposure in AI and data center, vast data, for example, and some others.
All right, and when we talked about headlines, I mean, I will touch on the insurers, which I'm seeing down, in a big way. I mean, I mentioned United Health here on the Dow Jones Industrial Average weighing on the Dow, but you're going to see Elevance Health, CVS, Humana, UNH all down because the Trump administration is floating the idea of keeping the Medicare Advantage rates flat, which Kevin mentioned. But these names in the pre-market are down 10% or so, Chris. Is that on your mind a bit too?
Yeah, I mean, it's always on my mind when it impacts the market. I'm really curious to hear what these companies have to say on their earnings call. Obviously, they are going to discuss this. What are they going to say about driving cost out of the business or increasing productivity? What could be interesting, Nicole, is this could be a catalyst for greater AI adoption in this part of the market, this part of the economy.
Gold, silver, Bitcoin, any of those?
Got them all. Well, I shouldn't say all. We have exposure to gold through a couple positions.
Yeah, let's see if it's overdone.
Model. Same thing with silver.
It might just come right to a support level.
Look, we like those rather than buying gold, buying silver, because I think as you discussed earlier, we've seen a nice.
What did it go to? Yeah, it's, oh, wow. That's a $60 drop. 293. Yeah, we're close to a Head and Shoulders. So I'm going to put the red line down here where that Head and Shoulders is. That plus that, I didn't see that though, but that got that gap. And then there's Head and Shoulders right here. Double bottom on UNH. Oh, 3 minutes and I don't even have my coffee ready. That's not a good sign. They said there were a lot of options bought out Man, we were at the 200 on that UNH. We're at a resistance level. Oh, the bell's going to ring any second. Do, 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 do. Oop. $691. Looking for a pullback. Could set it one right here. I'll set it right there. Darn it. Ah, man, what's wrong with me today? Okay. Intel up 141, Apple up $4, General Motors up 4, Amazon up $1, Tesla up 28 cents. I got Zim. Oh, 15. I thought that said $15. I go, what? So that's volume highs. Losers, Oracle, again. Well, they pumped the heck out of that thing. It didn't work. Home Depot about to my support, 382.62. And PayPal's cheap. Nike at 64. These even like they're at scalpable supports. Mr. down at 159. Okay, we pulled back. Did my alert trigger? Dadgummit! No. Snow up a couple bucks.
Days move, but when you look at it on a year-to-date, they're higher year-to-date. On a year-over-year basis, they're extending their rally.
Not going anywhere yet.
50% on a year-over-year basis. They have strength across their three major segments, whether we're talking about Raytheon, so there's steady demand for defense systems, Pratt & Whitney, strength there as well, higher engine volumes there, and Collins Aerospace, there's strong commercial aviation demand for that segment, those verticals there. So again, higher volume, so it's not just pricing here, there is real demand here for RTX. And we know that defense has been something that analyst talks about, that we expect to see some strength this year, so that we're seeing that real time with these results. From RTX guidance, adjusted sales are looking for between 92 and 93 billion for 2026. Adjusted EPS, they're expecting that to come in between 660 and 680 for this year. They're saying they enter 2026 with, quote, great momentum and focus on executing on a massive backlog, Nicole.
Yeah, you have Northrop Grumman there. All of those defense stocks continue their story. Final thoughts?
Yeah, so Northrop Grumman, that is on our radar this morning. That stock had been moving lower earlier. Let me see if it's shaking off some of the words. There was a high bar coming into its results, but they did do better than expected. Adjusted EPS coming in at 729. Revenue 11.71 billion for Northrop Grumman. There was some worry again that the kind of good news was already priced in. So we'll watch this one and see how it performs throughout the day. We know again the defense picture is strong, demand is rising. We know that the Trump administration had announced plans to increase the defense budget to some 1.5 trillion for fiscal year 2027. So the view for the defense sector has been that we'll continue to see demand there.
All right, and United Health down 18%. To follow up on that story, that's gold.com. Ringing bells here on the floor of the New York Stock Exchange. Diane King Hall, great to see you. Names like Corning, also Cisco, General Motors, CoStar, HCA, Healthcare, Land Research, Akamai are leading. and Moderna are leading the way on the S&P 500. So folks, keep it right here, because coming up next, we'll have a great segment with Lake-Stone Wealth's Kenny Fulcari. He'll give us his views on the market and some picks too, I'm sure. We'll be right back.
You know, NOC, I put a support at 638.44. It's overbought. Way overbought. It's up $220 some in a year. Northern gun fourth quarter rise on global weapons demand. Bring back this early years. We got a new low on Slash, yes. Ooh, yeah. We're at the 9 on the SPX. I'm just waiting for the right trade.
Recap of the news. I help you read between the lines.
When I see a pattern. See, right now, we pulled back and hit the 9, and I'm trying to find something in here that is like a solid support. So the only thing I'm seeing right now on yesterday's close is this right here. So let's clean this. Well, I'm gonna leave that. I don't know what that's. I'll leave that.
See this person that I've always seen as a force in our family.
And I will take that body right there and run it up
now
to
we're in the
there.
car together almost daily. I started to realize, what can I pick up?
And that's right off the 200. So that's perfect. Get ready. Ladies and gentlemen.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable
Trade the
data,
SPY
and
if you don't want to trade the
market-moving analysis.
SPX.
Schwab Network connects the headlines to the why in real time. Watch free
69.75s.
Welcome back.
We're about right
Well,
there.
happy to see
I'm
you
gonna go
all
for
on
it.
this
Grab
Tuesday
one.
morning. We are live on the floor of the New York Stock Exchange on the corner of Wall and Broad, and we are seeing stocks higher. Don't look at the Dow because
I
the
should have grabbed
Dow
more.
today. Well, do look at it, but you're going to see it has a down arrow because of United Health, which is down right now 18%. So the Dow is down 400 points, but the S&P 500, a really broader basket, it's 500 stocks rather than 30.
Well, one of them, 2 bits, 3 bits, 4 bits, and then 5 took a nosedive. Now we're coming back to that previous resistance support level, and that's off the 200.
To give us his thoughts on the market. Good morning.
So this is the 69.75s at 380,
Always great for me. Yes, you're home.
and we're at 460. So
Your thoughts.
Scout, you hit the resistance level of the head and shoulders.
Really interesting place. We're now really smack in the middle of earnings. We got about 100 companies that are reporting this week. Certainly had some big names this morning, and like you made a point about UNH.
So I'm gonna walk this over again here.
The bulk of that is UNH because it's a price-weighted index, so the UNH is going to have an outsized impact on the Dow. But don't look at that. You want to look at all the other stuff. And tonight is really going to kick off tech earnings season because we got Seagate and we've got Texas Instruments. Now they're not the Mag 7, but it's going to set the tone.
480, $5. Woo!
MU and Western Digital all in that memory space, which I think is a key space. And you can tell by looking at these stocks over
Triple
the last
top.
year, they have skyrocketed because that seems to be where the bottleneck. If there's going to be a bottleneck, that's where it is in the memory space. So I'm looking forward to what Seagate says tonight.
$5.
It's already actually up today. I haven't seen it yet, but I think it
That's
is.
how you do it.
About 1% a short time ago, yeah.
Texas Instruments, I'm not sure yet, but I still think it's important to hear what Texas Instruments.
What is overbought?
about,
NOC?
The future, because I think it's going to lay the groundwork for then what we're going to hear starting tomorrow with Meta, Microsoft, Apple, and Tesla.
All right. So, I thought right now I'm looking at Texas Instruments, which is down 0.75%. The high on the day was 196.69. The low is 194.34. It's already had a pretty decent swing.
Right.
Right? Okay, so you'll watch that. 195 today.
Ah, look at that!
Now just down 0.75%.
3 white soldiers, 560.
Weston, Didge, and MU. Those three, right? Seagate,
Okay, I'm going to walk this through you. Now,
three,
some people don't see this kind of stuff,
I guess,
and I like pointing it out, because it could,
the memory space, because that's where AI
increase
where the bottleneck is going to be in the memory space.
your
And you've seen it, right? We've seen
winning
all
rate.
three of those names just explode over the last 12 months, and they'll continue to do better. I think actually Seagate's already up 30% this year. We're 4 weeks into the year.
So what's
And timing's a lot,
AI,
and
the
then
memory
you just keep
space,
flipping
tech
back and
stocks,
forth. You eventually will hit one.
Why are we moving higher?
Well, because look.
So this is the support level.
Let
me get back down here a little farther.
Calling for tech to be in this bubble and it's going to end badly. I think they're way off. This is nothing like a bubble at all.
This is the support, the trend. It's called a symmetrical flag.
Real. First of all, the companies that are in the tech space are real companies with real earnings and real products and real spending. And so I think that's going to continue to drive the narrative.
It's called a pennant flag.
Not only this year, but years into the future, which is why tech needs
So you want to draw that trend line across there too.
In your portfolio.
So you got
so overweight, but you got to have a significant position in tech and tech broadly, right? Whether you play it with individual names or whether you play it via the ETFs, things like.
So this is called a pennant flag.
Dan Ives
it breaks out, and then it forms a pennant.
And that's been, doing well. He's had
symmetrical flag.
Even on a day where we would sell.
Sometimes they won't break out of that flag, but in most cases, the odds are better that it will.
His favorites that day were.
And that's called a symmetrical flag. Pennant flag.
That morning, you probably would have done well.
And I picked it up off this one. 1, 2, 3, 4, 5. Take a nosedive.
Let's talk about just overall. I mean, the feeling is that earnings
and then it bounces up.
Fundamentally are improving.
So I knew it was going to pull back, and I didn't see this flag until I started really looking into it.
I am in that camp. I think we're going to see double-digit earnings.
And we pulled right back to it, to a triple top.
We're going to continue to see.
So that would have been my original exit idea, but I wanted to get out of it. Only had one contract for $380, got out at 5. So that's $120 in 3 minutes. 2 minutes.
In the economy, by all counts, is not falling off the edge. Unemployment is at all-time lows at 4.4%. That's considered full employment, and the data continues to be strong. And so I'm very bullish.
And it's off the 200 for confirmation, off the 200, and then 21 crosses the 200.
Yeah.
And you got the 21 crossing the 9
somewhere between 10
right here,
and 15%. Now, that
right at open.
We're not going to have a pullback first.
So we were bullish.
Some volatility.
Right, and I think we're going to have it because it's a midterm election year. So nobody should be surprised at all if we see.
That's the 9 EMA and the 21 EMA.
15%.
That's when you buy.
That's absolutely.
So I had the 21 EMA confirmation. I had the 200 SMA confirmation. I had the trend line confirmation.
That are getting really beaten up for no other reason than they're just
and what else did I have?
That are going to get unnecessarily punished.
Right, so you have to be
strategic. The 9 over the 21, but that don't count.
Try and evaluate
and the flag, the bullish flag,
and take it and make sure that you've got dry powder there to take advantage. Meaning you got cash on the side that you're going to be able to take advantage when that happens.
Understood. When we think about what people worry about when they're talking to you about their portfolio. People are in retirement or close to retirement, get worried. What do you tell them?
Right, so they get worried.
Randy don't love me no more.
They're worried about the geopolitical. They're not so worried about the economy. They're worried about all the other factors around it that create all the noise. And that's just the point. It's noise, right? Yes, I understand it creates sometimes chaos in the market, but for the most part, it's noise. That doesn't price stocks in the long term. And so you try to, you discuss it, you walk them in off the edge. But look, if you're somebody who's in retirement, your portfolio is going to reflect who you are and where you are. So you're not going to be.
And then we got the triple top.
Way out on the risk scale at all.
Exit idea.
And so they feel better understanding the way the portfolio is diversified.
Right, and they'll be more conservative at that point.
Much more conservative at that point.
Do you ever look outside of just U.S. stocks? Are you looking to fixed income? Are you looking to commodities?
Yeah. So for retired.
Okay.
For all our portfolios.
Off to the races.
Looking at European names, looking at emerging market stocks, India.
First trade out of the way.
We play it, or I play it using the EEM, only because I don't live in those foreign countries, and it's easier for me to play it using an ETF. And the EEM has acted very well. It was up last year. I think it was up better than 20%. I think I have to.
Yeah, 1 year it's up 39, 40%.
40% in 1 year, so 12. Right, exactly.
Okay.
So that's been a great performer, and that will continue to be, I think, a good performer. The European names, the same thing. The EAFE, MSI. ETF, which is all the big European names, is another way to play and give yourself exposure to Europe, unless, of course, you're going to be a stock picker in Europe and pick individual names. I won't, because, again, I live here, but I'll play it that way. And we play it mostly that way. Fixed income is always going to have a place in someone's portfolio. Look, in mine, I have no fixed income. I'm 65, but yet I have no fixed income yet, just because I'm not interested in fixed income. I'm in this business. I'm in the game. I prefer equities. That's where I am. Yet, there are some other people that are in retirement that certainly want the stability of fixed income, and so therefore, they'll have it.
And I've always been so conservative. Every time I start a new job and they say, what do you want? I say, oh, a lot of bonds.
No, but and then, of course, I look like years later and say, oh, gee. But you know what? I don't know what to do. I'm too conservative.
Well, then you and I should have a conversation.
It's doing well. Thank you for being here. We'll see if we have him back. No kidding. Thank you so much, Kenny. Coming up, we'll take a look at some key levels to watch on the charts that you'll be interested in. Kevin Green is with us next.
Kevin Green. Let's see what he's got to say. I like listening to what he's got to say.
Sometimes
new commercial.
You could have done better.
Oh, God.
Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines.
Your hair, make it look like that.
Moves and fundamentals shaping the markets in real
You're so
time.
beautiful there.
This is Schwab Network. Subscribe at schwabnetwork.com.
Jenny, you look like you've been run through the ringer.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions. All with expert
Meta down $3.57.
inflation data to sector rotations, earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to the opening bell. We'll take a look at some key levels to watch. Not that far off from all-time highs or intraday highs. You can see closing highs. We need to go to our senior market correspondent, Kevin Green. He has all the answers and the levels to watch right now here on the markets. Good morning to you, Kevin.
Good morning, Nicole. Yeah, we're seeing over 50% of the stocks in the S&P 500 in the green. I would say it's a little bit mixed when you're looking at the sectors. Communication services maybe seeing a little bit of headwinds, information technology catching a little bit of a bid, and you are seeing maybe some gyration when it comes to semiconductors here. But to start off today's session, I'm about 0.25% for the S&P 500. I'm looking to the upside at 69.90 as your major area of resistance. That's where we saw the majority of those calls being transacted, at least earlier this morning here. And if we're able to see any type of reversal, 69.50 is going to be your first area of support, breaking below that 69.30. We are actually seeing a little bit more compression when it comes to the flows from this morning as far as the S&P 500 options levels or the strikes that are getting a lot of attention, so a lot more compression. If you're kind of looking at the volatility index or the VIX, it's sitting at 16 right now though, and actually yesterday we did see it inch up on an intraday basis, so I think we got to be mindful of that. Obviously we have a lot of economic data as well as events coming on the calendar over the next 24 to 48 hours, and I think the market might be trying to figure out how President Trump's going to respond to some of these trade deals that have been completed here. So right now, for the most part, we are actually looking bullish, but I think we still stay a little bit cautious when it comes to the vol complex. Might be a little bit underpriced compared to the rest that's out there.
Yeah, I mean, we still have the Canada thing looming. We don't know what happens with Medicare. There's different things that could start, and all the geopolitical events that you mentioned. 61.25 the barrel right now on oil. Tell us what you're watching now.
Yeah, you are seeing oil kind of advance earlier this morning. There were some reports around maybe some potential events with it. It is getting close to the 200-day moving average. That has been an area of support sitting at around $62.17. But we are seeing a little bit of a bullish formation with the RSI higher lows as well as MACD over that zero line and that 12 EMA above the 26 EMA. This one looks like it's trying to curl up to potentially break out. You get above that $62 level, 62, let's say 20 at the end of this week, and it's on fairly large volume. Maybe you do see some follow through, and I would say the next area of resistance is going to be $66. On the options front, when you're looking at crude oil options, it is definitely heavily skewed to the upside here, Nicole. So somebody is pricing in, some traders are pricing in an upside advance when it comes to the oil markets over the next couple of weeks here.
Look, and Ben Emmons is making the point that the dollar has been getting weaker. He said the dollar is getting weaker by the minute, losing close to 3% since Rick Ryder became the front runner, basically. It's very interesting because it's true. And also, as you have a weaker dollar, then you could see commodities moving higher, right? Like oil.
Yeah, I would agree with you. I'm not sure if the correlation is because of just Rick Reader alone. I think it's also because of some of the actions that we took last week, some of the comments around Davos. You kind of see that within the yield space. 10-year yields still remain a little bit elevated here, and we are testing the September lows when it comes to the dollar. We break below that. You look at the $90 level or the 90 level for the Dixie as your next major area of support. It just depends on how fast we get there. If it's a rapid decline to the downside, Nicole, I think that's actually a headwind for equities as well as the Fed.
He continued on to say that as Rick has been, become the front runner, the risk of the yen intervention since last Friday, which you and I have talked about, and that this dollar move may imply that each of these two pieces of news could be, in fact, imminent.
God, look at her go!
Protests by signaling a hold until May. So look, if they have yen intervention, if we start to get the, who really is named Fed chair, those kinds of things could in fact move the dollar. So we'll see. Thank you, Kevin Green. Always breaking news with me, and we have the ability to interpret.
$9.10.
Thank you, Kevin, for that. All right, our market meetup panel is here. Alex, Scotty, and Dan Brad.
Yeah, that's a good call.
Trading, Charles Schwab. Thank you both. Your thoughts, Alex? Kick us off.
Yeah,
I think I'm getting this down. I mean, I like my beach trade. That's what this is. The first half hour of the day, and I'm done. I'm done. Well, it's done in 2 minutes.
The earnings season so far. So through 83 names, about 16.5% of the S&P 500. So far, the beat rate on earnings.
I would really be done if I held on to it.
Which would be better than the average. On sales, though, it's close.
That's
to
a strong
55%,
pattern.
So it's just kind of saying, hey, maybe there's some margin expansion.
This right here. This is called a head and shoulders. Also, I just I don't know. I did mention that earlier. You got your left shoulder and your right shoulder, so you got your inverse head and shoulders too, which is another confirmation to take the trade.
It's not enough.
When you get like 3 or 4 confirmations to get into a trade with my strategy or with your strategy.
Yeah, understood. You make a good point. Even sometimes good news.
The odds of winning are a lot higher.
Sort of buy on the rumor, sell on the news. Dan, you're looking at.
But that 200 hardly ever fails me.
What are your thoughts?
Yeah, Alex was making a point to me earlier today that the yen and the euro yen are more reactive to weakness and other things. Bank of Japan has been
to bounce off the 200 SMA. I mean, that's just beautiful.
Currency. If you look at the euro yen and the dollar yen and the
$10.
dollar, all have been showing weakness over the last 3 days, especially over the last 3 sessions. I was hoping to see some sort of like reaction in metals or just not seeing it. They just continue their climb higher. Nice pullback in gold today. Treasuries, well, we got the FOMC tomorrow. On pause, no clear path on when the next rate cut is going to come. The hedges are showing down at 3.25% right now is where short-term rates could go. We're not close to that right now at 3.58 in the 2-year.
Yeah, understood. And there's actually, an auction tonight when it comes to the yen, so we'll have to watch some of that. That could be a news-making event as well. Alex, your thoughts on some of the names that actually really like: Seagate, Texas Instruments, Western Digital, Micron. You're talking about a few of those right here.
Yeah, and this is kind of the appetizer for what I think is a really, really big earnings week that's really going to be headlined by Microsoft.
SMCI hit my support, but I didn't notice it.
Spend potentially over $200 billion this year.
SMCI, I talked about this one yesterday. I said, looks like it. Oh, I did. I said we were going to hit 290. Look at that. I remember 2990 is what I said yesterday.
Example of just this powerful memory
On
momentum trade.
SMCI. I mean, to the penny. I remember that.
An important name to kind of set the stage, in my opinion, for just how high that bar is set. You look at what the earnings are expected
PLTR,
to grow about 4%.
We got a fallen megaphone.
Now, the thing is, that would be,
with a breakout. So if you can count to 4, you can make a little bit more. It's all in the timing. You got to let it kind of stretch out, So this is called a megaphone.
Yeah, and Alex, just quickly, tonight's 40-year Japan bond sale.
One of it's 2 bis, 3 bis, 4 bis. If you count to 4, you can make a little bit more. So there's a call right there. I took that. I was watching that too. I didn't do it though.
Situation in Japan right
I did
now
look at it
because they
down
want
here.
to
I just glanced at it.
Their bond market, but they can't spike yields. That could potentially crash the domestic economy. So some thoughts are that they're going to maybe sell some U.S. Treasuries to try to stabilize currency as well as their bond market, but time will
So you
tell.
can see how powerful a pennant flag
And
is.
that's the other part of it. Is it selling America or is it selling because they're trying to balance? So that is so intertwined. We talked a little bit about that.
I'm kind of proud of that trade. I wish I'd held it
We'll continue
a
to
little
follow
longer.
the story. And thank you both, Dan Grant. Wonderful to see you. And Alex Coffey, thank you.
That's $700.
I'm Nicole Petalides. So glad you are with us.
$607.
We are just a stone away from a record. Keep it here on Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for
Hot
7
chocolate,
years
that's
in a
what I
row.
want.
With Investor Checking, you get the
got one
award-winning
left.
features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because
Angel,
your investor
you want to come
checking
over and
account
have
is
some
linked
hot
to your
chocolate with
Schwab
me?
One brokerage account, you can manage your checking and investing in one convenient location. Moving
Say
funds
yes.
between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds,
She said yes.
money market funds, and more. Get
With
it
mushrooms.
With Schwab
I mean,
Bank Investor
marshmallows.
Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Has anybody ever ate mushrooms?
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance.
Johnny Ringo, you ever had mushrooms?
Yeah.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
Bounced off the AMD support level that I had on here. Double top on NVIDIA. Triple top.
Further downside area to watch.
Smart insights,
Oh, yes, on pizza.
and trusted financial journalists, streaming live and on
Woo!
Schwab Network, streaming 24/7, any screen, anywhere, free. Schwab Network.
Purple microdot.
Mom, when my grandparents moved here, did they know?
Had a dog eat a
I don't even know if they could
few grams of mushrooms and he ran around the house for a day.
literally come across the entire world. I think that we totally met what their wishes were. Schwab
He got
has
into
been
my
with us
cooler.
for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Welcome to Morning Trade Live. I'm Sam Vardis, live from the floor of the New York Stock Exchange. We have plenty to hit on both here and abroad over the next hour. It's been a very busy morning, so here's a look at what is coming up. We'll examine the outlook for the financial sector and how AI agents are already helping the big banks
Very good.
conduct business. And over the next hour, we'll have example trades for United Health and Seagate. Health insurers lower across the board this morning on Medicare rate news, and Seagate reporting earnings after the close. It's a nice start to the day for some of those in the memory space. Let's take a look at where markets stand around half an hour into trading, because we've seen a little bit of a mixed picture this morning. Obviously, we've had a pretty diverse earnings day today, and that is what's driving some of the action. We've got the Russell 2000 underwater.
Triple top on code.
Dow this morning. As far as some of these report cards are concerned, United Healthcare down 19% right now, Boeing down 2%. So that's certainly where the drag is coming from off the back of earnings. The NASDAQ, though, holding up 0.8%. As I said, it's a really nice day for some of the memory stocks off the back of the news around Micron. We've also got most of our Mag 7 names in the green today. And the S&P 500 is sitting at 69.75. They're up 0.4% right now. So we, of course, have seen 4 days of gains for the benchmark, but a little bit more of a mixed picture split
NVIDIA.
major averages as we stand for this Tuesday morning. As we look ahead to more earnings, the FOMC meeting gets underway here. We'll get that decision out tomorrow. The FTSE 100, 0.7% higher. The DAX on the line to the upside. Obviously, Europe, a very big focus of the headlines this morning as we've got this deal now between the EU and India, the mother of all deals, as it's being called. I'll talk about the details of that later. The Nikkei 225 powering ahead 0.9%, and the Hang Seng Index was up 1.4 overnight, so it was a more risk-on tone across Asian equities as well. The 10-year yield sitting pretty stable there at 4.22. We've gone back to this sort of range-bound sticky action there in the bond market, the US dollar index. We know the story there, some weakness obviously, 96 there for the Dixie. And gold is taking a bit of a breather after these records we've seen, obviously punching through 5,100 yesterday, but we are down across the precious metals today. Crude oil is at $61 a barrel, and Bitcoin is trying to nudge higher. We're at 87,000 and change right now on the cryptocurrency. So let's look at your setup across all the major asset classes as we stand this morning. Some of the foreign market action today off the back of some of these headlines. But let's get to Kevin Green, who joins me now, because obviously not a huge week, or I should say day, on the data front, but we do have some consumer confidence out from the conference board, KG. Just talk us through what you're seeing there. How are people feeling about things right now?
Kroger has a double bottom.
Yeah, we actually did see a pretty sharp drop to the downside when it came to consumer confidence. The reading for January came in at 84.5. Street was looking for 90.6, and the previous number was 94.2. That was actually revised up here a tad bit. We know that there's a lot of volatility when it comes to this report, and it's based on, obviously, inflation expectations could be priced into this, also looking at the employment picture as a whole, and also the S&P 500, the S&P 500 is also a factor within this report as well. So a dramatic drop. Now that actually could be conducive for equities moving a little bit higher if consumers are not as confident on spending money or the economy at this point in time. They actually could pull back on spending.
They always do around this year, you idiot.
Some consumer discretionary industries and things of that nature that also could lead to lower inflation over time here. We also had the Richmond Fed once again having that number coming in lower than the street's expectations. So the market's reaction right now, I would still say, still positive on the day's session. You are seeing the markets trading at relatively the highs of today's session, but overall, it's a very volatile print, an aggressive move to the downside based on what we just saw and on December's print.
Yeah, it could be a case of that sort of cliched mantra in the market this morning, a bit of a slightly bad news, good news for the markets, because it could mean that the Fed moves faster, at least.
This is one.
As to what they're going to say tomorrow about the future path of rates. Obviously, we know that they're going to sit on their hands as far as what's being baked in here tomorrow, but it's obviously about that commentary. We've seen the memory stocks doing some of the heavy lifting today, very earnings-driven kind of morning for us. As I said, we've got a few down components.
Yeah, I wish I saw that.
As far as the mixed picture is concerned.
I've been going to PDD every morning, and I didn't do that yesterday. And yesterday we hit that triple bottom. Probably got alerted. I don't know if I'd have took it, but I might have for a day trade back to the top. But there it is right there. Kind of triple bottom, triple top, pull back, boom, to a quad.
For for additional approvals and ramp up in production for a lot of these aircraft. So Boeing not really a surprise here. RTX also seeing a situation where we are backing off. We're still up about 1.3%, but demand continues to be fairly high.
Boeing's about to my support.
Is also aggressively higher than the street's expectations in some respects here. Now, technically speaking, we are kind of getting closer to the area of resistance.
Oh, dang, we hit it.
Shit.
That was this morning.
Seeing very strong demand, not only when it comes to new orders for the
now, see, here's another one.
engines, but also servicing of the existing engines that are
I
out there.
charted this out yesterday at 239.40.
I think the industrial space in general has had a pretty decent
And I was off
run, but you
12
are seeing a little bit
cents.
of a rotation because
Right
of
at
the
open. I
valuation
probably
of
would
a
have
lot
took
of
that.
these names, especially if you're looking at a name like
And scalped it to the 200 for sure. But that wouldn't have been much. Yeah, it would have been $5.
As we see across the defense names,
I could have made
this
a little
morning
bit of
as
money
well.
on that one.
Let's just switch gears to obviously some of
Right
these
to the penny.
trade headlines. I don't know about you, but if markets were people, I'd like to be the South.
How'd I get that support?
Today. What trade tension?
Jim, I was watching you draw that out last
I'll
night.
get into that later in the program, but
I'm having a brain fart, and I don't remember how you come up with that support. Will you please show us?
They're talking about this as the mother of all deals.
I said,
and
I'd love
it
to,
took about
man.
20 years.
Yeah, you are
See,
seeing some
let's go to
progress
the
being
daily
made, and let's
first.
see if
This is
deal is actually going to be
the way we're going to break it
signed and
down.
approved by
We've got the
their,
weekly,
parliament in India,
which is the head and shoulders.
We have seen some
on the weekly.
issues when it comes to our trade deal with India because of.
I just went ahead and drew a cross line. Now this is on the weekly time frame.
Excluding some sectors like agricultural as well as autos, but you are seeing.
You got your left shoulder and your right shoulder.
Looking at other.
But I just went ahead and drew it straight across.
Instead of the United States, I'm not sure if this is completely trying to get away from the U.S.
I think in most cases I would even probably have dropped it a little bit more and went downward. For some reason I went straight
Still
across.
seeing a lot of optimism in the international markets, and they continue to outperform us here in the United States. Now, I have not seen yet a response from President Trump or the White House. Let's see what
There's
that
another
number
reason
kind of
why I
looks
went
like.
straight
If that's going to
across.
cause a little bit of volatility.
It could have
on
went down a
markets,
little bit on this one
rated
too.
higher when it comes to tariffs on the EU or even on India.
But we got a
but
gap
overall, this is actually a really monumental
in
deal.
that
This
support
also comes on
level
the back of
and
China
that
and
resistance
Canada
level.
trying to work out some form of a trade deal as
And we
well.
take it to an
Once
hour.
again, trying to diversify themselves away from the U.S. So this seems to be a trend. I think you are also seeing the dollar moving to the downside because of this trend, especially over the last week, given the geopolitical events that have taken place as well.
Yeah, certainly, and we're
Yeah,
hearing
that
that Keir
pullback
Starmer
right
is
here
likely to go to China as well.
to the
He's looking
200.
to try to straddle both sides, the U.S. and China. And I mean, commentary aside, the facts are that the administration wanted 90 deals in 90 days. I heard this morning we've got 2 in 10 months, which are out of Southeast Asia. 27% of tariffs now have been enacted, which herein lies, I suppose, the lack of
That's
visibility
it.
for some of these
Perfect.
companies when it comes to these earnings, what they can say about
Now I'd
tariffs,
wait for
maybe
it to
the inflation
retest.
picture as well, as far as some of that pass-through. But let's talk about the commodities space. Obviously,
Set an
we've seen,
alert right
the
above that
metals
trend line.
taking a bit of a breather this
I'll
morning
show you where
off
I
the
put
back
this
of
alert
these
too.
records. Still up. You know, obviously silver 106 right now. Gold manages to hold above that 5K
I should
level.
raise
But
up just a
talk
little bit
us
higher. I want to get it on
price
that body
action
right
here.
there.
I mean, is this just obviously some profit taking off the back of the big run up we've seen? Does this continue?
Bring it just a little bit above it.
You know, after this.
It might.
240.
I mean, if you're kind of looking at silver, the future contract
112.
here, yesterday
That's
was
right
actually
where we
very
hit.
interesting from a technical standpoint. We
And that
obviously saw
pullback.
that move to the upside to $117.70,
Actually, that's perfect.
and then that
Yeah.
sharp reversal. So
A little bit higher,
That's
so-
actually kind of a bearish reversal candle. But what's also complemented with
That
that
would've triggered,
is the volume.
but I don't know if I want
Yesterday's
to take
volume
it.
exceeded 318,000 contracts for the front month. That's the highest amount of volume
I'd rather
we've
see
seen
this.
since the August of 2020 or 2011, if I'm not mistaken. So you are
Open
seeing
573.
or 2020. My apologies. You are seeing a significant kind of reversal actually taking place just in house here when you're looking at the futures contracts. There's also a lot of commentary right now between the difference of the spread between the futures and where they're trading at and spot. This is where you are starting to see more of a premium taking place, and that's because the physical demand is still outstripping supply at this point in time. But do we actually see a breakdown when it comes to demand over the next couple of months, as these prices obviously will have an impact on the industrial segment as a whole? Now, could this be the reversal? It could, but we've had a fake out before. Actually, back in middle of December, late December, we kind of talked about, once again, another volume spike, a bearish engulfing candle that took place. We saw some follow through for about 2 days, and then we started making new all-time highs when it came to silver. So right now, we kind of wait till the price action really confirms, but yesterday's candle is notable.
Yeah, absolutely. And I think you were on the money when you said 2011, because I was actually just looking at the SLV, the silver ETF, and it was pointed out that as far as that volume is concerned, the prior records were May 2011 and February 2021. So that just gives you an idea, obviously, what we're seeing as far as some of those flows are concerned as well. KG, really appreciate you getting us across some of the data and the key stories and movers for us this morning. I'll speak to you a bit later on. Coming up, we will take a closer look at the financials and the impact that AI is already having in banking. Morning Trade Line is back after this.
I'm Nicole Podolides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Intern, this place is incredible. It's where I go to your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Yeah, Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now.
Invest your way with Schwab. No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
AVGO pulling back some. Oh, UPS.
Earnings and guiding for higher 2026 revenue. The company CEO is saying 2026 will be an inflection point in the execution of UPS's restructuring efforts. We are trading higher by 2.3% right now, 109.52 on UPS. Let's take a look at some of the other winners.
No trust.
Thus far, and Corning is really leading the pack here, up 12.3%.
God.
Coming off the back of a deal with Meta, $6 billion.
CL, what is that?
This is for fiber optics cables to supply to their data centers. So very much they're getting a boost and a lift from that. General Motors
GLW.
also high, and this of course coming off the back of its beat on earnings, the new $6 billion buyback plan there as well. And Western Digital, as I mentioned, a very nice day for memory as we look ahead to Seagate's earnings, which will come this afternoon. But these are some of our outperformers across the session today. We are up on Western Digital to the tune of 5%. Let's take a look at some of the losers on the session, and no surprises there that healthcare and some of these insurers are among the bunch here, down in double digits. So the price action is looking pretty ugly right now across this space. It coming off the back of the Wall Street Journal article about the US proposing to hold payments on private Medicare plans that will be flat next year. So we are seeing a big, big move to the downside in reaction in response to that story. We'll be tracking throughout the rest of the program. And of course, United Health will also out with earnings. That's not helping though with respect to that story. Let's switch gears now and bring in our next guest. Joining us is Simona Alman, who's the co-founder and co-CEO of Prometeo. Thanks so much for joining me this morning. Look, I wanted to get your thoughts, just because obviously you're looking at AI in the banking sector, you look at the financials, that's obviously your bread and butter. One of the big stories that we've been tracking, and I know you commented on this before, about these credit card caps.
Do my eyebrows.
What do you say about that with respect to, the market reaction and
Girl.
all these sort of influential names weighing in on this, pushing back?
Girl. Your
I
eyebrows.
think that
Come on.
the thing with the rates, the credit card rates, is that they expose how
They look horrible.
the U.S. system is on credit card rates, and I think that that's per se one of the headlines. We are talking about 80% of the population accessing credit through credit cards, and also 1.2.
Is she an AI or what?
In debit card balance, in credit card balance, which is a lot, and so that sizes the opportunity,
No, I don't know.
About a system that has been historically bundled. You have a payment tool and a credit tool that go hand to hand, that are combined, but that's not necessarily how it should be right now, and so thanks to tech, right now we are able to unbundle that system, and so you have disruptors, and disruptors can raise to the task, and then they can see this opportunity as an opportunity to somehow robust the system, bust credit penetration through other tools, which are not necessarily credit cards, okay? And so I think that the opportunity is huge here, and I think that what we will see is disruption. We will see new players jumping into the space and providing new credit mechanisms, new credit access to new segments, all of these powered through technology.
Okay, and just as far as AI and the impact that it's having on the banking sector, talk us through, obviously what you're seeing as far as efficiencies, because, I know this is not something that's particularly new as far as, the productivity gains, particularly when it comes to cross-border payments, when it comes to addressing fraud as well. But just talk us through what you're seeing as far as some of the use cases here and efficiency and productivity gains as a result.
Okay, definitely. I think that 2025 marked the year in which AI moved from experimentation to full deployment. So AI is no longer a toy, is no longer a pilot. AI is running the bank. And I think that this is a major shift from what we have seen before. AI is right now an orchestration layer. And I think that the key word here is coordination. Historically, financial institutions have managed very siloed systems with different processes, tech, databases, and right now everything is pushed together through AI. And so now AI is embedded into the core functions, core
that's AI.
Financial institution. And this is onboarding, credit, fraud.
I asked if she was an AI bot, and here they are talking about AI right now. I swear to God, she's not real.
Everything is going more swiftly coordinated through AI.
She's not real.
And I think that this is a major shift. On the other hand, this is also, AI is becoming like a control layer on how money moves, and it's also shifting how money is moving and deciding which rails should be used, the speed of these rails. It's also deciding settlements. It's also upgrading the system, making it more cost efficient, and choosing also the most cost efficient rails. Okay, and so it's also becoming a control layer on how money moves, and I think that this is also a new shift. I think that definitely agentic banking is live, which is also a news. It's something that we are seeing financial institutions using actively AI, not just as a recommendation layer, but actually as agents taking actions. And I think that this is very important that it's policy supervised. I think that the banks that are doing this responsibly are pairing it with governance, are pairing it with an authentication upgrade, are pairing this also with a permission layer, an authentication layer. And so I think that governance is a key word in order on to analyze what we will see next in agentic and going further this year.
Fascinating stuff. We'll have to get you back to talk to us about it again, Simona, but we've completely run out of time. Really appreciate your insights today. Simona Alaman, who's the co-founder and co-CEO of Prometeo. All right, coming up, we will get a closer look at the big picture with the team over at Charles Schwab. Morning Trade Live will be right back.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Oh boy.
How's it going?
Going good.
So,
Sometimes,
next, try it again.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
Yeah, you've been
And
playing the
in Chicago,
commercials
we break
today.
down the data, technicals, and trades you need to see before the bell rings.
Live coverage.
No, I haven't had too many trades, just 2 of them. I was going to mention IWM down here, but I didn't. This is something. They all pulled back to that 200. Now, I looked at it this morning, thought about taking that one with the tweezer bottom. On the spot, I mean, what the I was talking about IWM, not the SPY, you idiot. The triple bottom on the IWM is what I was talking about. Inverse head and shoulders. Take this previous peak on that body in the SPX. That previous high to that candle right there. And that's called a pivot point. Could hold there and be bullish, and that gives you an asymmetrical flag. SPX, and we're the same trade I took earlier. Tesla's now in the green.
Potentially a person to watch going forward. Also, what are some of the makeups of the other governors? We know the issues with Lisa Cook and mortgage issues there. Stephen Myron's term is also expected to end this month. He is expected to stay on a little bit. So the composition and the makeup, because as I've discussed with this before, Sam, it is not just one individual who's setting the policy rate. It's a committee. So who makes up that committee, I think, is what the bond market is going to be closely watching over the rest of the year.
Yeah, that's certainly something to keep an eye on, particularly this week, if we get any clues about that. Joe, just getting back to you and, where you left off with saying, the markets are sort of somewhat fallen out of favor with big cap tech. Where does this leave the rotation trade then? Because it looked like we were rotating back into some of our mega cap tech players yesterday, ahead of the sort of positioning for these report cards. But given, obviously all the questions in the market around the ROI and then the elephant in the room being the power needed, the energy for all of these data centers as well, where does that leave things as far as the rotation and the small caps?
Well, let's talk about some option positions, Sam, if you don't mind, kind of heading into earnings expectations for, like I said, to me, the two big ones this week are Meta and Microsoft. I think those are the two that investors should really be paying the most attention to, just because of kind of what happened off the last earnings cycle on expectations. So expectations for Meta is around a 7% move. Microsoft's around 5.5% move just based on the options market. But what's interesting is what I'm seeing from a positioning standpoint is you see a lot of upside call buying. So the skew, basically, which measures the out-of-money puts relative to the out-of-money calls, the implied volatility that investors are willing to pay for that. They're actually kind of moving a little bit more towards the upside to the call side than what we traditionally see. So there's some expectations, I think, at least from the options market, that these reports could be pretty darn good. And so what do you need to look for? I think if you're looking for Microsoft, or what you're watching Azure cloud growth, if you're looking for Meta, it's a CapEx spending plans, and whether or not they're generating any meaningful revenue from that. So those would be the things that I think you really want to pay attention to. Whether or not that tips the scale for the rotation trade, I think time will tell, because even today, as I continue to just look at where we're seeing percentages of stocks above 50-day moving averages, where we're seeing best breadth and relative strength, it still continues to be in materials, industrials, energy. Those are the sectors that are carrying the load right now. And, Sam, we've talked about this before. I'm not positive that you can get new all-time highs with some sustainability if you don't get IT and communication services in there. And that's why this week I think is so important.
All right, well, so far, as you say, an 80% beat rate as far as these earnings are concerned. Let's see what Meta and Microsoft say tomorrow. No doubt a bit of a high bar, particularly given the CapEx sort of indigestion we saw last quarter. Really appreciate it, gentlemen. Thanks for joining me today. John Mazzola, Head Trading Derivatives Strategist, Charles Schwab, and Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research. Coming up, it's time for the morning trade. We'll take a closer look at health insurance stocks and bring you an example trade for United Health. Morning Trade Live, we'll be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, You can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
So back for Morning Trade Live, let's focus on health insurers. United Health, Humana, CVS and Elevance are all moving lower this morning after the Trump administration proposed keeping Medicare Advantage rates relatively flat in 2027. You can see how much that is impacting these stocks right now, down in double digits. We are seeing some heavy selling pressure this morning, despite the fact that actually we heard from United Health with respect to their earnings that this story is not helping. So these stocks are focusing more on trade. Now for a closer look at what is behind this move is Marley. Very good morning to you. Just walk us through the details. Obviously we first learned about this through the Wall Street Journal, but talk us through obviously the facts and some of the reaction we're seeing in some of these stocks today.
Right back up, just like I said.
We just showed on the screen that we are seeing a really negative reaction in terms of these healthcare insurer stocks. United Health down more than 18% right now. You also highlighted Centene, CVS, Humana. These are some of the other big insurers here. After the administration proposed nearly flat rates for Medicare Advantage. So Medicare Advantage is a privately run insurance program that now covers more than half of Medicare beneficiaries. So this does affect quite a lot of people. This proposal would entail that the net average payment only increase by less than 1%, 0.9% for Medicare Advantage plans in 2027. Typically, the next year is finalized in April, so not a lot of time to get this one hammered down if there are problems from the insurers. That number is significantly lower than what was expected from the street. They thought the agency would propose a rate increase of between 4 and 6% next year, and it's less than 1%. So a significant departure there from what was expected. Now, this payment rate determines how much the insurers can charge for monthly premiums and plan benefits that they offer, and then, of course, ultimately their profits. But CMS Administrator Dr. Oz came out and said that this is about making sure that Medicare Advantage works better for the people it serves. This is all tied to affordability. They say that by strengthening payment accuracy and modernizing risk adjustment, CMS is helping ensure beneficiaries continue to have affordable plan choices and reliable benefits. Now, you mentioned United Health came out with its earnings today sort of in conjunction with this announcement. They're saying that this notice from CMS doesn't really reflect the reality of the cost trends in 2027, and that it's not in line with what medical utilization costs are right now. They say they're going to continue to work with CMS to ensure an appropriate final growth rate calculation, but they are concerned about underfunding. As far as their EPS, came in beat by a cent, and their revenue was a slight miss, but most of the moves we're seeing today, Sam, are because of this announcement from the administration and a potential major hit to profits for these companies.
Yeah, I think it's interesting on a day when we get the consumer confidence out from the conference board dropping to a 12-year low this month. I mean, it's just how people feel about the state of the economy right now, as you say, as the administration is very much trying to address affordability right now. But thanks for getting us across the details this morning, Marley. I'll chat with you a little bit later on. Let's trade it now with Tim Bigham, option strategist at Pilot AI. Tim, it looks pretty ugly out there for some of these names in this business. How are you approaching your example trade for United Health, given that we also had earnings out this morning, but the market's looking past that? They're stuck on this Wall Street Journal story.
Yeah, absolutely, Sam. Looking past earnings, which were, tepid at best. Certainly a slight pullback on the revenue miss on earnings. Might have been expected, but today's news trumps all, no pun intended. We're back below that 300 support level on UHH, which has held for a very long time, and we're actually seeing implied volatility because of the news and the huge move down of almost 20%, as you were alluding to, spiking IV, especially in the short-term options. So I'm just thinking that, like everything else, probably some negotiation may be coming on this. So I'm taking a somewhat guardedly bullish stance for a move back towards that 300 now resistance level on UNH, going out buying traditional February 300 calls, selling this week's 300 calls, getting a nice term structure volatility. It's almost like you're getting the earnings edge with earnings already coming out on this trade, buying around a 40 IV, selling over a 60 IV, paying just under $5 on the trade. So I think, somewhere over the next couple of weeks, we'll probably get maybe a little retracement or maybe a little negotiation on this. Plus, we have the weeklies, 3 sets of them to continue to hedge or chop wood, as I call it, continue to defray that initial cost we pay on the trade.
Okay, so we are trading down 18%. No doubt one of the components that is dragging on the Dow this morning as we look at a mixed picture across our major averages today. A very sort of earnings-driven story type day, given that we have a very diverse lineup of companies reporting, not to mention the FOMC getting underway as well. How do you think about things in the market this morning?
This will be a very interesting week. I think the Fed meeting pretty much a non-event. Maybe a little jibber-jabber coming out of it after may rankle the markets a little bit here. But we're seeing, 20% of the S&P reporting and 3 of the big heavyweights, actually 4 coming out tomorrow and Thursday. So it'll be interesting to see the valuations at historic highs here. Earnings better be good and beat by a decent basis to kind of support the valuations. How the market reacts to the earnings on these names, the Microsofts, Metas, Apples of the world, I think will be critical going forward. Are these stocks finally officially cooling off? They certainly have gone sideways here, and will we get a pullback or not is really the big question. I think they really have to beat by a good margin and guide much higher to support the current valuations here.
Yeah, certainly looking for that next catalyst. No doubt some of our Mag 7 members might do that for us. But let's wait and see. Tim, appreciate the insights as always and the example trade. Tim Biggin there of the strategies of Pilot AI. Coming up, we'll take a closer look at the sectors on the move this morning and the news we're following in overseas markets.
Break out. If you can count to 3. Did you see how beautiful of a trade that was? How you can divide it up, make it look so pretty. I'm gonna walk it over again because this is something you got to remember. I'd even copy and paste it. So we had the pennant flag, and we called that out. And then we had this here, a consolidated area. When it pulled back, it created what you call a trend line, a pivot point. And that created a pennant flag, another pennant flag. So you had to break out there's the pennant, there's the pole, the flag pole, and then the pullback. So you've got the pivot point, and you've got the creation of a flag starting. So you want it to come back and touch that one more time. You pulled it out off 63. If you can count to 3, 1, 2, 3, boom! Oh, my bread. Hello, Mr. Coffee.
Percent of names higher. When you look at the sector performance, though, and your year-to-date so far, really only one sector is underperformed, and that's been financials. Conveniently, it's the worst-performing sector today as well, down about 1%, down about 3.5% on the year. When you look at information technology, before today, it was also down for the year. So going into some pretty critical earnings events, Sam, over the next several days for IT, but with it leading today up 1.6%, it has swung what has been a red start to this January in 2026 to a green January so far for IT.
That's interesting because it had a sort of rocky end to 2025, didn't it? And the financials you point out is quite interesting too, given, of course, there's been a lot of analysts out there quite bullish on the financials, given some of the stories in the market, like the steepening yield curve, but obviously some of the credit card policy headlines have been weighing on things. But you mentioned technology, our outperformer today, very much doing the heavy lifting as far as the S&P and the NASDAQ are concerned, managing to offset some of the weakness we're seeing from some of these earnings, these healthcare headlines. Talk us through the setup as far as Mag 7 ahead of some of these members that are going to be reporting in the next couple of days.
Yes, 6 of 7 are higher today. Meta is the only one that's under a little bit of pressure, and it's 20 basis points to the downside. Tesla is flirting with unchanged at the moment, so it could be red at any moment. But all in all, if you were to index this group, they're up about 1%. They're outperforming the broader NASDAQ 100, and they're outperforming the broader S&P 500 by a factor of about 2 to 1. And whenever you have that, when you have these names out in front, it's really difficult without some sort of a change to that performance to see the market go meaningfully red. So this is where I begin and end a lot of my day's analysis, and whenever you have these names stacking in one direction, the correlation is pretty strong as for where the market's going broadening wise after that.
Yeah, and obviously some of the news around Meta this morning is this deal with Corning, which is heading in the other direction, just fractionally down for that stock, Meta, in the trading action this morning, as you pointed out. Alex, really appreciate it. Thanks so much.
Meta.
For breaking that all
I haven't
down
looked at
for
Meta.
us. Turning our attention now to global markets, and it's all about trade. The EU and India finally getting a free trade agreement across the line in what's been called the mother of all deals. It's the biggest pact by population and was nearly 20 years in the making. The two sides will scrap or reduce tariffs on nearly all EU goods. Tariffs on cars will be lowered to 10%.
Well, why would Corning stock
European shares
jumps on deal with Meta?
India's Nifty 50 closing up 0.5%. Meantime, President Trump says he's hiking tariffs on South Korean autos, pharma and other goods, accusing Seoul of not living up to its deal with the US. The president says they reached a great deal in July and reaffirmed the terms in October, which capped duties at 15% in return for $350 billion in investments in the US. The South Korean Kospi, though, initially falling on the news, but then reversing course to another record high, closing
What
out
was
2.7% higher. It's up 21% year to date. Auto companies
I
like
can't remember what
Mazda,
Corning.
Kia, seeing shares
Oh, I know where
selling
to
off
find it.
sharply before paring those losses throughout the session. The small cap index trading over 1.7% to a more than a 4-year high. Coming up, it's time for Inside Out. We'll take a closer look at memory stocks ahead of Seagate's earnings and bring you an example trade when
GLW.
Morning Trade Live returns.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
We're back on Morning Trade Live. We'll get a closer look at the memory trade this afternoon when Seagate reports earnings. Check out how much these stocks have rallied just here in January. Do we need to remind you? Seagate, Western Digital and Micron are up more than 30% in 2026. But Sanders continues to be a rocket, up more than 100% in the last 3+ weeks. Wow, look at that. All right, let's go inside out on these memory stocks. Joining us now is Nitin Sacheti, founder and portfolio manager at Papyrus Capital. Hey, Nitin, thanks so much for joining me this morning.
Thank you for having me. Appreciate it.
We're going to get a first look at the memory space this afternoon. What are you expecting from Seagate?
I think it's tough. You know, I mean, I think when we originally bought the stocks, like you and I were talking earlier, there was, you know, the analysis was really looking at channel inventory and figuring out when inventory was going to decline, when they were going to start growing again, and the stocks were trading at 7, 8, 9 times earnings, 14 months ago when we started to get involved. Now it's really an AI trade for the most part, right? And now it's sort of determining the length of the sector. When I met with Western Digital and Seagate a few months ago, they talked about how now they have long-term agreements that give them price escalators out 12 to 24 months. So I think you probably have more stability of earnings, but we'll see, because even a small hiccup at this point will sort of create more volatility in the stocks.
What would a hiccup be? Because, I mean, these guys have tight supply.
Yeah.
They've got the demand. As you say, the AI data centers are sucking the oxygen out of the room. They're raising prices. You've got the South Koreans talking about 70% in Q1. They're trying to build out capacity. They reckon that they've got another couple of years now to go as far as, this situation, as far as the sustainability of, these high prices. What would be a risk?
I mean, I think it's really just expectations are that high, right?
Right.
That's what's priced into the stocks here. So if, gross margins are slightly below kind of the low 40s as expected, if pricing is slightly below, if they haven't rolled out some of the some of the hammer drives in terms of qualifying cloud customers. I think the point is that we still own the stocks, but the expectations are
I really love
high,
this.
so I think that's what would cause that slight pickup.
It feels like the theme that's emerging in this earnings season.
I can't figure out what I did different to this last batch of soup. But man, the gravy is so, it sticks to your mouth, it sticks to your tongue. I don't know what to say about it. I wish I could figure out what I did. I've done it a couple times, but this is, what did I do? Oh, the pressure. That's the trick. I forgot to put the pressure valve on it. And then when it popped, I went in there and turned it on. So maybe that's the secret. I might do that next time and see if I get the same results. Because I'm telling you, this shit, look at this. It just glumps together, and it's just perfect.
Just get you a hammer, pull one of those nails out.
Oh God!
And nail it in right here.
What the hell's he doing?
I'm right here. There's only one stud. Look what it does. Take your door. Everything vibrates. It's not strong enough. Here's how you fix it. Take you another stud. Put it right up against there. Put it flush. Grab your nail back.
Dude, you're always out of nails, man.
Awesome, it. Well, that's why I got these boots. Just get you a hammer, pull one of those nails out.
Oh, this guy's a nut.
And nail it in right here.
Hit the fucking nail.
Well, last case scenario, just take yourself a couple big lags and battery died. Sure enough. Just get you another battery. Already. Put another lag up here. And now, got a solid door. No more vibrating. That's how you gotta do it. Always professional.
Always professional. Very good.
Sit.
I'm getting ready to build a shed, so I'm gonna hope I can do it right.
the 410 strike call.
Little office shed.
Wide, neutral to bearish. Call vertical, collecting roughly. I've got 280 credit on here. It's probably trading over $3 right now, so you could collect a little bit more. But that takes your break even if you collect 280 up to 402.80 to the upside. That's over 6% above the current share price. So nearly that one standard deviation move that the option market's pricing in. You got a probability of finishing out of the money of close to 70% on that short 400 strike that you're selling in this strategy. I think one of the keys with these high-priced stocks, big moves, expected staying risk-defined on this. But break even at 402.
Pull back on PLTR.
I think the stock's going to at least consolidate, go lower, or hey, you can be wrong and the stock.
We're at a pivot point at an inverse head and shoulders, PLTR.
All right, well, we've got Seagate. We're sitting up 6%.
Attention, deficit disorder. Right to the penny. Head and shoulders, inverse. Watch it reverse. Got to break the 200 to come back up to a head and shoulders. Just like that. Professional. Nothing construction. I would start saying that. Oh, I do want to. Something happened the last couple of weeks that kind of freaked me out. I met this chick and she kept saying perfect to me. Perfect. Perfect. She was a sales counter chick. I never heard people say that on the sales counter. Perfect. It kind of struck me a little bit. So for the next couple weeks, all I could hear from the counter people was perfect. I'm going, what the heck? I'm not used to hearing perfect from these people. I haven't heard it for a week now. Everybody I know, we're saying perfect. United Healthcare is still down there. Coin hit the RITM back at 1205 again. Randy. Excuse me. I have to wash this down. I'm getting choked by my own soup.
Everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children.
Nice
They've always
house.
been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I think it might be the best soup I ever made.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden coming to you live from our Chicago headquarters. We've got a lot in store for you on this show today. Of course, earnings season continues.
69.75s or 1,300.
In our 360 spotlight and discuss the outlook for the sector. Also, Micron's price target raised by Mizuho. Shares are creeping toward another record high.
Perfect.
George Tillis will take us through that. Trade for us in our disruptor. And Boeing is lower after its earnings report this morning. We'll take you through the numbers and highlight some of those key areas to keep an eye on in our 360 round. Before we get to all of that and more, though, let's take a look at how the markets are shaping up as we start this Tuesday morning. A bit of a split picture here. The S&P trading 0.5% higher at 69.85, getting closer to that 7,000 mark. The Nasdaq at 25,955. That's almost 1% higher on the morning. The Dow lower though, trading down 3 times.
So let's look at this.
49,048, and the Russell 2000 marginally unchanged, but on the negative.
I want to point this out to you.
58. The 10-year just ever so slight.
So we had the triple top break out of the symmetrical pennant flag. It broke out and it pulled back and hit the 21. Now, when it did that, it created another pattern. The same thing that we called off of here. You take and put your trend line right there and run it straight across to that right there. So let's say I'm in the trade. And I want this thing to hold. I want to hold it because I think it might break out. So I'm holding my position, or I sold it at the double top and wait for the pullback. So if it doesn't hold this support line right here, it becomes bearish, and the next dip is right down here. You see what I'm saying? That previous resistance that we broke out of. To stay bullish, we need to stay above that trend line. So good. I'm telling you, I've never tasted any soup that good. Screw the hot chocolate, Angel. Let's have some soup.
To meet that increasing demand, and of course sort of where the policy headwinds are shifting for companies like this. On those lines, they did say they mitigated about 40% of the $3.1 billion in gross tariffs from last year, and also approved a $6 billion share repurchase authorization, which probably helps that EPS story and certainly helps the
triple top
today.
It certainly does. And it's interesting to see, you highlighted it is a bit of a mixed report. It was a slight miss on revenue. Some of the numbers weren't ideal, but very interesting price action we're seeing on the wake of some of these reports, because some of them have great numbers, great guidance, and move downward. But GM's story is a bit different here. As far as how analysts are responding, I obviously see how the market's responding. But if we had any analyst commentary?
Yeah, there's been a ton. I'll give you just a few high level. One from Piper Sandler. This is Alexander Potter. GM executing at a high level, and in our view, this being Piper Sandler's, investors should own the stock. And then everyone's favorite market bull, Dan Ives, weighed in, saying, hey, the print included a slight top-line miss. It did include a strong bottom-line beat, and said that the guidance, particularly because of the impairment charges around the EV business, is good and yet conservative, but saying, quote, GM continues to navigate this difficult environment flawlessly to deliver strong bottom line returns with significant cash flow. So again, Dan Ives weighing in, optimistic.
Dan Ives.
$95 price target with an outperform rating.
All right, and that's still higher than where we are right now, even with that 9% move to the upside. Thanks to Alex Coffey, co-host of Next Gen Investing, for breaking down GM's earning for us and the move we're seeing in the aftermath, though. I do want to transition to our next guest. Joining us now, Samuel Dyer-Bakerly, founder and private wealth advisor at Generation Capital Advisors. Samuel, great to have you on. You know, I saw your notes that you sent over, and I love how you phrased it. You say you are a proud bull, but not a raging bull. So you're constructive, not euphoric. You know, what does that mean for investors right now?
Well, it's good to be with you, Kaylee. And yes, I wish we could continue the raging bull as we have the last 3 years. But what the proud bull means to us is we think we're in the 4th inning of a historic secular growth cycle. And believe it or not, the number one catalyst in our mind is going to be 2 25 basis point Fed cuts by, I can't believe I'm saying this, by Rick Reeder. That is going to be imperative to stabilize the 10-year bond, which is going to dictate how 2026 performs for equity investors and candidly for retirees in managing real returns on the fixed income side of their portfolio.
Rick Reeder, you think that you're going with the markets here, the prediction markets, and I know that he's been rising in the prediction markets. What makes you confident that it will be Rick Reeder?
I think we need stability and credibility, and let's be candid about what's going on with the White House and the Fed. I think Rick Reeder brings that respect from the street that he's going to do what's in the best interest of Americans and managing, a really challenging proposition, which is rates and employment. And, I think a lot of folks tend to forget where we came from 2020 to here. I think that we've done a decent job of navigating the Fed to here, but now it's going to be imperative for what the next 5 years look like. And those are going to be innings, 5, 6, and 7 in our view. And it's going to be imperative that we have somebody that commands respect from the street and can stabilize that 10-year bond, because if we get lowering rates and a decoupling of treasuries to the upside, that's not going to be pretty for investors and especially retirees.
And in your base case, do any of these rate cuts, these 2 that are in your base case, happen before we get the new Fed head?
Those are going to be made by Rick Reeder in our mind.
Okay. All right. So as we look at this, and you're proposing that we have 2, they're coming in the latter half of the year then, how would you go about positioning in this? Are we broadly positioned? Are we focused in mega cap? Are we looking at mid and small cap? Where's the best opportunity right now?
Kaylee, I think it's important to take a step back again. What have we learned for the last 10 years? I was thinking about this morning. Remember the FANG, right? Everybody hated the FANG, and then it was the FANG AA, and now it's the MAG 7, and everybody hated that. And, I tell investors and clients every day, let's avoid the silly, multi-factor, crazy ETFs. We want to have a globally positioned portfolio, and you're seeing that year to date in small, mid-cap, international, and emerging markets. Our view is hold steady on your international allocation. That's going to be a ballast for diversification from the U.S. On the EM side, there's a really compelling story there with dollar devaluation, diversification from those mega cap names. And don't be shy about small and mid caps. There's a lot of tailwinds right now in the U.S. economy, combined with OBA being built in, deregulation, onshoring. So I think that you want to maintain that global diversification. And, we would tell investors to stay away from things like equal weight. That's been a popular trade to talk about in the media, but over the long term, we believe that's a bad trade. We actually kind of refer to that as more of a kind of, a participation trophy trade. We want our winners to win and our losers to lose.
And as we
God,
look at
don't you want your losers to win?
In emerging markets, are there particular sectors that you like, or are you sort of
turn them into winners
across all?
Yeah,
what kind of CEO are you?
The compelling thing is to find a space, but that broad-based exposure. I think in emerging markets, there's a case to go EMXE, excluding China. That's, if you have a particular view on dollar exposure. But we tend to like that beta exposure. I oftentimes joke with our mainly U.S.-based clients, can you name me 15 international stocks right now? But we prefer that broad-based beta exposure. EM. You can kind of pick and choose your battles. Obviously, Korea and Thailand look compelling. There's really great diversified AI exposure there. But we're telling our clients...
Are we breaking out this flag again?
We're ticking up that exposure going into this year, and we have.
And as we're still in in the first month of the year, a lot of the conversations I had, particularly in the first half of this month, were about outlook for 2026. And a constant conversation has been around this potential for a pullback. Lots of people predicting a pullback, a variety of sizes and how big that pullback might be. But what's your thought on that? Are we ripe for a pullback? And if so, how big might it be and when is it coming?
Well, I think we are. I think that, 5 to 15% pullback, late spring, early summer wouldn't shock us. With that being said, I wouldn't recommend raising cash in preparation for that pullback. But markets like to test new Fed chairs. And what I would tell, your listeners out there is if you have cash, the number one thing you should be looking to do is put together a plan to deploy that cash. So let's look back to last April when everybody was freaking out and thought the world, you were never going to be able to invest again. People were raising cash, and some people unfortunately missed one of the greatest market return recoveries of all time. So if we have that opportunity, we're telling clients, if you have excess cash or if you're an accumulator, be prepared to put money in the market. I always joke with folks, if we get a 20% pullback, we're buying stocks. If we get a 30 or 40, which we're not predicting, but we're buying stocks on margin. You want to capitalize on these generational opportunities when they present themselves. And, in a midterm year, there's always more political rhetoric. Everybody's trying to find their base and see how far, they can go. So I think additional rhetoric plus new Fed chair is going to provide a prime opportunity for investment for investors.
All right, let's talk about fixed income here because that's a big part of this component here as well. For retirees, a lot of them saying that it's difficult right now. And you even make an argument that fixed income isn't truly fixed, nor is it actually income. So walk us through that and also how retirees should approach the fixed income space right now.
Yeah, it's really hard to get excited about 3 and 4%, but what we're telling retirees is exactly that. Fixed income isn't fixed, nor is it income. Now, we look at fixed income as a ballast, and what, to the investors out there that are being pitched, a lot of products are coming out right now. You're seeing a lot of buffered this or hedged this. You need fixed income in times of trials where you can have something that performs inversely to stocks. Now, in 2022, things decoupled, everything went down at the same time. We're not forecasting that. You need something in your portfolio that will go up when things go down so you can rebalance. How do you approach that? Our approach is kind of barbell it. Hug the belly of the curve with shorter dated bonds, which, could be a little more expensive, but give you kind of that freedom and lower volatility, and longer dated bonds to hedge you. For clients in high tax states, long dated.
Yeah, I'm looking. I got a necklace, a silver necklace with a silver pennant, and I woke up last night and the pennant fell off my necklace, and it needs a little clamp or something to hold up to the necklace. What do you call that thing? That connects the necklace to the. A bail. Do you have any of them there? In a silver? Yeah, it's just a silver necklace, probably 1/8 inch. Oh, it's a snap-on. You.
So you have a bail that snaps on?
Well, you just go back there and click it together. Not the bail, but.
No, it's not making it yet. I need more information. You can bring that in here, honey. We'll look at it.
But you do have some of them things?
We do have jewelry findings.
Yeah.
I don't know if we'll have that because it probably will be impossible for you to describe it to me.
Oh, okay, yeah.
I can make sure that you have it.
Yes, ma'am. Yes, ma'am.
But we'll be happy to help you with it.
Okay, thank you.
Thank you.
Bye. That's a very bullish pattern. God darn. Get ready to break.
iconic trading floor in the world, this is Opening Bell with Nicole Petalides. Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Aw, she's got your smile.
Carl.
Yep, your number one broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades for you. Kevin Green will take us through the charts. Here to take us through the trades is Scott Bauer, the CEO of Prosper Trading Academy. Great to have you both with us today. Scott, would love to start with a big picture thought on the market action. We've got a split market right now. We had some mixed earnings this morning. We'll get the Fed decision tomorrow. Could be a big week here.
Absolutely, and what really stands out to me is the resiliency in this market, because I haven't seen a lot yet, at least from earnings, to really, give the catapult that this market is kind of showing right now. But listen, we've got the big guys coming up, this week, next week, so that can really be a turning point. But boy, this market has been incredibly, incredibly resilient.
Yeah, and I want to move right into your first pick because it is a bold choice here. I talked to Sam earlier this morning about the healthcare insurance stocks all moving sharply lower, and you've got one of them. One of the biggest moves to the downside here, Humana. They're down 19.5%, Scott. So, is that a part of this play here? Because are we in a huge dip?
It is part of this play, and going back in some time, a few years, the 200 to 205 area in Humana has been some big support. So I love actually this opportunity. Sure, the catalyst is news that's not great for the industry, but I'm okay. As a trader, I want to try and take
NVIDIA broke out, new high.
When we talk about this potentially being a risky trade, it's only risky because the stock is in the news and the stock has fallen so much. It is a completely defined risk type of trade that I'm putting out there. So what I'm doing is I'm selling next week's 210, 205 put spread. I want to collect $3 on that. Now the stock has to come down back a little bit. It is rallying a little off its lows today. If it comes back down there, I'd love to sell that at $3. My break even on this next week at expiration would be 207. But again, completely risk defined, because if Humana continues to go down, the spread can only be worth $5. I have $2 worth of risk in it.
All right, KG, as we take a look at the technical...
Man, this is an all-time low, a 3-year low.
Move to the downside. Are you seeing support?
I like this.
205?
Yeah, Scott's right. We've actually seen this over the last year or so where the stock hits around that 205, 210-ish area, and buyers immediately step in. Actually, like the next day, we actually do see a bounce to the upside here. So Humana could actually have a little bit of a retracement bounce, maybe try to recover some of these losses here. But if you kind of look at the technical setup, it actually has been in this kind of flagging formation, if you will. Now a little bit more than a flag, a very wide channel that's been taking place. And right now we're getting closer to the lower end of that channel. You can actually look at around 100.
So I'm gonna write
that key area of support for.
Now look at this. I drew this up. You see the higher lows here? You see the higher lows in that channel? See, this is a bear flag. But you got the higher lows. See, this thing should have easily come back and pulled back, but when you got the higher lows, that's bullish look. That's why I said this looks bullish, ready to break out, because they got these higher lows here. And now if this was doing this with lower lows, I would be a little bit more, I'd have to wait for a confirmation for the reversal off the 50 for a double bottom. but I'd have to wait for a confirmation. But here I would go ahead and take the trade as long as it held the 21 or even the 9 all the way up. It looks very bullish. That's why I said this looks very bullish because of that higher low. Understand? Say yes. Bear flag on the SPY. It's hard to say. I mean, see how it goes up. It pulls back. So this is coming up. No, this ain't no bull flag. This is a wedge. It's a wedge. Not really. They're just bullish because it's, I mean, this looks just so bullish right now. And here you are with that stupid yin yang again. So support's going to be off the 50 if it pulls back. And that's still at a pivot point in the channel. You got a triple top, 1, 2, 3. So, you know, that's kind of like an exit idea. Unless you think it's going higher. And look at the clock, see what time of day it is. See if you have more success from this time frame, or you have more success in the early morning, or better success after lunch, or what's your best hour of the day. We got a double top on IWM. Oh, God, Jim. Kind of things are moving slow, ain't they? The volume, watch the volume. That's what I got stuck in that trade last night, because the volume. I really made a bad call yesterday into close. I have a day like where everything's fucking, I'm winning this. I got it. I'm at 4 trades, great trades. I'm up $1,500, almost grand, $2,000. I get a little overconfident. And then on that 5th trade, lost $900. Kind of hurt. When you're sitting here listening to a guy nailing one trade after another, and then you finally get enough courage to follow one with me, and that's why I got to read these patterns and see what I'm seeing. Because I'm waiting for this pullback. Then I'm going to see if that holds. This is the SPY. This is the one that you're talking about in the room. What do I have to do tonight? Oh, I gotta go get, I'm gonna write that down so I won't forget. Trash bags. Trash bags. Glass cleaner. And toilet bowl. Randy still here? Okay, now, R, cat face. We're going to find out now if this thing going to hold or not. It needs to, if it's going to drop, it's got to drop below 696. Understand 700 is silver. Silver hit $100. It's up 300%. Would you keep holding that, knowing it's up 300%? And it hit that $100 level? Or just keep holding it for until whenever you retire? I've been watching a lot of these gold stuff, commercials, and they're really, a lot of people made a lot of money that were invested heavy in it.
You just mentioned Exxon's capital spend. That's been going down, and it might flatten out next year. But capital spending has actually gone down in the energy sector. That's really has allowed the entire sector to really repair its balance sheet because of this excess free cash flow that's available now, and then obviously pay high dividend yields. And buy back stock as well. So the other part of the story in energy that you don't see in mega cap tech is stock buybacks and actually dividends. You know, you look at Exxon, you look at Chevron, they're 4.5% dividend yields. They're going to grow the dividends, and they've paid dividends for multiple decades in a row.
And so with Exxon, you mentioned, stock buybacks. They've mentioned as much as $20 billion of stock buybacks across 25 and 26. How sustainable do you think that is at current commodity prices? How much does that play a role in them being able to execute that?
Yeah, that's a very good question. I think the other thing that's underappreciated in the energy sector is yes, commodity prices have come down. Oil was down, 20% last year. But natural gas prices actually moved up. But that said, Exxon, Chevron, all of these U.S. oil and gas shale producers have done a phenomenal job of improving the efficiencies at which they drill for oil and gas and lower the cost. And so what that does is allows them to continue to generate some really good free cash flow and still have a free cash flow yield, like I said, above 5%. For both Exxon and Chevron, when the rest of the market, including mega cap tech, is below 3%. They can do that because of these efficiencies that they've been able to create, and will continue to sustain, not just for a couple of years, but over a longer period of time. So they can continue to generate that free cash flow, even in this lower oil price environment.
So, Rob, with that free cash flow yield that's above 5%, which is well above the broader S&P 500, why don't you think the markets are rewarding that more?
Well, that's a good question. I think historically investors have underappreciated energy in general, but the volatility, I think, is the other thing that investors have not liked it. And look, we got to be honest. Look, mega cap tech has been the place to be, as you highlighted, Marley, for the last probably more than 3 or 4 years, several years, right? And energy is not. It's been an underappreciated sector. But energy does go in cycles, and we've been investing in energy for 30 years at Tortoise. We think that energy has its day. It's really, really important. It's really, really important, and that's going to become even more prevalent as you highlight. The fourth industrial revolution evolves, and electricity becomes so important, and electricity becomes the new oil. That's going to be really important. It's going to highlight how significant the energy sector is, and we'll see in particular with Chevron when they may announce a deal where they're on Friday where they build for a major hyperscaler natural gas generation that's backed by a major hyperscaler, and it's called behind the meter power. You're going to hear more and more about that. Exxon might talk about it as well. All these things are really, really important. Obviously, we'll talk about Venezuela, maybe even Greenland, right? Those will be other areas that Exxon and Chevron may be looking to invest in the future as well.
So let's talk about those. We had Chevron, they have a deeper exposure in Venezuela right now. Exxon exited years ago. But in terms of Greenland as a potential opportunity here and Venezuela as an opportunity, how much are these going to be near-term drivers? Because what I'm hearing in conversation is that if you want to go for that play, it's a long-term play at best.
Well, I'd agree with that, Marley. I think you'll hear Venezuela will definitely be talked about a lot on these conference calls on Friday for both of these CEOs, for Mike Wirth and Darren Woods, because obviously there's a massive amount of oil resource in Venezuela. But as you highlight, really right now, Chevron is the only U.S. company operating in Venezuela. And so Chevron probably is in the pole position or maybe in the driver's seat about investing more capital. But look, before anybody invests in capital in Venezuela, you're going to need political stability and clarity. And
political stability? What the hell is that?
That will be important, but it's definitely something that they're looking at. Greenland, that's a different story. A little bit. That's a lot further out there. There's probably some resources. There's probably some oil and gas resources. There's probably some rare earths. Look, I think that if anybody's going to get involved, it's going to be companies like Exxon and Chevron because they have the biggest balance sheets. But more importantly, they have the expertise. They have the engineers. They've done this before, and they're really talented and will be the ones that will be looking to explore into new uncharted territories like Greenland for oil and gas and rare earths.
And Rob, we're very tight on time, but I do want to sneak in one more question if you can answer it quickly for me. Bottom line, Exxon, Chevron, or some of these picks and shovel names, which offers the best risk reward right now?
Yeah, well, I guess what I would say is we like the energy infrastructure names at Tortoise, like a Williams, because it's got more pipeline exposure, and so the cash flows for the pipelines are more stable and consistent and steady. And so Exxon and Chevron will still be impacted by the volatility of commodity prices, but the picks and shovel names like energy infrastructure, that will be not as impacted by the volatility of commodity prices.
Great insight there, Rob. Thank you so much for being with us to highlight energy and also preview some of these earnings we'll be getting on Friday morning from Exxon and Chevron. That's Rob Thummel, Senior Portfolio Manager at Tortoise Capital. Coming up next, we've got the disruptors. We're taking a look at Micron after a price target hike at Mizuho.
Patience. Oh yeah. Hey, hey.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets. Welcome in Nicole Petalides, host of Opening Bell and the Watch List. Good morning to you, Nicole. Love the bright pink today. So cheery. It's very cold here in Chicago, so I will take the brightness anytime. As I'm looking at the board here, we have seen a bit of a turnaround in the Russell since this show kicked off. You know, what are some of your takeaways from the earnings we got this morning, the market action we're seeing, some of the data?
I think I'll start with the fact that we hit an intraday record on the S&P 500, which was something we anticipated early this morning on the show when we were talking with Kevin and our gang, and just saying, look, you know, keep an eye, you might break the record, and we did. In fact, we got to 6,988.72, so 2 points higher than our prior intraday record. So this would be right here.
Oh, that's that 100 SMA.
Kinds of levels. You have seen names like Corning, HCA Health, General Motors, Seagate, Western Dig leading the way. We'll be hearing from Texas Instruments and Seagate this afternoon. In fact, our guest, Ken Polcari, picked Seagate, Texas Instruments, Western Digital, and Micron as his picks today. So you know that memory overall is still an area that's very much in demand. We'll talk about American Airlines in a moment, but I think the big picture here is that people are looking at the earnings thus far, and you've seen about 82% beat rate, even though we see some selling that happens after that beat, to the tune of almost 1%. So, you got to knock the cover off the ball to get an up arrow to a certain extent. But we are 4 days in a row of gains. We have the big names, Meta, Microsoft, Tesla, IBM, Apple, Caterpillar, MasterCard, all coming up in the next couple of days. So be prepared
Is that
for
EMA
that.
or
Of course,
SMA?
Tomorrow, Federal Open Market Committee will hear from Jay Powell
Simple.
at 2 p.m. Eastern Time. Special show here on Schwab Network, of course.
Yes, lots of potential catalysts coming tomorrow, of course, but we are seeing American move to the downside. Got some similar commentary about the importance of premium for them, much of what we've heard from the other airlines who've reported, but seeing the move, close to 4% lower. Can you take us through some of the key numbers here?
Yeah, I think people are surprised that American did as well as it did because the government shutdown really hit American Airlines pretty hard. I mean, they noted that the government traffic was down about 50% in the fourth quarter, driven by the government shutdown. So they missed on their quarterly numbers, but still managed to give an upbeat revenue outlook. And that of $200 million, despite the $200 million hit that it's taken from this winter storm. So that's another thing that's sort of a wild card. But they did give this upbeat revenue outlook. The quarterly numbers, revenue rose 2.5%, but missed the estimates. Also, we did see that they talked about the cancellations, and the cancellations are, you have thousands, and so there could be record cash refunds that are needed. So this impact from the storm, Fern, it had a name, is sort of a wild card in the big picture. To your point about the premium, I'll start with the main cabin.
Damn it.
And they are seeing growth, and they expect it to be strong year-over-year improvement in 2026.
Phone.
Even better is the premium cabin. When you look at the premium seats, they expect the premium seats to outpace the non-premium offerings in the picture, not only this year, but also through the end of the decade. So people are willing to pay up for a more comfortable ride. And they did give this upbeat outlook, but they still have this wild card like many of the other airlines. What will they do?
At least I'm getting my exercise today.
Because of the winter storm. And another government shutdown, which is looming now. It hurt their numbers in the last quarter. Another government shutdown, theoretically, could hurt this quarter, right? If it's a long one. Marley?
Yeah, certainly could. And that winter storm we just had with all of those cancellations, we'll see how that plays in. But Nicole, thanks for breaking that down for us for American Airlines. They are trading about 3.6% lower this morning. That's Nicole Penelides. Now it's time for the disruptors. George Tillis, our senior markets correspondent, here to talk about Micron today. They got a price target hike from Mizuho. They're up almost 5%. What can you tell us about the note, George?
Yeah, this one just keeps going, Marley, and there's a pretty good rationale as to why. I'll explain in a sec. But as Micron is continues to the upside, there's certainly both a cyclical aspect to the business in traditional DRAM and NAND flash memory, but there's also secular demand associated with, of course, computing and networking, storage, mobile, and the embedded markets. So if you look at Western Digital, Micron, Seagate, SanDisk, just to name a few, companies that are in this deeply cyclical space, all these names have been tremendous performers over the last year. Micron is, of course, fitting that bill. Some of the analysts are still quite bullish because if you look at some of the earnings estimates going into next year, they're still quite good and it's quite promising. Mizuho actually increased their price target to $480 from $390. They maintain an outperform rating. They still see the secular tailwinds from the legacy DRAM and, of course, the NAND flash memory. If you look at their projections in terms of price for full year 2026, which we're in right now, they're expecting, at least in the NAND aspects of the technology, 330% increase in price. And even next year, they're still expecting 50% increase. So that's 2027 versus 2026. And irrespective of the multi-100% increase in price for Micron, it may be justified considering if you look at the trailing earnings for the business last year published around $11.28, or at least in the last 4 quarters. You fast forward to 2027, they're expected to earn $40 a share. So the stock, relative to the current price, is only trading around 10 times next year's earnings. One would say that's, of course, a discount considering the growth rates that they're manifesting. You just look again last quarter as the reported earnings, EPS was up 156%. And if you look at sales growth, it was over 57%. So this story continues to manifest pretty incredibly for Micron going forward.
So knowing that most of the analysts are bullish and we've seen them rise about 350% in the last 12 months, how would you structure an example trade here, George?
Okay, we're coming down a little.
So there's a tough one.
I've been waiting because this is a bear flag.
It's just, outlandish. But you consider the cyclicality of Micron and, of course, the semiconductors. They're typically 6-quarter cycles. So if you anticipate some sales growth deceleration going into 2027, this stock price
We had a double top.
in the next 2 quarters going higher. So with that said, I'm going to structure basically a long call synthetic trade here. Going out to February with about 20 days to expiration, I'm basically going to buy a 405 call, and then simultaneously I'm going to sell the 405 put. It's a bullish trade, and altogether it costs you about $3.50 a share or $350 a contract. So it's a trend continuation. It's still rising relative to the 10-period moving average. Break even on this trade is 408.50, and keep in mind, we're basically buying a call at 405 and selling the 405 put. And this is going to cost you around $3.50. If you just wanted to buy an outright call at the money around 405, it'd cost you around $29. But the risk is you would be assigned shares at 405 if the stock ends up being lower between now and expiration. So you have to be willing and able to take ownership of the shares at 405, but your cost basis is 408.5.
All right, and right now, Micron, even with that move to the upside of about 4.5% right now, trading at 406.93. George, we appreciate you being with us to take us through this latest note from Mizuho and also the example trade on Micron. That's George Tillis. Coming up next, we've got our 360 round. We're going to take a look at Boeing and its outlook after the company reported earnings this morning. Stay with us.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trade brilliantly. Trade with perfection.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market
perfection.
coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad. I have a question for you. When did Granddad first start investing?
Granddad was before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market, weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the 360 round. For that, let's bring in our next guest to discuss Boeing. The company posted earnings this morning. Let's dive into those numbers. Joining us now, Michael Boyd, president at Boyd Group International. Michael, thank you for being with us to take a closer look at Boeing. Moving higher now on the morning. We are close Americans to 2%. What are some of your takeaways from the report we got this morning?
I think most of the turmoil is over at Boeing right now. They're getting their production line up. We have a new FA administrator who's not taking any nonsense from anybody. That's a good sign. So on the surface, Boeing looks like it's gotten back into sync. Now, it's lost a lot of business. It's given Boeing or Airbus some jumps on them. And again, the real weaknesses of Boeing going forward will be its product line, which is getting weaker and weaker. So it's good news, but it also means Boeing still has a lot in front of it.
And Michael, let's talk about the product line and why you think it's getting weaker and weaker. What are some of the issues and risks here in terms of their product lineup?
Well, first of all, their main bread and butter is the 737. They can't do anything more with it. They can't change a door handle going forward. That airplane is at the end of its development cycle. Airbus, on the other hand, has some growth left with this A320 platform, which it competes with. But more importantly, Airbus bought the C-Series, now an A220 platform from Bombardier. They just sold another 100 of those. That's going to be the future. Boeing, we had a Brazilian airline that ordered some Boeings, but they also ordered some Airbus A220s because Boeing has nothing along the lines of a smaller narrow-body jet. Airbus does, and that's going to be a problem for Boeing over the next 5 years.
And how much are these certification delays with some of the 737 models adding to this increased competition or even tilt towards Airbus?
Oh, yeah, it's absolutely an issue. I mean, today Airbus has something called the A321 XLR. It's basically bigger than a Boeing 707, burns like half the fuel, and it's a wonderful airplane. Boeing does not have anything like that. The 737-10 is still delayed for certification. The 737-7 is kind of a loser airplane. Boeing sold some, obviously, to Southwest, but other than that, they've got nothing down there. So Boeing has got to figure out what it's going to do, but the certification issues, I think, are being solved, but it still has a demand issue because they should have had the 10 out 3 years ago, and it's not out yet.
That's right.
And let's take a look at some of their numbers more specifically. They had their second straight positive quarter, which
oh gosh, Jim, you're not watching.
Coming in at $375 million, which was better.
Ladies and gentlemen, prepare ye.
How important is that for credibility right now for Boeing?
Oh, it's incredible because now they're out of the darkness. We see a stable company going forward, and it's not all gloom and doom.
I like it a lot better down here.
I think are outshining Airbus going forward into the future.
I'm gonna wait.
Have some follow-ons, and they got some.
I'm gonna wait.
But these numbers you just showed, that shows that they are back to being more of an airplane manufacturer.
I'm gonna tell you why I'm gonna wait.
And their tanker program, I know we talk mostly about the commercial aviation business, but this defense component as
actually
well
it's gonna be raised
took
up just a
another
little bit,
charge,
maybe.
Nearly a $600 million charge. Investors told this was a one-off. One, do you believe that to be true? And two, I guess, is the more important conversation here, does the broader market just look beyond that because Boeing is really thought of now as an aviation play?
It really is. I think, the poster child for this is the new Air Force One. That's, I don't know how many years behind.
Okay. Being in the now. We're at a support right now. But I'm in the now.
Contract for the new F-47 fighter simply to...
I want to be in the now here. So I'm looking at $69.90s. Get rid of the 69.75s. So this is my scenario. We broke out of this rising wedge. We had a double top and it pulled back to the 63. So this is the first support at 69.90. I look at the clock and it's 11 o'clock. I look at the volume and it's real low. So I'm going to be patient and wait for the pullback and see if it happens or not. And if it decides to break out, I'll wait for it to break out of this top channel and then take the trade. But then it'll be a triple top. So you kind of want to see what's going to happen at that triple top if it doesn't hold this 63 EMA off this double bottom. But I got an alert set for the yin yang. So if a phone's, if it says it's restricted, what's that mean? On a phone. I didn't answer it. Is it someone from jail? Restricted. I just don't know if I should have answered that or not. Restricted on a phone call. Let me Google it. Learn about restricted settings. A restricted phone call occurs when the caller initially hides their phone number from the recipient's caller ID. Used by telemarketers. Okay. What? How'd I get on her? What is? We went down below, so we didn't hold support. I'm still going to wait for this right here. We're at the double bottom, triple bottom actually. Right there, triple bottom. Josh.
Josh.
Yeah, this is Jim.
Hey, Jim. Hey, we got a leak over by the wall. I mean, it's kind of by the by the sink. You know, that one that's right there by the
Where upstairs?
Upstairs, yeah.
By the sink in the CEI?
It's in the cubicle by the sink. But if you want, I'll shoot you a picture here real quick.
What do you want me to do?
I don't know. Who do we call for that? Who's the building guy? Do you know? Or
Oh, this is Josh that works up there? Yeah. At the IRS, okay. I thought it was my boss, Josh. Ashley would be the one to call.
Okay.
You know her? Is it a bad leak?
I mean,
Is
there's water on the desk, but you can see where it's got water on the tile up in the corner. So it's not like pouring; it's just periodically dripping. But
Well,
there's definitely.
I'm going to run down there and look at it real fast, and then I'll call her up.
Okay.
I'm going to see where it's located at.
Yeah, no problem.
Okay.
All right, thanks.
I'll be right down there. Yeah. Bye. I fucking hate winter. Ugh. God, it's been one hell of a year. I'm going up to the IRS building. They say there's a small leak upstairs. I'll go check it out, send you a picture and see what it's all about. CSI department. Fuck. When I build my house, or whatever I'm going to live in, I'm going to make sure that thing's watertight, well insulated. I mean in 40 below weather. Should I wear my boots? God darn it, Jim. These shoes ain't gonna cut the cake. Here I am getting ready to make big money. I'm at my support level. We'll see what happens if it bounces off that red line. But I gotta go do a thing.
Long way into the earnings event, so I wasn't surprised that the stock, was trading lower after those good numbers. But even that, some comments from their CEO has the stock up on the day now. So pretty good news and holding these levels for Boeing. If you're a Boeing investor, that's a pretty solid day because a lot of people thought it had run a long way in earnings, and then, like I said, without that sale, they lose money on this quarter, Diane.
Even you, Kevin, I remember you had that question because I know you had been optimistic about Boeing from somewhere during last year.
into this year, especially like with Kelly Ortberg taking the reins there. But I remember you had the question about like how shares they have, had such a strong performance, the bar being higher going into its results. It looks like, again, that the street is like, okay, we're fine with this. We're happy with where things are. Was there anything that gave you kind of cause for, not concern, but like, okay, we're on the right track, but it has moved high?
Well, when they had a miss last quarter, remember, the stock got hit hard. The stock got hit from approximately the levels of 225 down to 170 in the high 170s. So they really hit the stock hard, despite a lot of good news, but they took a charge, right? And so this was, they would have lost money, but they had, a sale to benefit from. So I just think the free cash flow story is a good story. The fact that they're still getting orders. I think that Ryanair yesterday, I thought that was a little indication into Boeing. Ryanair yesterday on their earnings release said Boeing delivered more planes to us than we thought they were going to, so they got to up some of their numbers. So I think the overall picture for Boeing is getting better. And remember, yes, you look at the one-year chart and it's rallied a long way, but this stock used to trade $450 years ago before those two crashes in 2018 or 19. So, I mean, this is a company still trying to get back some of its mojo and trying to get, remember, when they're all said and done, these planes will be the most scrutinized planes in the world from the FAA. So, all things considered, this new CEO, Kelly Ortberg, has them on the right path, Diane.
Oh yeah, it definitely does seem to be an execution story, and they still, to me, they are certainly still heavily under the microscope, especially with the regulations around inequality control that was instituted as a result of the crashes, the other issues they had over the past several years. But once again, shares being rewarded with an advance today higher by 1.5%. All right, turning from the skies to the ground, we got General Motors. That's rallying big today. It's been interesting to see this one because throughout the day it's progressed higher. They beat expectations with their most recent quarter. They reported earnings of $2.51 per share on an adjusted basis. Guidance looks good. It is a 25-year high right now for GM. Tom, it seems to be all systems go for this company, and because we already knew about the issues with China, that seems to be in the rearview mirror. What's your thought, Tom?
Yeah, I think if you take a look at it, they missed a little bit on revenue, but then when you raise the quarterly dividend 20%, you announce this $6 billion additional share repurchase plan. Their actual number of share float actually came down over the last quarter also, so that's a benefit for them moving forward. They did say operating profit margins are supposed to increase in the U.S. up to about 10%. They're starting to make inroads back into China. They had some disruptions over there recently. So yeah, it seems to be that they're kind of hitting on all cylinders at this point. And I think what some of the potential upside that we've seen, you mentioned, is we're hitting levels that we haven't seen since May of 2000 today, is the fact that, the tariff impact that the company kind of came out and guided towards, $750 million to $1 billion for Q1. 2026 tariff impact, they're budgeting for $3 to $4 billion. What if these tariffs come off? I mean, that's going to be a definite bonus for this company moving forward. But CEO Mary Barr came out and said, hey, we're increasing our profit margins. We're reducing the size of our headquarters in Michigan. That's going to save them millions of dollars this year. Also, so they're doing cost-cutting measures while you're still seeing an underlying good demand here for their cars as these cost-cutting efforts have really, helped this company. But with the average average payment for a car reaching about $750 a month for consumers, Mary Barr talked about, hey, we've got low-priced cars, we've got mid-range, we've got elevated luxury car purchases. Nobody pays those base rates on the bottom. I think this affordability issue is going to start hitting the automotive industry. But that being said, we've got good data on the economic side. The consumer's still out there spending. The jobs market's still pretty robust. So everything looking up for this company with the stock up about 9%.
Well, I'll be back.
Yeah, that's a hefty car note there, $750 a month. I know it's been getting higher and higher, and that's one of the things I was talking to Carl Brauer about earlier today, because he feels like there is a tension. Like, there are people actually replacing cars and buying new cars, which helps for GM, but there is a tension with the cost now, with some people obviously still holding on to their cars for longer. Let's talk healthcare stocks, right? We talked about a lot of the green on the board, but you do have some red on the board today. You've got healthcare under pressure after that Medicare policy shock. We got that news yesterday, late yesterday. United Health, though, also being slammed after its latest quarterly results. We talked about other stocks getting better. It's getting worse for United throughout the day, down more than 19%. CVS under pressure, Humana. Kevin, let's get your take on this sector first.
You know, when President Trump comes out and says he wants to hold Medicare rates flat through 2027 or into 2027, that's a big, remember, none of these costs are going down. So it may really hurt these companies' abilities to make money. And what I'm wondering is if this is some...
None of the costs are going down. Get that. Remember that.
All cost structure and the Trump administration trying desperately to get healthcare prices low.
And it's going to get a lot worse if we don't do something about it. That bill should have never been passed. Never. I would have suggested if you wanted to create a different welfare system, then create one. Don't bleed us all into it. Because it's made insurance companies filthy rich, and the cost of insurance has gone skyrocketed. So it didn't help; it made it worse.
Horrible day for these healthcare companies, Diane.
Yeah, but I think the earnings don't help. Not the trailing quarter, obviously, but then the guide is their first annual revenue decline in decades. Tom, what's your take?
When these companies expect a 5% increase in 2027 spending, and it comes in at 0.09%, is what the government basically came out there and said. That tells you all you have to know. This administration is cracking down on the fraud that's in Medicare.
Exactly.
They told you that they're going to cut costs across the board. This is one of those big red flags.
The guy at the IRS told me every year there's $20 billion in fraud in healthcare every year. $20 billion. Since Obamacare, that fraud has gone up a lot more than it was.
A lot of these companies moving forward, where you're expecting to be able to increase monthly premiums, and now you're not going to be able to. And this is going to be a concern for these companies. Remember, United Health was one of those stocks that just got hammered, in middle of last year. Then all these
because the CEO got shot,
and buying up the shares when they were low. But now we're back down to levels that we haven't seen. For 5 or 6 months.
Okay, there you go.
This is going to be
spies setting up.
Maybe a line
it didn't
in the sand
hold
for some of these companies, because the administration wants to come after this industry, which they say is a lot of waste, and they're basically doing it, by telling them, hey, we're not increasing the amount that you're going to be able to charge the consumer at this point. So you're probably going to start to see some of these companies, cutting jobs. Maybe a working AI, maybe higher productivity. You're going to have to see some good commentary out of them. But United Healthcare's earnings weren't that good, and you mentioned the guidance moving forward. Even
there it is,
now,
triggered.
Are they going to have to re-rate that guidance based on some of these numbers? But we'll get some finalization and some more clarity in April when these things get passed.
Yeah, United Health says they plan to shrink their footprint, sell some assets, cut membership. Still, even those plans, not enough to help the stock today. All right, let's put a pin in it. We've got bull versus bear coming up. The guys get their example trades put together for Seagate. That one has earnings due after the bell today. It's a bar high for that one. We'll have more fast market after this break.
Take a chill pill. Oh man, this is really nice. Spies hit my support level I called on the pullback.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis,
Technical analysis.
and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Shares of Seagate
200 EMA.
A massive rally as it hits yet another all-time high. Now, after the close, it's set to report earnings for its fiscal second quarter. Expectations are for adjusted EPS of $2.83 on revenue of $2.75 billion. This stock, like most of the memory stocks, have seen a meteoric rise over most of the last year. Shares are up almost 500% from its low back in April. Time now for the tug of war on Seagate. For that, let's welcome back in our co-hosts Tom White and Kevin Hings. It is bull versus bear time. So before we get to your example trades, we got to get your thoughts on Seagate. Kevin, let's start with you. What's your take?
Yeah, this is a company, just look at the chart of the stock. It's quite incredible the last year they've had, and it's AI demand pulling us forward. Remember, this is a storage company, and this is an infrastructure company. So all the things happening with AI, the question is two things. How much is this stock overbought, or how much is in it, and how much of the demand for their data storage is pulled forward? It trades at 29 times forward earnings. That is historically rich. You can see the chart on the stock, how long it's run. The question is, can they keep up? They do have decelerating revenue growth. They're guiding now to 16% growth. That's decelerating. That's a bad word when you're looking at a growth company, Diane. So all things considered, this stock feels like it's got to put up big numbers. The bar is incredibly high on this name, Diane and Tom.
Okay, but then there's the question of, can it jump over the bar? Because listen, memory has continued to have the wind at its back this year, whether we're talking about Seagate, Western Digital, Micron. Tom, what's your take?
Yeah, so 80% of its revenue from selling data center storage products, right, to enterprises, to these companies, the AI infrastructure build-out has been booming. Remember, this is a really cyclical area within the technology space, but it hasn't been over the last year due to the fact that demand is still there. The CEO basically stated that, hey, they're sold out through 2026 and going into 2027.
Well, I decided not to take this trade. I got to go down there.
And the low capacity to actually produce this stuff, right? So more capacity is going to come online, but that might not be until after 2027. And that's, that's good for the stock, right? But once more capacity does come online, maybe a pullback in some of this a CapEx spend from some of these technology companies, but that doesn't seem to be anywhere in the realm of possibility, at least through 2026 into next year. And then the pricing, when demand's this high and supply is limited, they're just winning on pricing. So their margins are increasing, so they're growing into these higher valuations.
I think when I retire,
I kind of mentioned the concerns about this stock's been overbought basically for the last 6 months.
when I get ready to retire, I'm going to buy me a snow ski suit so I can just walk around in the wintertime. I got 30 acres I can play with. Okay, I'm going to go down there and look. It just depresses me. We need a good roofer. So this is my support, my first support, and my second one's off the 200, and then the third one. But we got to break the 21, or at least 69, 81, 83. And I'll be back.
Put calendar. Now, I can't get that for a credit like sometimes we do in these. Had to pay $2.35 debit, but at least you are selling a call vertical to reduce the price of that put calendar. Trading about $2.35. It's trading even less than that now. It's trading almost $1 lower. So that means the stock has rallied since we put this trade in. So you can get it pretty close to credit, approaching your credit. But Tom, this one, I want to be able to be profitable if it sits here and does nothing or works around in this area. Like I said, I sold the call vertical about $30 or so higher than where the stock is trading, Tom.
Yep, let's break this one down. The option market priced in a pretty hefty plus or minus $35 move either way in the stock, with the shares sitting around $380. So let's break down Kevin's custom four-legged spread here. Going January 30th weekly cycle.
Four-legged spread.
4 days or 3 days. Sell the 410 call, buy the 420 strike call. So a short $10 wide call vertical that's helping to finance the purchase of a 1 week wide 350 put calendar, where you're buying the February 6th weekly options that expire in 10 days, buy that 350 put, sell that same 350 put in the near term January 30th weekly options that expire in 3 days for a package. We got $2 debit here on the risk profile. As Kevin mentioned, trading closer to $1.50 at this point, but that's going to sway based on the fact that you got 4 legs and where the stock is at the point. But I think the key here in Kevin's trade is, as he mentioned, yeah, you can see here the apex of profitability is at or near that 350 strike where you're doing the 1 week wide put calendar. But even if the stock doesn't move, even if the stock moves higher, stays below about 408, you're going to be profitable on this. On the downside, because you're paying a debit, you're going to probably have a break even at or near about that 310 strike. It might be a few dollars either way on that where you can still be profitable. But this is a neutral to bearish complex trade, selling an upside call vertical in the near term, buying a 1 week put calendar to the downside, with the expectations that, hey, it's overbought on a technical level. Even if they hit every metric, we've seen some stocks kind of sell off and maybe some profit taking on it if that happens. What you don't want to happen on this trade is an explosion to the upside where it goes above that 420 level. On this, if you pay a $2 debit on it, your risk on this up above 420 is going to be about $1,200 on that. The $2 plus the $10 width of the short call vert. So keep that in mind. The one area you don't want this thing to go is above that 420 level on this neutral to bearish complex trade. Kevin, I went Passive also, where it's, you can profit in 3 out of 4 scenarios. On mine, it's a little bit more bullish. If its stock goes higher, stays where it is, or even goes lower, but I can still remain potentially profitable on this short put vertical here. I went out to the January 30th weekly options, expire in 3 days, sell the 350 put, that's out of the money by about $30, almost that 1 standard deviation. Sell that 350 put and then buy the 330 put. So short $20 wide, neutral to bullish put vertical, collecting roughly about a 450 credit. It's trading over $5 now because the stock has pulled back a little bit. But if you collect that 450 credit, that's what you can make, 450 with $1,550 at risk, all the way down at 330 on this one. It's a little bit passive, Kevin, but it's got that higher probability of success on this short put vertical.
Yeah, exactly right. This is a $20 put vertical, but if you notice, Tom, the short strike on yours, same as the short strike on my calendar. That means we're both using the same number, which is that right side of the screen on the Thinkorswim platform to help us determine where our short strike should be. So I have the 350 put calendar, you're short the 350 put and in the $20. So yeah, a passively bullish short put vertical that allows you, like you said, in 3 of the 4 scenarios, this stock could go down $25 and you're still profitable on this trade, Tom.
Yeah, I think that's one of the key things when, going into earnings. This is risk defined, right? You got $1,550 at risk or $1,500 of risk on this type of trade. Kevin's is risk defined, even though it's a complex trade. Kevin's got some assignment risk on that short 350 put into expiration over the next 3 days. But Diane, the setup, I think, on this, even though they're both, Kevin's is directionally bearish, mine's directionally bullish, there's still that median ground where you can still both be profitable at or near maybe 360, 370, even 355. But I think the key in a high-priced name like this is staying risk-defined, knowing exactly what your downside is, because anything can happen in earnings. We've seen that routinely here in a lot of these names.
Especially given the move that you said the options market is pricing in for today. All right, so we'll be on the watch for that one. We've got cash tags coming up. The team at Lightfolio joins us to take a look at social trends on Starbucks ahead of its earnings tomorrow morning. Will it get a jolt? Stay right here on Schwab Network. Fast Market will be back after this break.
Hi, I'm Alex.
I'm Jane.
And I'm his mom. Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Gladys, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, we want to bring in our next guest, and that's Landon Swan, co-founder of Likefolio, taking a look at Starbucks today. Landon, thanks so much for joining us as usual. So when I go into Starbucks, over the past year, I've noticed a little bit more traffic, but I wouldn't call it off to the races yet. In fact, to me, it seems like fits and starts. What does your data look like, especially compared to the other coffee chains?
Yeah, I tell you, it doesn't look great. I mean, you know, for a long time, Starbucks was it. They were doing great, and it has fallen off significantly over the last maybe 2 to 3 years. With that, in fact, it's not just people talking about going there or having enthusiasm about going there. It's also happiness, people being satisfied with the product, and more so, I think, the experience. And I think that, you know, obviously with Nichols coming in, they've got a lot of, you know, the back to the Starbucks way of life there as a goal, the green apron service level. So he's trying to bring a lot of that back, which I think they need. I think that the market has sort of told them, hey, you know, we don't like this corporate gray sort of just get your coffee and go. We like what it was, you know, sit down, enjoy yourself, you know, write the name with some smiley faces on there, free refills while you're in, all that kind of thing. The stuff that made Starbucks. And I think that, you know, the departure from that over the last, you know, several years has led to some significant declines in consumer happiness and consumer enthusiasm or demand. And the data shows that very clearly. You know, when we stack them up against some of the other coffee companies out there, coffee stores, I should say, you know, it's pretty obvious that they're on the wrong side of things. I mean, they are negative 43 versus some of these others. You know, Dutch Bros, actually, ticker BROS, that's one that we've been pretty hot on for a while. I think a year or two now, Likefolio, the data is very strong in it. But we threw in some other smaller brands, and Dunkin' as well, used to be public, just to kind of give some scale. So this is not, you know, just all coffee stores are struggling. Starbucks can't make that argument. That's not the case at all. It's just the opposite. In fact, some are doing okay, some are doing great. Starbucks is struggling quite a bit. I think that for investors, it's a matter of how much do you believe in the mission change and the leader, and how much patience do you have? Now they have had the stock has made a little bit of a run this month. I think it was around 84 to start the month. We're up to 95 now. So that's obviously good for investors. They like that. But, you know, the data for us is still fairly negative, and we know that there's a lot of things in place, you know, to turn this around, but most of that stuff is expensive. I mean, he's talking about more face-to-face interactions, you know, paying labor more. And you can kind of see on this chart here, you know, where we are now versus last year versus the year before. It's just a significant decline in enthusiasm and people, you know, going to the website, going to the stores, all of that. And so it hasn't worked yet, right? I'm not sure if it's going to work or when it will. My money is on yes, because these large brands have a lot of time to turn things around because of, you know, the number of locations, the number of customers, the number of loyalty, the amount of loyalty that's out there. So I think they have the opportunity to turn around, but, you know, if I'm a trader, I'm not necessarily betting on this quarter being the one. And in fact, when we look at, you know, consumer happiness, it is wild, because normally when you get in a company that sort of gets into the political fray, you usually have one side that's sort of angry at you, and the other side supporting you. They've kind of managed to make both sides angry with the labor dispute. So you've got sort of the liberals that are angry and they want to strike and, you know, get paid more. And then you've got a lot of people on social media, a lot of the more conservatives are saying, well, I don't want to deal with a customer service rep like that who's angry. And so everybody's kind of mad at Starbucks right now. And that's not where you want to be. They've got to figure out these labor disputes. And they've got to get Starbucks back to where it's a happy place to go and you get warm, positive feelings. And I know that's their goal, but they haven't got there yet. So I also know that expectations are fairly low. I mean, I think we're looking at, you know, 58, 59 cents earnings per share, where a year ago it was 69 cents. That's the estimate. So there's definitely some of this negativity already priced in. But the run from, again, this month, the 11-point run from 84 to 95 is telling me that investors are starting to get a little bit optimistic. And for us, the data just doesn't yet support that.
Yeah, Landon, that one chart, your second chart that you had, where your sentiment data is not reacting like the stock is, and that immediately raises red flags. Now, last quarter, they actually turned it around a little bit. They saw, comparable sales were up 1%. That was actually an improvement, right? Because we had seen some deceleration, especially over in China. But it seems like they're getting their footing, and now there's more optimism built into the stock here. Up 13.5% so far just this month. So everybody seems ready. But when you look at like traffic's been down, but transaction ticket prices are going up. That's why the comparable sales kind of went up at this point. Are you guys seeing any change in traffic? Because like you said, I don't go to Starbucks as much as I want to, just because there's probably a lot more headaches going in there, and the costs aren't coming down anytime soon, right?
Right, exactly. And, a lot of that, so to answer your question, yes, we are seeing weakness in the traffic, and you can see it here. I mean, it's just been 2 years in a row now of declines. But a lot of that is being offset by delivery. So that's a positive. I mean, people are still, they still want Starbucks products. They just have a more negative experience of going into the store. In fact, when we look at specifically into mentions, people are talking about strikes, they're talking about the process, they're talking about closed stores. There's even some mocking of the holiday drinks. There's lack of enthusiasm basically for the holiday drinks, where it used to be, they had announced the latest and greatest milkshake basically, but it's a peppermint macchiato, whatever you want to call it, for the holidays, and people got super excited, and now it's just way less enthusiasm and more sarcasm around it. And so it's on the wrong side of the consumer happiness trend is what I'm trying to say. And again, it's several years in the making, so it's not a 1 or 2 or even 3-quarter turnaround for something like that. It is definitely turnaround-able, if that's a word. You can definitely make that change, and I think they got the right guy in to do it. But investors, I believe, need patience. So this could be a little bit of a bumpy ride quarter to quarter as investors continue to say, is this the one? Did we finally do it? Are consumers happy? Are revenues rising? Is volume rising? And we don't see that this is the quarter to where that's going to happen. So again, we've got negative data on it. The stock's up a little bit. It's a good divergence play for us. We're excited about this trade going into it with a bearish position. And as an investor, I'd be cautious. If you want to own this one long term, I'd definitely look for dips. I think you're going to get plenty.
Let me ask you this, Landon, though, because the CEO there is one of those who people say, or the view that I've seen is that you can put your money on Brian Niccol, right? So why doesn't that? Because this sounds very downbeat, right now when we think about Starbucks. And listen, I was originally going to ask you a question about price, but I feel like we've gone down the negative route a lot. And I'm not trying to, force something positive here. But what about Brian Niccol? How much does it matter, his leadership?
I tell you what, I am a bet on the jockey kind of person, and absolutely, I think that long term he's going to turn this around. It's just how long is that going to take? Because the stuff that he wants to do again it makes sense. It brings Starbucks back to what it was. It is going to increase labor costs. It is going to be more expensive. Margins are going to hurt. But you got to do these kind of things to get people back in the door and make it that positive experience that it was before. So, we covered this, I think, three months ago, maybe 6 months ago, and we talked about all the initiatives that he was putting forward. And it sounds, in hindsight, after you hear him say it, it sounds really basic. It's basically like, I want to make Starbucks what it was 5 years ago, before we started squeezing margins and really trying to turn over tables and get people through and make it more of a factory. So now he wants to get back to it being Starbucks, and I think that's fantastic, absolutely. And I would bet on this jockey for sure, to use that analogy again. But that is a long-term bet. If we're talking about traders here who are interested in this earnings report, I don't think this is the quarter yet to bet on them. And you know what? You've kind of got two events this week. You've got tomorrow morning, you got the earnings, and then they've got their investor day on Thursday. So that's going to be really interesting to see, how they react to earnings, which I believe they will be negative. But then what happens, when he gets on and starts talking, will investors believe and have confidence in what he's envisioning on Thursday? So that could swing things the other way potentially. So there's likely a lot of volatility in the next 2 days for Starbucks. And you just got to hopefully position yourself intelligently so that you can handle it. But again, with this run up, I think that the downside is more likely than the upside. But yeah, you have a great point. This is a fantastic person to have in there. It's just the timing issue when it comes to investors versus traders.
All right, Landon, we'll leave our conversation there for today. That's Landon Swan, co-founder of Likefolio. All right, for the trading perspective, all things Seagate, we'll get Kevin back in the fold. Tom, your final thoughts, because Landon obviously sounds super bullish. Kidding. So your final thoughts before we jump into the example trade.
Yeah, you know what? Yeah, he's right. Brian Nickel is, this is like trying to turn around a barge, right? What he's trying to do. The labor unrest doesn't help at all. The affordability issue, when you go to Starbucks and you're getting a drink under $5 is kind of difficult now. So there are some headwinds, but it seems like the market's been so optimistic on this name over the last 3.5 weeks going into this report that, hey, maybe we're going to see a surprise to the upside as far as comparable sales. And China's going to be a big, big statement from that part of the world to see if we're starting to see some more reacceleration there. But Kevin, going into this report, it seems like, just a couple months ago, the bar was low in Starbucks. Now it seems like it's high going into this report. Option market price in about a $6.60 move either way in the shares post earnings. How do you want to look at this one from an example trade?
Well, Tom and Diane, I always say that in another life, I'm pretty sure I was a salmon, because I go against the stream a lot in some of these things. And we're doing that today. Landon's data was incredibly negative, and yet I'm going to put on something. The paper money trade I'm doing is something in the bullish camp. So if you're not bullish, if you think that everything Landon says is accurate and this stock has rallied in error, basically, don't do this trade. So here's what I'm looking at, Tom. Something in the call diagonal family. I went out 2 weeks. I gave myself a little bit duration. I went out to February 13th, bought the 96 call, so basically right just a little bit out of the money. The stock has sold off here a little bit since we put this trade in. So buying the 96 call, looking at the expected move of about $6.50, I went and sold the 103 call. So the 96, 103, about a $7 wide call diagonal, Tom. We put that in at 315, trading about 280 now. So it's trading slightly lower as the stock has moved. Can you do the 95, 102? Yeah, you probably could if you wanted to adjust your strikes. But remember, these are bullish trades, these paper money trades. So I like what Landon said about betting on the jockey, and Brian Nickel is someone who in his career has fixed several things. He fixed Taco Bell, he fixed Chipotle, so I'm expecting him eventually to do the same here, Tom. So a slightly bullish call diagonal, giving ourselves a little bit of duration that we can chip away at the net debit, Tom.
Yep, let's break this one down. 17 days to expiration, going out to the February 13th weekly options, buying the 96 strike call just out of the money to the upside, basically at the money at this point. Buy the 96 strike call, and then in the near term, January 30th weekly options that expire in 3 days, sell the 103 strike call. So a $7 wide bullish call diagonal. You're paying roughly, as Kevin mentioned, it's trading closer to 280 right now, but we've got 315 up here. The debit you pay is going to be your risk. So if you pay 280, $280 per spread. If you pay 315, $315 per spread on this one. Now, anything above about the $97.5, $98 level is going to be potential profitability on this. The key is you do need to move higher, maybe a couple percent above where the stock's trading to get above that break even. As Kevin mentioned, it's a 2-week wide call diagonal, and it's $7 wide, the width of the two strikes, and you're paying less than half the width of it. So paying less, around $3 for that. That's less than half the width of it. Why is that? Well, because you're buying out in the February 13th weekly options that expire in 17 days, about a 52% implied volatility in an aggregate, and then selling about 100% implied volatility in the near-term option. So that higher implied volatility lowers the cost entry point on this bullish trade. And as Kevin mentioned, don't do this trade if you think the stock's going to maybe stay right here, go lower. But you could always look at maybe a put diagonal if you're more bearish, that aligns with what Likefolio came out, where you buy the 96 put and sell, basically the 99 put in the near term. So it's about the strategy because of those implied volatility levels on this type of position. But Kevin's is bullish. If you think a lot of what's been going on out there in the market, up 13% this month, is going to continue. This strategy takes advantage of a move to the upside. You got some assignment risk on that short 106 strike call or 103 strike call into expiration over the next couple of days, so keep that in mind. But a 2-week wide bullish call diagonal going against the grain here, Diane, against what like Folio said.
It's swimming upstream. He said like a salmon swimming upstream. All right, against the grain there with a example trade there for Starbucks. All right, thanks, guys. We got the breakdown coming up. We'll head back over to the tech space, preview earnings from ASML. It just hit an all-time high today. Fast Market will be right back.
The Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
ASML on deck to report its quarterly results before the market opens on Wednesday. Analysts are expecting the Judge Company to report earnings of $9.01 per share. The stock's had a big run-up so far this year, continuing higher today as investors continue to bet on its role in the proliferation of AI. Today, Bank of America reiterating its buy rating and it's named it as a top pick this year. Time now for the breakdown. For that, let's welcome in George Silla, senior markets correspondent, taking a fundamental look at ASML Holding. All right, it's got earnings on deck. There's this view that it is going to continue to outperform, but then there's also the possibility that, wow, it's run far. How do you look at this one, George?
Yeah. Well, I mean, it's run a lot, but there's a reason for it. I mean, first off, ASML is basically a very unique monopolistic kind of company. They supply pretty much the entire marketplace globally for their advanced ultraviolet lithography technologies. And these are technologies that are used in critical features for fabricating advanced semiconductor nodes, those highly advanced nodes that are used from a foundry perspective and produced by TSMC or Taiwan Semiconductor for NVIDIA. So it's a critical company globally. It's quite unusual in terms of its global position. The other thing is over time, there have been some challenges for ASML because of concentration risk in terms of sales in China. And if you look at 2024's numbers, about 36% of their sales were in China. The estimated sales concentration is expected to decelerate in China at about 20%. So I suggest that is going to be a talking point that I'll also be looking for to remove, if you will, some of the concentration and maybe some of the geopolitical risks. But nonetheless, as you mentioned, over $9 a share in EPS as estimated. That's an increase of around 25% compared to last year. And even sales estimated to be around $11.4 billion, give or take, is estimated to be about 18% higher year over year. So looking at the price action, obviously it's up quite a bit in the last year, up 112%. It really just out of the gate, if you look at January 2nd, just took off. And I think that speaks to sort of the January effect we're seeing specifically in the memory and logic chip space, looking at Micron still moving higher, Western Digital, Seagate. Ironically, if you look at NVIDIA, it's actually taken a back seat to some of the other players in the artificial intelligence infrastructure stack. But nonetheless, ASML and Lam Research, for instance, and Applied Materials, other semiconductor equipment manufacturers have done extremely well this year based on promising technologies, but also backlogs of orders for their equipment that is used for everything we use in terms of artificial intelligence, data, communications, and of course, the entire gamut of semiconductor technologies.
All right, great breakdown there, George. That's George Sillis, our senior markets correspondent, with a look across ASML, which is hitting another record high today. Let's get Tom and Kevin back in here for example trade purposes. So Tom, this time you've got the example trade in ASML. You know, I mean, some may say this is really the only game in town, and George made the point about how it's looked at it in terms of monopolistic fashion. What's the approach you're taking for an example trade?
Yeah, there's no real outright competitor to this company at this point, making those EUVs or extreme ultraviolet technology that they make, you know, for the AI chips and memory chips across the board. So they got a backlog of orders. China is starting to ramp up, you know, the rollout of their own companies that actually are going to produce this, but not really anything noteworthy at this point. The option market pricing in about a plus or minus $98 move either way in the stock. This is a $1,470 stock. It's expensive, to say the least. About 388 million shares outstanding on this float. Hit all-time highs today, up about 113% over the last 12 months. Just, you know, it seems like everything's going right for the picks and shovels within the chip and AI industry, and ASML is the leader in this space. So I looked at a strategy that's a little bit neutral, a little bit bearish, but hey, even if you're wrong and the stock goes higher, you could still potentially profit. You just don't want it to continue to explode to the upside. You take a look at the chart on this one, the RSI, the Relative Strength Index, 78 right now, so overbought on a technical level, but it's gone parabolic to the upside, up about 37% so far this month. So I looked at an unbalanced call butterfly where I'm actually going to take in a decent credit on this trade. So I went out to the January 30th weekly cycle. It's a really short-term positioning, earnings type of example here. Buy one of the 1500 strike calls, sell two of the 1510 strike calls, and then buy one of the 1550 strike calls. So unbalanced broken wing call butterfly. You're going to collect roughly about an $8 credit on this. That's what you can make if the stock stays below 1500, $800 per spread on this one. You can see here you get a little bit of a kicker right at or near that short 1510 strike where you short two options on this one. Your risk, though, where you don't want the stock to go, is to keep explode to the upside and go above that 1550 level. That's where you got $2,200 in risk on this particular trade. Kevin, it's unbalanced. You want the stock to stay below that break even of 1528 to the upside. So you do have a cushion of about $58 to the upside, but it's well within that one standard deviation. This is almost like one of those strategies where you're collecting a lot of credit, but you better be right on it and not that wrong to the upside, right?
Yeah, it's an unbalanced call butterfly that gives you a short delta, right? That shows you where the exposure is. You're long a $10 call vertical. That's where you want it to go, to that 510 strike. But then you're short a $40 call vertical. That's where the risk comes in, between 510 and 550. So this is one where it's got a short delta. So unchanged, up very small, gets into that nice area around 1510, and then anywhere on the downside is fine, Tom. So yeah, anything but a big melt up to the upside and you're fine here.
Yeah, you got to watch this. This is a high price stock. That break even 1528. That's about a 68% probability the stock will be below that over the next 3 days. But here you go, Diane, staying risk-defying, going into a really high-priced stock into earnings that has the potential to move quite a bit.
All right, good stuff, guys. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hinks and Tom White. Download the Schwab Network app. It's available in the App Store and tune in 24/7 on schwabnetwork.com. Stick around. You've got Next Gen Investing coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and as we check in on markets here, we are seeing a pretty mixed picture as we are seeing still some strength in the S&Ps. NASDAQ is still up about 0.8% here, but still seeing the Dow down about 1%, and the Russell, as it was our real laggard yesterday, also continuing to see some modest weakness, but it does feel like the calm a bit before the storm. I know we got a slate of earnings this morning, and we get more this afternoon, but really tomorrow is, to me, the true earnings volatility that we'll see trickle into this market. I guess you could say it's playing out in real time, but we get these big tech names a bit perhaps more influential in this market than, say, you know, your GMs, UPS, American Airlines, although still important, yes, but it does feel like a bit of the calm before the storm.
Well, or you look at like the Dow today, for example, outsized exposure to a name like United Healthcare because of the price weighting, because there's only 30 names that make up the Dow Jones Industrials. You also have outsized financial exposure as well when you think about JP Morgan, Visa, American Express, Goldman, all within that particular index. And you're seeing that what those names, that impact that's having today within the Dow. Russell, you can set off to the side. It is a little bit more of a cap-weighted rally, so you have the big mega cap tech names carrying their weight today. That's not going to help the Russell. But to your point, when you have names like Tesla and Microsoft and Meta reporting tomorrow after the bell, what you're seeing take place today in the Dow, for example, if you have a 20% move in Microsoft to the downside, the S&Ps are going to be down as a result of that. Where the Dow, of course, is really being moved by the United Health. You're not really seeing that take place in S&Ps.
Yeah, you're not. And I mean, we're right now seeing, very mixed sort of reactions, of course, from some of these earnings, as you can see, actually illustrated very well from our heat map. Now, for a while, we were looking at this heat map that was almost the inverse, where it was like, hey, we could say that the majority of the S&P 500 stocks were higher, but weighed down by the tech heavyweights that unfortunately do have such a command over these markets. Or fortunately, I guess, depends on frankly how you look at it. But now seeing that strength that's lifting a lot of these individuals' equities, which, again, the story from earnings so far, it's very early in this week to say. So we've heard a wide variety of companies that have reported just over the last session or two. But I think that we'll really get some more of this conviction in this market once we get the big heavyweights, just because that's typically how it is. But obviously the risk is always that we end up doing a whole lot of nothing. But that seemingly is not usually the case for like your Metas, your Microsofts, your Tesla. I mean, it's more so what we've seen from, say, like NVIDIA in the last several reports.
What I'm excited for those two particular names, in Microsoft and in Meta tomorrow, is not only am I intrigued by seeing the numbers they're going to claim that they're going to spend in terms of CapEx. I'm sure we'll get some sort of guidance figures around that. But I also want to see the market's narrative in reaction to that. Is it still a market that is okay with this massive spending, especially as it, some of these names are moving beyond just what they're generating in cash flow, and they're taking on debt. And we started to see, how Oracle started to react to that in the latter half of last year, in the latter part of last year, I should say. And we haven't quite seen that take place for the Metas and the Microsofts. Well, if they start leveraging up for this investment, I want to see how the market's able to stomach that.
Yeah, and I will say that we will speak to some of the weakness that we're seeing today, in particular to the Dows. We'll be diving into everything that right now is weighing on a lot of these various healthcare providers, as well as specifically United Health. So a wide variety to get through before, of course, we really dive into the big tech names really tomorrow, of course, for our show. But we'll kick things off here with some of these movers to keep on your radar, as well as just some of the earnings movement we're seeing. GM, I will say, a notable move to the upside today in GM shares. We'll also then be discussing some of the volatility and the overall just trades and technicals that we are seeing right now in a lot of these analog makers, like your Texas Instruments, your Analog Devices, and then of course FOMO today. We're looking at United Health to the downside, down almost 20%. And taking a lot of these similar companies with it, as we did get, first of all, their quarterly report, but also some overall just news from the Trump administration that could reshape a lot of the pricing that, of course, then goes into the general portion of a massive part of United Health's revenue. So an interesting story, but taking it on the chin today, as well as names like Humana, CVS, also seeing the substantial repricing. We'll also then discuss gold with a remarkable run, as we did see shares reach over 5,000 yesterday, and some volatility trickling into this market now today to follow, but still a record high for that asset class. And we'll close things out here with American Airlines, another name that's been fairly choppy on the back of its earnings, where it was initially lower, then higher, and now lower again as the market parses through what it likes and clearly does not like within its quarterly report.
Yeah, American Airlines slowly becoming Ford in a way. It just seems like it's always $14 a share in that way every time I look over at it. But let's get some of these movers. Speaking of the amount of money a company like Meta likes to spend, we got another new deal, and that's one of the subjects of our movers here. Corning glass maker, but this is more in the fiber optic cable world.
It is. So top performing stock in the S&P 500 today after it unveiled this multi-year deal worth up to $6 billion to help Meta Platforms build its data centers. So Corning will be supplying Meta with cabling, optical fiber, and connectivity solutions for data centers across the U.S. But as part of this agreement, there will be adding capacity to its optical cable manufacturing facility in North Carolina, where Meta will be the anchor customer and expand its manufacturing footprint within that state. Corning does run two of the world's largest cable and optical fiber factories within North Carolina, and per this announcement from their CEO, this deal with Meta will allow them to boost their workforce in the state by roughly 15 to 20% to more than 5,000 employees. Now, at the same time, the agreement will also help Meta, of course, source materials domestically for its pretty massive data center build. And we know that this company for so long has been read as a barometer of Apple because it is the largest right now. It is the sole maker of the glass iPhone screens as well as the watch screens. It is very heavily correlated with Apple for that reason, but it's also done a great job diversifying. I mean, it's the world's largest producer of glass substrates for these high-performance displays. Also, though, now focusing more on these fiber optics, cabling, and these are two huge parts of the demand we're seeing from the AI data centers. So shares have more than doubled over the last 12 months, and today with a really phenomenal move to the upside. And this is just the latest announcement we've seen as they continue to invest pretty heavily in their operations in Hickory, North Carolina. These plans will make their Hickory facility the largest fiber optic plant now in the world. But one thing I will say, it's gotten expensive. It trades at 38 times its forward earnings, so something to consider, absolutely. But I mean, a really phenomenal run for a name that for so long it was the fear of remember there was a day when Apple was cutting out the middleman. We saw them do it with, there was fears about Qualcomm and its chipsets. We saw them do that with Intel and their chips. There was also the fear that they would be making more of this glass, the Gorilla Glass, in-house. But clearly, Corning's been able to diversify well even beyond Apple. Obviously, that's still a portion of its revenue, but it's really benefiting from some of the fiber optics within AI.
Yeah, it doesn't specify anywhere that I could see what multi-year, what that duration would look like. Well, let's say it's 4 years for argument's sake. That'd be essentially $1.5 billion in additional revenue per year. Well, this is a company that's only, generating like $15-16 billion in revenue. So if we do some, kind of easy math, I mean, it's a 10% boost to revenue essentially in the signing of a pen here. So yeah, it's going to be difficult. They're going to have to scale up their workforce. It's not going to be, all immediately accretive to the bottom line, but a significant deal for a company that, generates, 15-ish billion a year. $6 billion deals, definitely nothing to shrug off. So good news for the team at Corning and, Meta continuing to spend as they build out for this AI race. Stock Netflix stock is at least, I think, kind of looks like it's kind of trying to stop going lower, but that's about as best I can phrase its recent price action over the last maybe week.
I know, in a slew of names having really phenomenal sessions, which is really where we're starting off the show today. Netflix is our one lone name in the red, although modestly we're down about 1.75%. But with some analyst news, it actually was fairly positive. Freedom Capital did upgrade shares to buy from hold, gave a $104 price target, saying that the company reported really strong fourth quarter results with solid growth in both their subscriber base and advertising business. But they do say valuation for the upgrade following, again, that significant share price correction post-earnings. So seeing this as perhaps an opportunity, many analysts have echoed the same sentiment for some of the Mag 7 companies reporting this week. But, I mean, to look at Netflix here specifically, we're down now about 10% and some change in the month so far, and about 37% from highs that we have not actually seen since end of June. So this has been a slow, gradual, not necessarily painful because it's felt very, again, gradual, but grind to the downside. As I do think there's still some of the ongoing turbulence just relating to, I mean, like the concerns over the Netflix and Warner deal, frankly, that it just cannot get out of its way right now.
Yeah, this is an interesting looking chart. Pretty significant level in these kind of low to mid 80s on a stock price performance. You can see if there was some sort of a rally, maybe back to 100 and back here. It's a pretty ominous looking pattern that's developing. But that, of course, is a pretty big ask at this point. yeah, watch the deal. Keep an eye on how the market's rewarding growth companies, particularly those that are spending money. But right now, Netflix can't seemingly get out of its own way. Let's talk GM. Not the best report I've ever seen, but analysts clinging on to some of the guidance and messaging, stock buyback. Really nice move today. Jenny, I think biggest up move since October, which of course was the last time we heard from them in earnings, and a new multi-year high.
I know, I can't believe I'm going to say this, but I thought actually one of the most impressive parts was that they're hiking their dividend by 20%. I mean, that's a pretty substantial move. Buying back $6 billion worth of their shares. They've already repurchased roughly $23 billion worth of GM shares since just late 2023. So that actually was one of the bright spots.
Spend a little less on electric vehicles, give a little bit back to shareholders. Seems like a good recipe.
I mean, exactly. I mean, they did report this $3.3 billion loss as part of their previously disclosed write-off, mostly relating to its struggling EV business. That still did weigh on their bottom line, but their $2.8 billion in adjusted operating income this quarter, which excludes the $7.2 billion in write-offs and special charges related to EVs and other items, actually would have surpassed analyst estimates. But the results do really cap a pretty turbulent year for GM, which has scrambled to adjust to various automotive tariffs, which has drastically scaled back now its money-losing EV business, frankly. But they did manage to expand their share in the U.S. in 2025, delivering roughly $12.7 billion in adjusted pre-tax earnings, about $2 billion less than they had originally projected before these tariffs were announced. But a bellwether to the U.S. auto industry, they did say they expect prices across North America and throughout their lineup to be at least flat in 2026, which was also encouraging. And last year, they did, again, begin announcing some of these write-offs relating to their EVs. Those, again, have totaled roughly $7.6 billion so far. Ford's is roughly $19.5 billion in those EV write-offs. So seemingly adjusting to the times, as right now that lack of EV incentive and just a very challenged pricing environment still for a lot of these automotive companies seemingly has reshaped their business model, but the street likes it. I mean, this is a really nice move today and 25-year high on the back of these earnings.
Yeah, saw Dan Ives weighed in. He liked what they had to say. Said they were, I think, executing flawlessly. CEO Mary Barra and team doing quite well. But let's talk Cloudflare. I've been excited to talk about this story, partially because I'm not even sure I fully get it, and maybe you can make some sense of it for me. But it sounds like over the weekend in the interwebs, some sort of new AI bot going by Moltbot. It was originally called the Claude bot. Some litigation, confusion from Anthropic's Claude model. They got to change the name. But I guess somewhere along the lines, this particular platform suggested using some Cloudflare stuff or matches up well with it, and then you see the stock reaction. I love that.
Okay, first and foremost, I'm glad you mentioned the name change, because that was the first confusing aspect of the story to me. Now known as Moltbot, as you said, previously going by ClaudeBot, as now the creator of this program did say that they're entirely blaming Anthropic for the name change, which, I mean, it's just a...
Yeah, I think there was some litigation there.
Yeah.
Anthropic wanted the change of the name.
Well, I won't even dive too much into that. Moltbot is where we will discuss this name from here on out. But Moltbot is this open source AI bot that does run on Anthropic's Claude, and it generated some enthusiasm over the weekend. It does promote itself as a way to help clear inboxes, send emails, manage calendars, and I mean, like, basically just help run on users' devices and integrate itself into like iMessages on Apple or like Meta Platforms WhatsApp. And so as a locally hosted AI assistant, it has access to much of the user's digital life, which then presents naturally security concerns. And this is, I guess, where Cloudflare comes in, because Moltbot users on social media were urging each other to set up Cloudflare Tunnel, which connects local resources to Cloudflare without a publicly routable IP address. So wildly, it does not appear that Cloudflare actually has any direct involvement with Moltbot, but this catalyst emerged at a good time. I mean,
this kind of reminds me, Jenny, if we go back to kind of early days of the AI, so I'm talking like a year and a half ago, 2 years, when it was like all the NVIDIA chips were getting really exciting, and then it was like, but they're really warm, so you need these cooling racks, and there's this company called Super Microcomputer that makes cooling racks, and all of a sudden it started going crazy. So it's different, but it's like, people just are like, oh, we need this. Who doesn't? And it's like, oh, the first one that someone starts saying, it must be the winner, and that's Cloudflare, I guess.
Yeah, to me, it also reminds me of a lot of the the more ancillary components of the AI trade, or anything with that initial exposure, like anything that was initially tied to OpenAI. It was just like a boom for the shares. That's as much of a correlation as I frankly can make. I mean, again, things has pulled back pretty substantially from November, but you can't argue with price. We saw a 9.2% jump on Monday session. Today, another really nice session, and I mean, Wolf Research is saying that right now this is, again, a pretty nice upside for the connection to Cloudflare. As agents scale, they do require a lot of these low latency infrastructures that do need to be secure. So, I mean, I think that broad-reaching argument could be made for anything. Anything right now that is infiltrating your phone with AI, you could say, is operating at an intelligence level where security needs to keep up. But I don't really necessarily get the fully reading through of Cloudflare, but hey, we can't argue with price.
Here's what I would say. And the timetable clearly accelerated. Like, we're talking like a 20% move in 2 days. Like, I don't think you should be looking for those opportunities. If you find them, awesome. You get invested in them, awesome. But they're not that frequent. There's not a lot of times you see moves like this. That said, I do think that there's sort of a macro kind of big picture takeaway from how this sort of is unfolding. Something generated excitement and attention. It then is, an investor starts thinking, okay, if there's a ton of growth here, maybe that's too obvious. Maybe I missed that opportunity. But what else benefits? And that what else benefits question, whether it was the GE Vernovas or the nuclear stocks of the last couple of years, there's a lot of money in that what else benefits question. We talked to George Tellis about this so many times, and he's really showed us how his mind works around this as an investor, is not always trying to find the first answer, but almost like the derivative play of that. And the further into that leveling you can get, there's real opportunity there. And so it happened very quickly. It's a sped up timeline, but the logic makes a ton of sense. I don't know that it'll hold this move or how long it can happen, but I think there's a lot to learn from this story and this progression just as an investor.
I mean, yeah, absolutely. And again, maybe I don't even fully understand why this is like solely benefiting a name like Cloudflare, not maybe the rest of broader cybersecurity. But hey, again, we were in need of some luck here because the statement pulled back about 32% since just the start of November. And so now seeing a really nice start to this week on, again, all things Moltbot. So we'll leave it there for the top of our show today. Coming up next, we'll dive into the charts and example trades in two of our analog players, those being Texas Instruments as well as Analog Devices.
Connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Investing. It's now time for the Chart Master, and today we are discussing Texas Instruments ahead of their earnings after the close, as well as Analog Devices. Joining us now is Kevin Green, Senior Markets Correspondent for the network, to help us break down some key technical areas to watch. And so, Kevin, we'll start off with the earnings play here of the two, as Texas Instruments, I will say, has been frankly pretty disappointing within the broader analog and chip space. So walk us through what you're watching here from a technical standpoint.
It has, but it actually has made a pretty decent move from the November lows here, Jenny, and we are getting fairly close to a potential breakout level when you're looking at the stock on a one-year daily time frame. If we kind of look at it this time last year, the setup looks kind of the same for the most part. We saw this breakdown to the downside here. Obviously, April, we saw a lot of stocks kind of breaking down. We saw a bottoming pattern, a double bottom pattern taking place, and then we went up and tested $221 here, and now we actually been pulling back ever since, making lower highs as well as lower lows. But we had an inflection point back in November. Some buyers really did step in, broke out of this channel, this downward channel here, which is once again actually going to be bullish. We came back, retested that 20-day moving average in blue, and we have been trying to move higher ever since in a nice consolidated bullish channel. Now, you're looking at around that $206-ish area as your neckline breakout. That's basically that first lower high that we saw from those all-time highs, or those highs that we had back in July here. And if we're actually able to break above that, that's when you start talking about trying to test $220 here. So the trend is actually looking a little bit more favorable, at least in the near term, for the next $20 or so. And if we actually get a breakdown, you're looking at the 20-day moving average first, which is sitting at around $187, and then that 50-day moving average in yellow at $177. MACD in a bullish formation, RSI kind of consolidating here. So once again, this actually looks like you could have some optimism going into this earnings announcement, barring the fact that they don't have anything that kind of surprises the street or their guidance comes in a little bit weak here. But I think the market's been trying to find certain stocks that have been basing out and trying to break those stocks out. It seems like this one's one of them that's been catching that trend.
Okay, Kevin, I will say, to your point, I mean, we have rallied almost 14% now on a month-to-date basis. So to their credit, they've been on a pretty nice run. Now, does that change at all? Does your perspective change if you zoom out and look at a more long-term time frame?
Well, in the longer term time frame, if we're looking at a 3-year weekly chart here, you could actually make a little bit more of a bullish case, especially when looking at the MACD, which is now the 12-week EMA above the 26-week EMA, and it's trying to cross that zero line, which is actually bullish. And we're trading towards the upper third of this range that we've seen over the last 3 years or so. Once again, 206 is going to be that key area of resistance, but you can actually see that the stock has been making higher lows, even though they've been pretty deep lows, higher lows over the last 3 years, and we've also been making higher highs. So if you're looking at it on a longer term time frame, once again, a little bit more bullish than bearish, but you got to be mindful that this stock can turn around on a dime, meaning we could come back and pull back here. And if we're looking at the 200-week moving average in red, that's kind of been that center line where the stock has been trading around over the last 3 years, sitting at around $178.
Yeah, and it's rare, I feel like, with some of these names that have underperformed, that you actually see that the 3-year or 5-year charts actually look even more optimistic, but I totally agree. You can see it just illustrates, yes, we've pulled back, we've underperformed a lot of the strength we've seen tied to all the other types of chips, but hey, I mean, at least on a pretty nice run so far this year, and earnings will be the true test here. So now, as we do think through trading Texas Instruments, again, for example purposes, Alex, this has been one that's been, as Kevin just said, it can change really quickly as far as just volatility, sentiment, as anything can on the back of earnings. So how do you think through trading this name?
Yeah, trying to improve the margin for error with a little bit more of a high probability of success trading strategy. So neutral to bullish in construction, going with that recent performance, looking for some optimism around earnings, selling a put vertical below the market, expiring at the end of this week. So relatively short dated to make this kind of a pure play around earnings. With that said, it's a 187.5, 185 short put vertical, looking to collect 50 cents, so it does create a 4-to-1 risk reward, so you risk 200 with a chance to make $50 for every one of these spreads. Break even's 187. If you look at where the current share price is in real time, Jenny, you do have a cushion of about $10 to that break even, so let's call that 5-ish%. So it's not a ton of room, and earnings will certainly have a lot to say about this, but in the event that you get decent numbers and just not a lot of price reaction, which has been the theme so far in this earnings season, perhaps this margin for error will improve that opportunity for this stock or this trading strategy to still be profitable.
Okay, now to shift gears here into Analog Devices, operating in a very similar space to, say, Texas Instruments, but not having earnings until mid-February. So we do have that catalyst to at least look out for in more of the midterm. But KG, what are you watching for here as far as Analog's concerned?
Well, this is a better chart. It has been making higher highs as well as higher lows. And you also have to be mindful as well, if you're looking at the corporate events or the earnings announcements, the last two have actually been pretty bullish for this name. So we have to be a little bit mindful of that. The stock obviously kind of, once again, kind of broke down, consolidated, trades in a really nice range if you're looking at an upside channel or even a downside channel until it tries to break down. Now, one thing to note is that 200-day moving average. It does trade around that 200-day moving average, leveraging it as an area of support, not only on a one-year time frame, but a longer time frame as well. We did see a test of that 200-day moving average back in November, and we've been making higher highs, higher lows ever since. Trying to consolidate here, so we have kind of this wedge that is taking place. Do we see a breakdown in the stock or a break out to the upside? If we broke down 20-day moving average, $290 is really going to be your first area of support. And then you're looking at the 50-day moving average. RSI is actually making lower highs, so you are starting to lose a little bit of price momentum. You can also call that a little bit of a bearish divergence. MACD looks like it wants to hinge a little bit lower as well. This stock does not trade that far away from its 200-day moving average that often. Now we are seeing around 20% difference between the current price and where the 200-day moving average is. If you go back over the last 20 years or so, generally we actually do see the price actually pull back to that 200-day rather than that 200-day meeting price. So this is a little bit more bearish in my opinion, just given the history, than it is bullish.
Okay, and again, if we look at a different time frame, say zoom out a bit further here, does that again change any of your conviction, or how does time frame really play into this?
Yeah, this just gives us a little bit more of a perspective as to the price action that we are seeing right now. If we go back and look at the last 20 years on a monthly chart, we can actually see that it is breaking out of a bullish channel here since pretty much the 2019, breaking out a little bit higher, once again, getting away from that 20-week moving average, getting away from a lot of these other moving averages as well. Now, you could say that this is bullish on the monthly with that 12 EMA above the 26. RSI is just getting to the overbought level here, but I think the stock is a little bit stretched. Very high bar going into earnings here. I would not be surprised if we do get a reversal just based on the technicals, and maybe the earnings announcement could be that catalyst in order for this to pull back.
Yeah, and I mean, seeing some decent upside today. We're up about 0.4%, so we will have at least that catalyst to look forward to. But appreciate it, Kevin Green, for all of that technical help. Now, last but not least, as we think through trading this name for example purposes, as we both said, don't have earnings for, I mean, at least the several weeks here, but this has been, I mean, you look at the longer term picture here, it's been a pretty stellar performer over the last several years.
Yeah, and since we don't have those earnings until February 18th, I elected for this example to stay ahead of that event and look for maybe the melt up back to those highs to unfold before you get that catalyst that KG laid out that could send this stock turning around. But until then, bullish strategy, buying a call calendar spread centered around the 315 strike, using that to roughly estimate that intraday high just over 313. With that in mind, it is the January 30th, this week's expiration is the short strike, and then buying next week's February 6th expiration for the long strike. $1.75 debit means you have $175 in risk. So with this, Jenny, risk defined.
Oh, she bounced.
Continue and have it melt up back towards all-time highs before you get to that catalyst in the latter half of next month.
Yeah, and we will, of course, be watching for the whole slate of earnings as they do come out over the next several weeks. But we will leave it there for Chartmaster. Now, coming up next, we'll discuss an area of the market that is feeling some pain today, and it is everything tied to these healthcare stocks. We're seeing a major weakness today, but United Health really taking center stage, down over almost 20% here. A soft revenue was a problem, as well as some announcements we got from the Trump administration. So we'll dive into all of that coming up next.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from
Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time for FOMO, and today the FOMO feeling is definitely to the downside when you analyze the movement we're seeing in United Health, which has been hit by, underwhelming guidance as well as news from the Trump administration. So joining us, of course, is Marley Caden, host for the Schwab Network, to help us make sense of all of the unfortunate news that is plaguing shares today, as this name is dragging on the Dow down 20%, and one of the worst performers also in the S&P 500.
Yeah, and it's unfortunately not just United Health. It's all of these healthcare insurer names. We're looking right now, United Health down almost 20%, Humana down 20.5%. We're seeing CVS Health down about 15%, Elevance Health down about 14%. So a rough day. Now, all of this comes after the Trump administration proposed keeping rates nearly flat for Medicare Advantage insurers. The proposal entails that the net average payment would increase by just 0.9% for 2027, so less than 1% overall. Analysts were expecting an increase of between 4 and 6%, so considerably lower than what the expectation was going to be. This is usually set by the Centers for Medicare and Medicaid Services in April, so there is still some time to negotiate this rate, but a real shock to the industry that it came in so low, below 1%, when the expectation was for roughly about 5%. Now, Medicare Advantage is the privately run insurance program that covers more than half of all Medicare beneficiaries, so a big pool of people here are affected by this, but this is also, this government pay rate determines how much insurers can charge for monthly premiums, for plans that they offer, benefits they offer, and ultimately, of course, their profits, because it all goes into that. Now, CMS says that it's looking to slash this money-making industry billing practice, as they call it. Part of the proposal aims to improve payment accuracy and ensure that Medicare insurers get adequately reimbursed at the same time. Mehmet Oz is the head of the CMS. Dr. Oz saying that these proposed payment policies are about making sure Medicare Advantage works better for the people it serves. By strengthening payment accuracy and modernizing risk adjustment, CMS is ensuring that beneficiaries continue to have affordable plan choices and reliable benefits while protecting taxpayers from unnecessary spending that is not oriented towards addressing real health needs. So we are seeing this big move to the downside because this could have major potential implications for profits for these companies.
Yeah, another example, I think, out of Washington of sort of populist policy proposal. We'll see if ultimately any of this is actually implemented along these lines, certainly reacting as if this is on its way to being reality. But as Jenny mentioned, not the only news when it comes to United Health. We also got earnings as well as a guidance figure that I'm reading shows the first annual contraction for revenue in more than 30 years. Which is just incredible. So, what else did we learn?
Honestly, their quarter, they posted a modest fourth quarter earnings beat. So EPS came in at $2.11. It was a cent better than expected to be $2.10.
Don't.
Revenue came in at $113.2 billion, was a little bit lighter. $113.82 was the expected here. But they also, of course, because of this announcement from the administration, had to acknowledge that announcement in the earnings call. So they did go forward and say that it simply doesn't reflect the reality of medical utilization and cost trends. United Health saying it will work with CMS to what they say, quote,
well, why didn't you tell them that during Obamacare, you idiots?
To avoid a profound profoundly negative impact on seniors' benefits and access to care that would be a deeply unfortunate result for a program that is already under funding pressure from the previous administration. So in addition to that, they're also saying that they do see some contraction in terms of its Medicare Advantage memberships in 2026. They're saying they see EPS growth for the year about 8.6%. They've removed some assets that they felt weren't aligned with their serving the U.S. health system. They say they're taking a critical look across all of their products and market positions, trying to reposition themselves to grow best, and they say the improvement will be more evident this year, and often will take a more operational effort, investment, and time are some of the things they're saying. But 2027, that rate likely going lower. The firm B of A is saying that they think that this will have an issue here, and they're using 1775 EPS guidance as a floor for 2026, expecting a modest potential beat and raise through the year as it continues to execute its turnaround. But how this new number could play into all of that certainly remains to be seen.
You know, one thing, guys, we talked about this with other industries. We talked about how AI has disrupted the Salesforces, the Adobes, and how that changes the math as a portfolio manager on, does this make sense in the portfolio? These companies are like, these insurance providers are like the definition of consistent. And they're kind of low beta, consistent, almost income generating type investments. Well, if their dynamic or their economies and finances are changing this drastically to where, once in 30 years type of impacts are happening, one has to wonder from a portfolio construction, like, do these positions even make sense?
Mm-hmm. And I think that's a great point. I mean, when you look at, right now, a lot of the volatility that we're seeing today, I mean, between, say, Elevance Health, CVS, and United Health, and Humana, we've seen roughly $90 billion in market cap wiped out, which I know that we so frequently talk about, like the $1 trillion club. But, I mean, this is a substantial portion of this one area of the economy that is, again, typically seen as just more stable, more, I'd say, we're just consistent, not necessarily a huge growth engine, but this was, if anything, the opposite of that. So it goes to show bad news, unfortunately, feels like oftentimes this wasn't necessarily in 3, maybe in 2. This is what we got from United Health. But when you think about trading this name now, given its, historical performance, and then today's pretty substantial repricing to the downside, it does then set the stage for any degree of optimism as far as the administration and any upside to their pretty downbeat guidance could actually be, not to say that I'm predicting that this name will just recover, but it's repriced pretty substantially today.
Look, for dip buyers, this one's going to flash on your screen, right? It's down 20% today. It's down, over 50% from its highs. Pick a time frame that isn't 6 months, and it's pretty red on the screen. So that said, it's going to draw the attention of investors, particularly self-directed investors who look for what they perceive as a low stock price and opportunity. That said, there's a lot happening. We just talked about it, and there's a reason this stock has lost a lot of that value. So I have a risk-defined way to think about potentially buying the dip in this name. Goes out to March 6th. It's a short put vertical spread, and it tries to give this a little bit of cushion in the event that the selling is not done yet.
Oh, man.
Also collecting premium.
Look at there. I didn't notice that pullback either. I'd have took that.
270, 265 short
Boeing.
vertical in the March 6th expiration. Looking to collect around a third the width of the strike. So that'd be $1.70 credit.
Dang.
Break even would be $268.30, where you can make $170 on about.
So here's something I charted up yesterday, and I said I'd really like his support on Boeing at 239.40. So I mentioned it this morning, nailed it right to the penny, and I took it off my mind, and we had a head and shoulders, and all of a sudden it pulled right back to that 239.40. I would have jumped on that in a heartbeat. Double bottom off of a orb, and then calling it out the day before. I would have took it. Jenny, you look like shit.
Gold, as we've seen this continuous momentum, propelling gold to hit record highs yesterday. We pulled back modestly, but still an asset class to watch. So we'll dive into what's driving some of the expectations now for this new year.
I remember I was managing this inventory service crew, and This girl come to work and she's scratching. I mean, just scratching everywhere. And I kept watching her. Finally, I said, "Is everything okay?" And I seen a big old flea jump off of her face. And I said, "You gotta go home, baby. You got fleas. We can't bring fleas in this store. You gotta go." I don't know. I didn't know if I could get fired over that or not. But I told her to leave and go take a bath and come back to work. Take care of her problem. This was a broadening out market for sure. Yesterday I called AVGO out. It was pretty early in the morning too. It's hit my resistance level just now that I had on it. Baby, you got fleas, man. You gotta go home. Jimmy's here. Am I here? Randy.
You have to imagine earnings will be a critical test here, as we did touch just fresh all-time highs earlier today.
Absolutely. I cannot get over this run that we're seeing, the continuation of the momentum when you look across memory in general. Talk about the year that they had last year, Seagate, Micron, Western Digital, you name it. And it just continues this year. I will say I've been surprised by this massive move today. We're seeing shares continue to climb. They're up 6% today. Just a big rally today. It's really been a meteoric rise over the past
STX?
the year. If you look
I had that over. Oh, STZ.
More than 500% for Seagate. In terms of expectations, the consensus view is that
Wonder if I typed that in wrong.
looking for adjusted EPS of 283 on revenue of 2.75 billion. And what's interesting to see, you even have an analyst take coming today with Mizuho raising its price target on Seagate to 400. They're keeping it outperform, so that means they're still bullish. They still have conviction on this one, so they see even further upside around this one, driven largely by AI-related demand. There's been this demand for data storage, so that's been a tailwind for this, whether we're talking about hard disk drives used in the industry in the hyperscale data center, so that's been good for Seagate. The cloud giants building these massive data centers, we continue to hear about that. And so that, again, bodes well for them. Mizuho saying the AI demand pushing the average selling price. We know that they've had pricing power for these memory companies, seeing strength there and expected to see double-digit increases in pricing. So Seagate selling these drives at higher prices. We know that can boost earnings, it can boost margins. So, but at the same time, you mentioned the bar being high. The bar is high for this one, but
SPX?
they can't scale it.
I mean, absolutely, and I think that there's a lot of great cases to be made about, betting against, say, a stock that has been, either pummeled or taking off, like in the case of Seagate.
Oh,
where
we're at the 200.
This trend can just continue.
Double bottom.
You can see it move in either direction, but that volatility, I think, is so why we'll be
We're at 63.
into this report. So
We're
we
at the
appreciate
63.
it. Dan King Hall for all of that breakdown on Seagate, a huge outperformer in the broader memory chip world.
There she goes, Jesse. Good guy, good eye. Right off to 63. Double bottom, higher low. We got a head and shoulders coming up. Why the silence all of a sudden? Did I get silence? Can you hear me or not? Hello? Yes. Get the wax out of your ears.
On the investment risk tolerance, but it's definitely something that we're recommending at least 5%, upwards of.
Randy. Watch this video here and tell me if it ain't this gutter causing this problem. They just put the gutters up.
Hard assets.
It's about a yard.
I think the other thing too is elevated geopolitical.
I thought I muted that.
Historically, U.S. Treasuries have been the beneficiary of geopolitical
all the bicycles are laying right there.
And
God, I know I muted that thing.
There, and that might be part of the problem. I noticed a lot of icicles forming on that cap right there. It's about a yard east of the back part of the building where all them icicles are laying right there, and that might be part of the problem.
They just put a new gutter up there. Ventilation issue. Let me type that to her. It might be a ventilation issue when they put that gutter up. Now, what's the problem? There's a leak inside the building that has 3 different leaks. A major one right there by the wall, about a yard east of that window, right up against the wall. And above the ceiling tiles, they got sheetrock, and that's where the water has seeped through. But we never had a leak there, and they just put that gutter up a month or 2 ago. If not that long. Ice dam's what I'm thinking too. Ice dam. Might be called an ice dam. They cut all the trees down from that back side of the building 4 or 5 months ago. It might be called an ice dam. Okay. Okay, back to trading. That's a beautiful call. Little bounce right there to the head and shoulder line. That's a shoulder line. Two-headed snake. If that breaks, we've got a triple top to break. You see that? Triple top. Triple top resistance. Triple top resistance. Oh yeah. Triple top resistance. Where's my... I want to say that to her too. Ice dam is caused by ventilation through if air is going into vents on the soffit down by gutters, but is still not venting because the roof vents are covered. It will cause a dam. Oh, whoa. We barely broke it. Now we're retesting the shoulder line of the Head and Shoulders. SPX options are at $1.95. It's 1 o'clock. Now this is where I made my mistake. Yesterday I talked about timing, and I made it, or I might have said it today. Pick, what day do you trade the best in? Is it the first hour and a half of the day? Is it before lunch, right after lunch, before power hour, or after power hour? I'm breaking them down. What's your best performance? And yesterday I got in this trade right around this time. But we were at a better support. I just made a bad decision on that trade. But this between 2 to 3 is Eastern time is one of my most difficult periods. We have 1, 2, 3 right now off support on the SPX.
Up 31 points here, up 0.5%. The
Dow
Nasdaq
Jones down
100
450.
1% at 25,953. The Dow is losing 1%, 48,961, and the Russell is right now at 2659. In the meantime, here we're looking at oil and gold. Both of them are higher. Oil's at $62, and gold, which has been hitting records this week, $5,085 of $2.50. Had been up over $11 earlier. And the 10-year bond yield to 4.23, so that's important to note as well. Bitcoin not participating, folks. 88,250. It's been hovering around these levels for some time, I'd say months, right? And it crept back up recently, only to go back down below 90,000. Kevin Hanks, host of Fast Market here on Schwab Network, is joining me. And we'll start with the new all-time high. I was on with Marley earlier today, and she said, so what are you watching? I said, I'm watching the new all-time high. I mean, it seemed so far-fetched to even talk about S&P 7,000 when we were at, 67. We had a 67 handle not that long ago, and here we are back to the highs. Some of your thoughts?
Hello, Nicole. Yeah, 7 sectors of the S&P 500 are higher, 4 lower, and despite the S&P being up about 0.5%, the equal weight down about 0.1.
Do they have a tracking system of the Air Force One, why it's in flight? No, I doubt if they do.
Driven by that left side of the heat map, the NVIDIA, Microsoft, Apple, Broadcom.
We're back at the 63. I'm going to be patient and wait for the 100 here. I mean, it's a triple bottom, but I got to be extra careful during the power hour. I mean, before this hour here. Go get me some water.
today, but after the bell, we're going to get earnings. And does that decelerating growth hurt Seagate? Is their valuation hurting Seagate? Did all this demand get pulled forward to Seagate? That's the questions that we're going to get after the bell. I mean, big moves expected in some of these names.
No doubt. Now, the health insurers, we were talking about how the Dow is a price-weighted index, 30 names. You're going to see the down arrow. We look to the S&P 500 on days like this.
God, that's a crazy
names,
stock,
they're
man.
obviously a broader scope. Health insurers are under pressure.
See, I mean, this is how I'm looking at this. This is Seagate on the weekly chart, STX, from $50, $60, 63, 64, all the way to 383 in less than 9 months. They're raising the stock to 400. So that means 380 from 290. So I'm going to tell you how I'd trade this. There's 2 or 3 different ways. Now, if I was a swing trader, I'd get ready to short it because we got 3 white soldiers, and I'd expect it to come back to 345 on that 3rd soldier. But I ain't gonna. I don't short. I'll just wait for it to hit the support level. Then the next one will be here on the 2nd soldier, and I'm going to use it on the top of the 1st soldier because that comes first. That's one way of trading it. It's definitely overbought. I mean, 50 times 379, how many percentage points is that? 650? 650% in 9 months? Are you kidding me? The next way I'd trade it is I'd take and set my Fibonacci retracement off that wick and bring it down here to the bottom of this wick, and I'd set my other alert off the 21 or even off the 9. Yeah, the 9, that's perfect for that, definitely. And then off the 21 on this channel of support in here. So I want to put it above the 9, and I want to try to find an equilibrium in here that matches up pretty well, and that right there. And what was that? That was a 21 EMA on the weekly. You got to put notes in here. Got to be professional. I ever started watching that crew that builds these houses, man. A bunch of country hicks that are making hundreds of thousands of dollars on YouTube. That's what I'd do with your roofing crew, Randy. Hire somebody to go out there and film you, do them roofs. Yeah, that's just too much. So 3 white soldiers, a pull back to 350, and then back up and retrace. In fact, I'm going to put that in here, 3 white soldiers, and take that off and put a new one up. Oh, God. Not again. Always clean. This is the FBI. How may I help you, you son of a bitch? So, first soldier on weekly. Yeah, I adjusted it. I put it on top of that wick there so I could be ready to take it. STX.
Yeah, so listen, I think what, part of the reason where markets are doing so well is forget the noise. Policy is easy, fiscal and monetary. We do expect a couple of cuts, perhaps not looking for one tomorrow. I think the
okay.
I think
here we go again.
This is do or
Trump die.
Come out and, announce a new Fed chair nominee.
Oh, shut up.
And who that would be as...
You guys that don't have a clue what you're talking about. SPX, the 6985s. We got an inverse head and shoulders. We got a triple bottom. Triple bottom. See, after the breakout, I used to trade with this guy, and he thought a triple bottom was like on a daily. You don't have a triple bottom until that whole 20 intraday, and that's not the case. Always clean this, Jim.
Hey, Jim. Okay, I just got a hold of a gutter installer.
Yeah.
They also do roofing. So he said he could be there by around 3 o'clock.
Okay.
Can you assist in getting him access inside?
Yeah.
Okay, and I gave him your phone number and told him to call you, and he's 5 to 10 minutes away.
Yes.
So it's a 417 number also
Oh.
on his end too. So.
Okay. 3 o'clock.
Yep.
Sounds good. I think it. I definitely think it has to be with that gutter. That's just my opinion. I don't know.
Well, I did some research too, and I saw everything that you were just texting me about also. So I'm sure it is, and he probably knows it as well. That's why he responded so quickly, and he's gonna make sure and get out there today.
Okay. Sounds good.
Just make sure you keep documenting, any damage, and especially on the floor and the walls and the ceiling.
Yeah. Just the tiles, and that should dry up if we get it fixed fast.
Yeah.
It's not a bad leak. It's just maybe a couple hundred drips. 400 or 500 drips.
So quickly, I appreciate that a lot.
Yes, ma'am. I'm trying my best. Trying my best to keep sane.
Well, you're doing a good job. You're breathing, so.
And I don't know if you understand, but I treat them people with extra TLC.
Yeah, you go above and beyond, that's for sure.
I went out there and
They appreciate it.
oh yeah, I went out there and swept the parking lot. The snow guys came in and did their job, but to me it wasn't good enough, so I fine-tuned it.
Well, we appreciate that too. Don't forget to send me the receipt for the ice melt that you bought.
Yes, ma'am.
Because what is it, the 27th? Yeah, I'm going to try to do payables by the end of this week. So if you
Okay,
have anything to add, just send it to me by Friday.
I will. Okay.
Okay, well, I appreciate it.
Sweet dreams.
Yeah, bye-bye.
Bye. La 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 la. Fuck, I missed that trade because I took a phone call. bitch is costing me money. God darn it. That'd be a good $100. Actually more, 190 to 270. Well, 80. I was getting ready to buy it, and that phone rang. That would be a song. When your boss calls you and appreciates what you do, it's in the middle of the winter and I just don't know what to do. And the snow came, it got about a foot deep. Ice melt is a treat on the street. So the boss lady calls me up and says, Jim, the roofer at 3 p.m. I say, yes, baby, I will ease your mind, 'cause I just can't take this and I need to unwind. I love to work. Okay. I'm back. Jim, will you go out there and meet him at 3? Yes, ma'am, I will.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com. Welcome back to the watch list. Time for Options Corner, and we bring in real trades in the real action, and Tom White's coming through and finding them for us. Host of Fast Market here on Schwab Network, and it's probably been overloaded with some heavy trading on United Health. Tell us what you found, Tom.
Yeah, stock's down, getting hammered today, down to 5-month lows, down about 20% on this news that, basically CMS noticed that, they're not going to get the money they expected. The street anticipated about 5% growth for 2027 for Medicare, and that's not coming to fruition. 0.09% is basically what they came out with. The administration has told them repeatedly, hey, they're going to make cuts across the board. They need to be more fiscally responsible. They're trying to make healthcare more affordable. So they're not going to be able to raise their premiums like they thought. And that's hitting the whole sector at this point. So, yeah, a lot of pullback here. Piper Sandler just came out with a note.
That was a beautiful call. Kind of regret not getting in it.
They lowered it a little bit, but basically said they'd still be buyers at this point. But I think this is going to take a few days, if not a few weeks, to kind of wash out here for a lot of these healthcare insurers at this point, whether it's CVS, Humana, elements, and especially United Healthcare, they're right in the mix here. But this is some neutral to bearish activity in here in the option market. This was out in the May monthly cycle, so about 108 days to expiration. So this trader doesn't think, this stock's going to go much higher over the next basically 3.5 months. They were out in the May and they sold a call vertical. They sold the 330 calls and bought the 360 calls. They did that about 6,600 times. They collected an average credit of about $4.90 on those. So the break even of 334.91 over the next 108 days. That's about 18% above the current share price and about where the stock closed at yesterday. So this trader is taking a neutral to bearish stance. It might be somebody that's hedging a long stock position that's getting hammered today, or it might be a speculator saying, hey, this isn't going to get resolved anytime soon, and they're selling a call vertical in case the stock does move up. They know exactly what their downside is. But yeah, neutral to bearish call vertical sale by this trader in UNH.
Okay, well, we'll have to wait and see. I mean, the whole group is to the downside. I saw CVS, 12%, and UNH, which you mentioned, Humana. We've got to watch all those names now is what happens with Medicare and how that goes forward, okay, if they keep those flat rates. What about when we turn our attention over to those Mag 7 names? Why did you bring up Alphabet today?
Yeah, it's had a great run over the last 12 months, right? The death of search is no more, as Gemini's doing well for them, YouTube's doing well for them, cloud growth above 34% last quarter, so everything seems to be going right. They report earnings next
back
week.
at resistance.
We've seen 73% gains basically in the stock over the last 12 months. It's been a favorite of the Mag 7 over that time. And then you start looking at the price target hikes that we've seen across the board. It's going to be a big earnings event for them. What are they doing about CapEx spend? Are they continuing to spend? Will there be some clarity that they have with Apple as far as integrating Gemini into their AI foray? So there's going to be a lot to kind of digest in the earnings event a week from Thursday. And we did see some neutral to bullish activity in here. And this is out in the C share, so the GOOG is a ticker symbol. Traders sold 10,000 of the February 6th weekly option, so you're going to capture that earnings event. The 330 strike puts. This trader collected a credit of $7.50 per contract on those, so that takes the break even.
See, right when we hit that resistance, it pulled right back.
Is below 322.50 to the downside over the next 10 days.
So I didn't get this. I would have took that call and sold it right there. For sure. No hesitation. That /ES was off the VWAP. So there's another confirmation. Boil. But what's going on with this thing? It ain't transferring very well. Double top, maybe, or triple top. Triple top. Triple top on SPX. And go down and meet the guy at 3. That went down below that, right there. That's an ascending, oh, well, it's a megaphone. Now what the hell did this line come from? Did I do the? Oh, that's not it. Let's get rid of this. Well, let's keep it because of that pivot point. Now let's make this, sure, I thought I made that. Come on. Right to the triple top. And that's a bear flag. That could be consolidating up for another breakout, or it's going to pull back and land off the 200. Raise my alert up above that red line, because that's above the 200 now. That's a head and shoulders. Hang that out to the left. It's almost inverse head and shoulders. So that would have been a good triple bottom. Oh, dang, I missed it. Phone call.
Enters 2026 with great momentum and can execute on its backlog of $268 billion. And watching Boeing lower despite a 57% jump in quarterly revenues. The company delivered 600 airplanes in 2025, nearly double the prior year, and CEO Kelly Ortberg said there are a lot to be optimistic about going forward in 2026, so watch out. In the meantime, we bring your attention straight to the housing market and the latest when it comes to home prices and affordability. And we did see home prices. The index showed a slight uptick in November. Melissa Cohen's with us, Regional Vice President of William Ravis Mortgage. Thank you so much for being with us. How would you describe the housing? Happy New Year to you. How would you describe the housing market right now?
I think there are people that are definitely interested in purchasing. We thought that interest rates were going to come down further this year. And unfortunately, due to various, geopolitical and economic and political events, bond yields have remained sticky, and the 30-year fixed rate has remained over 6%. We saw it touch below 6%, and people seem to get really excited about the housing market when rates were below 6%. And people take a step back now that rates are a little over 6%.
What do you see for rates? Do you think it goes back below 6% in the first half of the year and the second half of the year?
I mean, we'll certainly hope that rates will come down, but But a lot of that will have to do with what's going to happen. Will there be additional tariffs? Will that be inflationary? What's happening in the employment sector? What's happening in the geopolitical world? We're facing yet again.
The only way we get inflationary is when the government spends a ton of money. So quit being stupid, you four-eyed freak.
Bonds, we need bond yields to come down in order for mortgage rates to come down. So, for example, if President Trump would go through with his statement that he would get Fannie and Freddie to buy $200 billion worth of mortgage-backed securities, that would bring rates down, bring them down quickly, and that would be a great thing for the real estate market.
Understood. So at this point now, when we see what Powell does or doesn't do, what's important to you? What moves would you like to see the Fed do?
I think it's pretty clear that the Fed is not going to cut rates this month, but what will be important will be Powell's tone at the press conference. Will he take a more dovish tone, and the markets will like that, and that could help bond yields go down? Or will he be more hawkish and concerned about inflation and political pressures? And that's a bad thing for mortgage rates. But it's not really what the Fed does. It's how the bond market reacts to what the Fed says.
And so at this point now, what are your expectations for spring selling season? I mean, I know there's a regional story, right? Some areas are hotter than others. But how would we describe what the spring selling season may be?
Well, we're hoping that we'll have a more robust spring selling season. There's a lot of pent-up demand. There are a lot of people that have been on the sidelines for several years now who have, 2 children in a 1-bedroom home or 1-bedroom apartment, need to move on, people who need to downsize, people who need to relocate for work.
Got downsize because of inflation.
Will all come into the marketplace. And
that's a new trend.
Mortgage rates go down a bit, that will.
These millionaires build these huge mansions. They live in them for a couple of years. Hollywood mostly. And then they get mad and want to leave the country. There's a lot of vacant houses out there that are mansions. I was watching a submarine show yesterday about how sailors, how they sleep and navigate on a submarine in a ship. I thought it was quite interesting. The bunks are 20 inches high, 20 some inches wide, 72 inches long, or 62.
Portable mortgage, we would have to create a whole new mortgage servicing system. So I think, unfortunately, it's very unlikely that we'll see portability, and that we do need to work to find ways to bring rates down enough in order to bring buyers back into the market. I think rates have to get down to at least 5.5%, and then I think you'd see the floodgates open.
Do you recommend, just quickly, do you recommend folks buy homes for investment, for rental properties, whether it's a single family or a multifamily home? Do you recommend people do that? And how long should they hold that property for?
It all depends upon the rental value of where they're purchasing. If they're purchasing, for example, in the seasonal area where there are a lot of people that, for example, in Florida, where people come down for 6 months to get out of the cold weather, or in beach areas where you can have strong rental income, where you can actually have positive cash flow, it's a great idea to buy investment properties. But if you're not going to have enough rental income to cover your costs, you can't count on the appreciation in the property, so you need to be careful about what you buy.
Melissa Cohn, thank you. Regional Vice President of William Ravis Mortgage. Thank you, Melissa. Great to see you. Coming up next, Technical Tuesday, Kevin Horner is with us, and he'll take a look at the levels to watch in the S&P 500, also AppLovin and Steel Dynamics, 2 names that have been so busy. The S&P right now is at 69.85, new highs today, folks. We'll be right back.
sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies.
That was a nasty burp.
Platforms to your unique needs with nearly endless customization.
That was nasty.
And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
All right, welcome back to the watch list. It's Technical Tuesday. What a day to check out the S&P levels as we're hitting records. Kevin Horner, Senior Manager, Trading Services, Charles Schwab. We have him every Tuesday, and it's great to see you on this Tuesday because, you know, over the last few weeks we've had, you know, we worried about tariffs and Greenland, and we've had some wild rides, and we...
Yeah, and you thought we were going to blow up this and do that. So here's the Tesla on the weekly. We bounced for the past month off the 21 EMA, and we bounced off of it for 2 weeks off the 21 EMA. So that'd be a triple bottom or a double bottom off the 21 or a triple bottom. I don't know. Definitely the 21. So if that doesn't hold, you got a gap in that top of this here gap or a double bottom where that candle is, but right there. So I'd set my alert just right above 400, 404 or something. Earnings are coming out. Now, the market's real finicky right now, and they think that the earnings haven't been that good. I think they've been great. Not great, but better than they're anticipating. Tesla, though, the electric cars, you know, there's not tens of billions of dollars pouring in there from the government. I don't know how much Biden spent. I bet you it's up there in $1 trillion. Just an EV. I don't want a fucking EV. I don't want the government telling me what I have to drive.
Space of the market, which has been struggling to begin the year.
But that money's not coming in there like before.
Great year-to-date return. Timing is everything. So you're looking at a stock that's down 20%.
Remember, Biden gave $8 billion to Rivian a month before he got out of office. And that's just one of them. Who knows how many deals he made with GM. AMD pulling back and hit the 200. We're retesting the resistance level that I called to break, 69.8439 on the SPX. We got a nice little support coming up on the SPY. So we triple top. So I want to explain something here because I can't get it off my mind. try to find an illustration in here that'll. Get my point across. Okay, there's a good one. Okay, in my opinion, patterns start after a knife or a breakout. So we had a double bottom right here. First thing into open with a lower low with a 1, 2, 3 breakout. So take the double bottom and run it up however high you wanted to get out. Maybe the double top right here and get out of the trade. So the new pattern is going to form after this one. So as we come into another knife, the triple bottom comes in. That's after a previous trade pattern. So we've got what you call fallen wedge with a triple bottom in the wicks. And that created a little kind of fallen wedge, not very big, large mouth fallen wedge. Then you just run that trend line right across there. You got your triple top breakout, 1, 2, and 3. So I fine tune it. They're using the wicks, I'm using the bodies. I want to get in that trade before they do. And then out at a double top, triple top. So a whole new pattern starts after this breakout. You got a triple top, or you got a quad. So triple bottom doesn't have to be at the bottom of the page. It can come after every pattern that has been formed. So here's another one right here. Breakout, pull back, 1, 2, 3, boom, to a double top. And that window's done. There's a triple bottom, fail. The triple top. This is called a Darvis box. Depends on what kind of time of the day it is. If it's later in the day, it's a little bit more risky. People are taking profit. If it's early in the morning, this thing could have broke out.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Same kind of pattern. That's yin yang I talk about a lot.
Welcome back to the watch list. I'm Nicole Petalides, and it's time to talk tech. We have a lot of earnings come in. The AI trades. Is there a bubble, or is that finished? That talk is over. Clayton Allison, portfolio manager at Prime Capital Financial, is joining us now. And we've seen tech lead and lead and lead, and AI has been the talk, and the CapEx spending. And now I use Jensen Huang's quote about infrastructure build-out being the largest in human history. Is tech going to lead in 2026, in your opinion?
Well, first off, thanks, Nicole.
They moved it to the 200.
And it's hard to say which sector is going to lead in 2026, but obviously the mega caps are comprised primarily of tech names, a lot of those being those semi-cap companies that are going to be leading the AI trend. And as we've continued to see, the market continues to kind of pummel in CapEx spending in this data center infrastructure build out. So I don't think Jensen is too far off base by saying that it's going to be the largest one in history. And in the end, you just kind of want to follow where the money goes. And right now, it's seemingly, after we're seeing today with the NASDAQ up as it is, tech continues to kind of be that leader in the marketplace right now, so to speak.
All right, so what parts of tech will lead? And I want to get into, sort of names that you like, one over the other. I think Broadcom over NVIDIA, for example. But what parts of tech should people really be focusing on?
Yeah, so for the better part of the last 2 to 3 years, ever since NVIDIA really came out with their new AI chip,
NVIDIA,
the chip makers, AMD, NVIDIA have really been the industry darlings. What we're getting our arms around here at Prime Capital is more of the infrastructure build out like we talked about earlier. That's going anywhere from power generation to management, cooling, connectivity, the land that these data centers are being built on. There are a lot of layers to this trade and this longer term AI secular trend that you can peel off numerous layers to find opportunities. Some names, especially, we like to go across the entire supply chain of this and not just be looking at the chip makers themselves. Some names that we've got, within our strategies that we like quite a bit, NextEra Energy, Broadcom, like you mentioned, and then Eaton as well, that kind of make up the entire supply chain of that infrastructure build out.
Well, why Eaton? Let's hear. Another guest picked Eaton today. Why is Eaton on your radar right now?
So he's been on our radar for a while now. We've held it in our portfolios for quite some time. Now, if you kind of work your way entirely back from NextEra, they're going to be the ones that are going to be generating that power to supply to the data centers that Meta, Google, Amazon are all building out, but you need somebody to help manage that power. My dad's an engineer, and he'd be very disappointed if I had the wrong pressure valve on my pipes at home, and then all of a sudden the pipes burst and potentially ruin my home. In this case, the data center is millions upon billions of dollars worth of high-end computing chips that could be ruined should you not properly manage that power grid that is being facilitated to run that compute. Now, Eaton's going to be doing that through their switch gears, their transformers, and as well as their power management software. So they are regulating that power that's being fed into these clusters. And without them, you can't get it to work. You're kind of up a creek, so to speak. So we really like Eaton's competitive positioning as they are also partnering with these chip makers like NVIDIA. They have a deal out right now that they are taking them into account when they are designing the infrastructure and the architecture of these data centers to really manage that compute better.
Let's talk briefly about NVIDIA. I know it's not necessarily your favorite stock right now, but we can't deny that it's been incredible. What drives NVIDIA in your mind? Like, are you going to find it attractive at some point? Do you stay away from it? Is it too frothy?
We still like NVIDIA. It's just we have more conviction probably in Broadcom at this current juncture than NVIDIA, so to speak. NVIDIA is still going to be your industry leader when it comes to AI accelerator chips. So by no means are we shying away from them at any point. But we're starting to see that the secondary beneficiaries of this trade are starting to really take hold as we've started to see that being talked about more in the marketplace. Obviously, power has been a key topic as of late the last couple months. So it's less leading with NVIDIA and just trying to make up more of our portfolio around the edges rather than relying solely on NVIDIA.
And Meta, Microsoft, Tesla, Apple, all reporting now in the next 24, 48 hours. Do you have a favorite among those? Quickly, Clayton.
I think Meta's kind of been in the penalty box for a little bit now. They've been really spending hard on their CapEx for their data infrastructure build out as well on their data centers. I think that, expectations are a little bit lower than for them, and, I think they'll surprise the upside.
Clayton Allison, Prime Capital Financial. Thank you, Clayton. Great to see you.
Clayton, you're smart.
Good luck there at Tech. We appreciate it. Okay, coming up next, the UPS earnings and much more coming up. Some job cuts, too.
Oh.
We'll be right back.
The market should love that. They used to love it.
From the most iconic trading floor in the world, this is Opening Bell with Nicole.
Boy, they used to just ring the bell when their job cuts.
Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, opening bell live at the NYSE.
Yeah, good work.
Trading at Schwab is powered by Ameritrade.
UPS is cheap.
Giving traders even more ways to sharpen their skills with tailored education.
You know, I would almost consider, I called this out at 85 something. Now we're at 110. This was a 3-year low right before earnings came out. Or last quarter. Last earnings. Not this one. A 3-year low. So I've added a moving average on here, and I'm trying to test it out. It's a new moving average. Can anybody tell me what I added? Class? Randy? Oh, damn, who's that? Wow. Is that your girl? Damn. Nobody can tell me what I added, can they? YouTube, do you know what I added? Answer me now. It's the 100 simple moving average. Why? Well, look at here. 100, 100, 100. So somewhere on 116.34 has to break. That or it pulls back and bounces off this here resistance, this support at 102.67. No, higher than that. The body of that candle went there. There it is, right there. So I'm going to set my alert right on the wick. Alert set 105.44 and then back up, or come in tomorrow and see if it pulls back and hits that 63 and then take it up to the 100 SMA. I better put the weekly on this one here. Type it in. How's Cold doing? KOLD. Randy Cold's back down to support. Oh, damn. Did you see that? Randy. Oh, there you all talking about it. Did you call that bottom out? That's a double bottom on 5-day. That'd have been a perfect call. Perfect call. Good job. double bottom on 5-day. I would have took that in a heartbeat. Relative range index. This is something I want to learn. There's no news on it. What are you doing trading a stock that has no news? They don't make no sense. You have noticed that the 100 SMA is good to look at? Especially probably in drama. Or resistance to break. Could be used as a pivot point. But probably better in a different time frame. There's a daily. Yeah, there's a support off of it right there. Man, this looks delicious. Really. Actually, 16.20. If I knew more about it. Here's a triple top, drop. Then it pulls right back to support, bounces up, breaks the triple top, or hit the quad, then pulls back and breaks the. So these are big gap downs. Must have had some bad news or something. Amazon. Yeah, no. See, I like he's learning to trade from the master. I like using these 200 EMA and SMAs. I used to trade the 100 SMA years ago. And I substituted it for the 63. No, it's been way before that. 15 years ago. I traded the 100, the 50 SMA, the 100 SMA, and the 200 SMA as a strategy for swing trading. To Power Hour. Beautiful Amazon. This is getting pumped by Pelosi. You all know that, don't you? She's pumping Amazon and Google. Goog. Let's see if there's any news in here about her pumping the stock. Oh, look at the news. This fucking stock. Look at all that news. From here all the way up to there. Amazon Whole Foods expansion takes aim at Walmart. Amazon to shut down all Amazon Go and Amazon Fresh stores. Bank of America, or B&A, B of A Securities maintains Amazon, lowers price target to $286. United Parcel plans to cut 30,000 jobs. Amazon drag is ending and UPS smells a turnaround. This thing just gets a ton of news. It really does. Yeah, Jim, will you go down there and meet the roofer? And then bring the roofer up at around a little after 3. Have him look at the spots. Looks like an ice dam formed, in my opinion. Needs a little more ventilation.
one of the top performers in the S&P 500 today, as we did get some reports that unveiled this multi-year deal worth $6 billion with Meta Platforms. And that's a huge component right now of these glass substrates for these high-performance displays, but also a huge part of the fiber optic story with the broader AI build. So seeing these pockets of strength, although today is pretty widespread, as you have Lam Research up 6.5%, Micron up another 6.4%, and Seagate. I think that the real critical test, though, will be earnings, because for a name that has been near parabolic, I mean, one of our, I believe it was the second best performing stock of the S&P 500 last year, this has been a critical run for this name. Earnings are always going to be a crucial test, though. But to the skeptics' point about the expense of basically the hyper valuations we're seeing in some of these names, we've a lot of times made that argument and seen some of these names just continue to make new all-time highs. So anything really could happen is, of course, earnings volatility. That's why we talk about it, because it's always fun to guess.
And we will know shortly, in just about an hour here, we'll have those earnings, but we'll be covering them live on the show. But a good day across the board in memory and in the chip names today. I want to talk about healthcare, though. Not as strong a day as when we're talking about the healthcare space. We got this announcement from the
STX earnings
about Medicare Advantage plans and the proposed rate for 2027, considerably lower than what analysts were expecting, what the insurance companies were expecting. And then we saw a significant move to the downside, sort of coupled alongside United Health reporting their earnings this morning.
Right, and so today, I mean, this is the biggest drag on the Dow. I think that this speaks to some of the underperformance we're seeing amongst the four major averages, and I think right now the biggest drag also in the S&P 500, frankly. Just thankfully we're seeing the heavyweights being able to prop up some of that pressure. But I think that you look at the broader policy and Medicare Advantage pressure, I mean, that's a major driver. I think that you go through United Health's earnings, easy to understand why there was some concern, but I mean, this right now is a government policy affecting major future payments. CMS proposing now a very small increase of around 0.9%, and Medicare Advantage pay rates that was far below the mid-single-digit expected increase. Now, Medicare Advantage reimbursement levels are, of course, hugely important to these issuers because these plans are a huge part of their membership growth, but also their profitability, and it really has affected all of these names. I mean, we have names like Humana, CVS, Elevance now dropping roughly $90 billion in market cap just in this single session. And we talked about this story today on Next Gen Investing. Frankly, it's mostly a space, and it hasn't actually been as even as maybe perhaps the last 10 years because we've seen volatility really since Trump took office, but it's seen as a space that's typically more resilient. Obviously not the case today when you have 20% moves to the downside. And so I was trying to really find maybe an optimistic way to look at this because, again, it was United's also guidance that gave some concern. And all this to be said, the bullish thesis is that right now they delivered earnings in line on a per-share basis, revenue missed, future growth disappointing, yes, but that right now with such substantial pressure and especially so much focus on these names, any degree of change in policy and also just improving profitability metrics, which these companies are capable of doing, could lead to then hopefully some continual recovery. Because yeah, this is a big move for some of these names that just don't typically see this eye-watering of downside pressure on one single session.
I mean, we're seeing near 20% moves here in Humana and United Health, but United Health coming out because their earnings sort of coincided with this announcement, making a point to say that they don't feel that proposed change reflects the reality of the actual cost trends. So there is a bit of time. It's usually not set until April. So I imagine, Jenny, this will not be the last time we're talking about what the Medicare Advantage rate increase will be coming up. But I do want to pivot here to talk about silver. We've been talking about the precious metals rally that was seemingly unstoppable. Well, it turned out that we're not going to make another record, at least here in silver today.
Not today, but silver's price has just logged, I mean, its biggest one-day jump in decades, almost 40 years, after spiking to roughly $113 per troy ounce. Over the last year, we've seen it surge now between roughly 240 to 260%. And more than 50% just in the last month. So daily gains yesterday were between 5 and 7%. Again, huge move to the upside, but reflects some of this intense safe haven nature we've seen alongside gold, plus some very strong industrial demand from clean energy and electronics, which has also been a huge, at least right now, I think, portion of the market that's been important because there's been these supply constraints. So the gold-silver ratio has also collapsed from above 100 to around 50, showing again that silver has dramatically outpaced gold's percentage gains as investors do crowd into this market. So right now you read the overall expectations of what we can expect going forward, because what goes up obviously has the potential to go back down, as we're seeing that pullback today in silver. But there's various opinions on this. Some saying that right now the strong buying in China has also helped add fuel to the fire. Right now, predictions markets pricing in around an 80% chance of a government shutdown. So these fresh renewed fears of a government shutdown, looming U.S. dollar concerns, the
$90.
all of that does pose well for this more
$69.85 is $3.
But Citigroup does expect now spot silver prices to hit a record $150 per ounce within the next 3 months, pointing to, again, this continued momentum in China. Goldman said silver is behaving like, to quote them, gold on steroids, and acknowledged that silver does look expensive, especially when looking compared to gold and compared to historical standards. Over the last 12 months, though, silver has jumped 264%, gold's up 86%, which just speaks to that key difference. But another key difference is the fact of liquidity. I mean, the value of gold transactions in November was roughly 6 times that
More
of
people
silver,
can buy silver,
and
too.
not everyone was as enthusiastic. I mean, JP Morgan, their former chief strategist and co-head of global research, said silver should be trading at basically half of its price right now for this year. So we'll have to see if this downward pressure can continue, but frankly, from watching this name, it hasn't. Some of these names, these days have been bought so quickly, and there seems to be this dip buying appetite for these precious metals right now. But again, I say that cautiously because we are down pretty substantially today.
Well, it is interesting, too, to hear the departing viewpoints, right? Like Citi coming out today and saying, oh, no, we'll be at $150 in silver, which honestly would have seemed crazy a few weeks ago, but now we've touched 113, and we're not that far off, whereas then we're getting another reputable person in the space saying, we'll be at half these levels by mid-26. So, we've got one end of the spectrum, we've got the other. Where we land, if anyone has a crystal ball, let us know. But with GM, let's talk about them last, because GM's having a great day. We've talked about a lot of downbeaten ones here, but GM hit a 25-year high today on a mixed earnings report, frankly.
Yeah, I will say that. I mean,
mixed.
Expected cash flows this year.
That ain't what they said this morning.
Shareholders. I said this before, I'll say it again. I think that one of the most enthusiastic things about the report was the fact that they plan to now hike the
mixed. That ain't what they said this morning on CNBC.
Result of these previously disclosed write-offs, mostly related to their struggling EV business. But their $2.8 billion in adjusted operating income this quarter excludes roughly $7 billion in these write-offs and these special.
They took billions. Biden gave them billions to build a new factory for EV cars, and they couldn't sell them.
Year. For all that to be said, I mean, I do think that you consider that they've totaled, as far as some of these write-offs related to EVs, $7.6 billion. Ford announced roughly $19.5 billion in relation to some of these write-offs with its EV business. So they did say they would have had significantly lower volume in EV sales this year, but they haven't given much clarity about what that EV landscape looks like going forward. That's tend to where I focus, because I'm an EV nerd, but I do respect the fact that they're acknowledging this portion of their business, frankly, they could not figure out how to make profitable. And it seems like this is clearly very much resonating with the street today, because it's been a story of pain for some of the tariffs, the pricing pressures of these automotives. But this is a great barometer on some of the broader automotive health, and today's definitely encouraging.
Yeah, certainly. Almost 10% to the upside for GM. Ford also higher on the day. We've got Tesla reporting earnings tomorrow. They are lower in the setup for their earnings report tomorrow afternoon. I want to thank Jenny Horn for being with us, co-host of Next Gen Investing, to break down some of those top stories for us. And I do want to check back in with Sam in New York to find out what we have coming up next in the show. Sam?
Well, Marley, I'll be joined by the CEO of Trinity Capital, which is trading near a 4-year high. We'll discuss the outlook for the credit market and risks facing capital. That's next on Schwab Network.
Hey, investors, you know the market moves.
Are you going to make him
Schwab
up
is
a
gonna
tree?
help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, Powerful trading platforms and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
Yep.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Vadas in New York. Shares of American Airlines falling after the airliner took a $325 million revenue hit from the government shutdown and missed on both the top and bottom lines in its earnings estimates. The company also noted that this latest winter storm, the one that just happened this weekend, is the largest weather-related operational disruption in the company's history that resulted in more than 9,000 cancellations to date. No word on exactly how that's going to impact revenues for the current quarter, but we can see airlines overall under major pressure, as we know across the board. They had thousands of cancellations, even more thousands of delays, and it will have an impact on the top and bottom line for these airliners. American having the most pain today. United, that's not quite right. They're not down 34%, but American is down close to 7%. Delta down close to 2%, Southwest 1%, and there we go. And United is down 3%. Not a great day for the airliners today as they try to recover from these storms. The FAA and the Department of Transportation saying that perhaps tomorrow will return to normal operations at airports nationwide. But I do want to send it back to Sam in New York.
Thanks so much for that, Marley. Well, Trinity Capital stock hit its highest level in almost 4 years this month. For our spotlight, I'm joined by Kyle Brown, the CEO of Trinity Capital. Thanks so much for joining us, Kyle, and leaving the warm weather to come up here just to speak to us on the floor today.
I heard there was snow, so we had to come see.
Look, your stock is up. It's up 14% or so year to date. You're doing something right. You're outperforming here. Just talk us through how we closed out 2025, because you and I spoke along with Marley at the end of the year in December. Yeah. You were talking us through some of the trends you're seeing. What are you seeing now as we move into the new year?
I think last year was a big year for private credit, and I think the success kind of ranged based on where you focus on in the market and what kind of private credit lender you are. And so for us, it was a record year. We focus on late-stage pre-IPO type companies in the lower middle market that are sponsor-backed. That market is moving right now. There's lots of deals happening. It's an exciting space, 3 to 30 million of EBITDA. We see that trend continuing this year. And then I think the middle market, upper middle market probably continue to struggle unless M&A activity really picks up in a unique way. Right. Trends heading into this year, manufacturing. We do a lot of manufacturing equipment financing. That has been picking up steam over the last 18 months. More and more companies onshoring. AI has driven massive kind of CapEx spend, and we're seeing more and more opportunities there. So really bullish on the space right now and the opportunity in front of us.
Okay, so obviously with this manufacturing, the
TRIN
on that because it's a fascinating one. What are the drivers of that, and what are the limitations that you're seeing with respect to
Trinity Capital
going into that entire initiative right now, because it's such a big investment theme?
Well, I mean, I think, with COVID, I think over the last 5 years, you've seen globalization can cause some serious disruptions to supply chain when things are going right. And for a lot of these companies, having more control over it is important to have it here in the U.S. or at least in North America. With AI and the advancement there that's happening, you're seeing more and more efficiencies with logistics and manufacturing. Robotics, huge right now. We're seeing massive investment into robotics, obviously heavy CapEx spend, but that also helps make manufacturing more efficient, more cost productive, right? And so you're seeing more and more companies bring things back, or startups and new innovation is just starting here in the U.S. rather than skipping to Asia or somewhere else. And so I think there's also certain incentives that are in place to make sure you do manufacturing here in the U.S. And so it's a combination of all of those things that's really driving more and more manufacturing domestically.
And you've got a front row seat being down in Phoenix, obviously, with what TSMC is doing. That's really been a big part of this story. How do you decide which companies to invest in?
So we're really focused on companies that have a moat around their technology. We don't want to take technology risk. And so we'll underwrite to make sure that a company has really unique technology. They're 2+ years ahead of their competition. They have IP protections in place, and they're disrupting something that's old and archaic, and they're well down the road. There's real enterprise value in that technology. So when we lend against it, we're at a low loan to value, typically 20 to 30% loan to value against a company's enterprise value, including their IP or their equipment. And that's an important part of our underwriting, because some of these companies will become the next Google. Some may not. And so making sure that we get off risk quick and have some combination of amortizing payments and then value in that equipment or technology is critical to underwriting.
And the private credit market is growing, and it's pretty hot right now. I mean, I think when you were on last time, you were talking
Cost
about
pulled back to the 200 on the hour.
along the lines of over 20 years public
COST
decreased 50%. So obviously that's where you've been able to capitalize on some of that as well. I'm just wondering, you know, with respect to
Oracle has a triple bottom.
From and you're investing in, you're throwing that money.
Now, when did I put
behind.
this on here?
What changes have you seen as a result of, say,
That had been
artificial
a
intelligence that is different to before? Because I know you've been doing this a very long time.
Yeah.
Shut up. It's not the hour. It's a 15-minute. That's pretty close. Hmm. 5-day, 1 minute. No, it ain't that. Well, maybe it is. No. I don't know what time frame I had that on. Or I just drew it in sloppy. I gotta not be sloppy.
I think where banks have found a great niche is identifying the massive amount of private credit lenders and companies that are out there now and providing leverage to them. They might make 100 to 300 basis points less on a loan to a company like ours, but they're sitting at a 50% lower loan to value, a nice risk-adjusted return. They can do it at scale, they can lend more money, they can grow with us as we grow, and then we can do the underwriting and take that extra risk to generate a higher return for investors. So I don't, it's banking as it really should have been, and I see it continuing going forward.
What's the story for 2026?
AI.
Right.
And I think everything that goes along with it. So robotics is a big deal.
Yeah.
We've talked about manufacturing. We see more and more planned CapEx spend going forward, and lower middle market. The baby boomer move and that transfer of wealth, it's already begun in the next 5+ years, is going to be incredible.
And that leads me to sort of my next question around obviously the demographics and the economics as well. I mean, you know, you look at consumer confidence surveys, people aren't feeling good about sort of kitchen table type topics. Obviously you've got inflation, obviously you've got the jobs market. When you invest in these companies, as you say, at a stage when they need capital for things like hiring and marketing,
always clean this gym.
From these companies with respect.
Very good, sir.
I apologize. I was supposed to give you more notice, but I spaced while I was driving. I forgot to. I'm sitting here at the stoplight here in Boulder.
Okay. You want me to run? Give me about 6-7 minutes and I'll be there. Okay, I got a Passat. You'll see me do a U-turn and park in front of a few cars. I'll be there in a moment. I'll get my shoes on. And, okay. Yes, sir. Oh.
be Googling something anymore. You have a lot of power at your fingertips, and these are going to evolve and change, and we're going to keep adapting, and we're going to keep learning how to integrate them into our various businesses in unique ways. And so I don't see that going away, which means there's going to be increased demand for AI, compute, and then power. And so I see more and more demand for really, I think we're going to solve power issues by just simple market conditions and supply and demand. It's needed, so we're going to figure it out. That's what America does.
Yeah, well, it certainly does, and we certainly hope so, because obviously some of the more sort of high-profile, influential people have flagged that as being particularly a constraint. I don't know how much of that is really priced into what we're seeing here. You know, when we hear from some of these hyperscalers in the next couple of days, how much they're thinking about some of the energy needs and the power as well. You know, talking about the economics here, and, you know, obviously I just mentioned the Fed, how are you thinking about interest rate cuts? I mean, how does that affect, you know, the cost of raising capital here?
Well, I mean, rates coming down, and we've kind of baked in 50-plus basis points of rates coming down. That's going to impact the middle market and upper middle market in a unique way. The majority of their loans are tied to SOFR, so if rates come down, they make less money. There is some offset because their facilities are also tied to SOFR, and so the cost of capital should go down. But you will see net incomes of a lot of private credit firms go down. We have protected ourselves against that by putting floor rates in place, which we're now bumping up against.
Right.
So the majority of our portfolio is at its floor rate. And so we'll see less impact to our portfolio and income as rates come down. But we've been able to figure out how to operate this in a zero interest rate policy period, in an increasing rates interest rate policy period. And so it's just understanding the game. The Fed creates inflation, and then they try to squash it.
Yeah.
And getting ahead of it is important.
And speaking about this game, just very quickly, if I can ask you one more last question, because you've got a really interesting, unique perspective. The productivity that we're starting to see as far as the growth that's coming in better than expected and is expected to accelerate this year seems like a bit of a paradox when you're talking about interest rate cuts.
Yeah.
Talk to us about that dynamic.
Yeah, I mean, we're sitting at mortgage rates at historical kind of norms. We're looking at our current prime rate at kind of historical norms. The market is doing great.
Right.
Forcing the rates down could make the market burn hotter, which would cause inflation. So, you know, that is the game we're playing. Some of it's political, some of it's not, but...
It pauses right when I get ready to leave. It does this every time.
We're kind of towards the trough of
jacket
before it pops back up and we go the other direction. So
I love your thinking. All right, it's a tricky needle to thread. Don't envy those who are sitting down the FOMC table right now. Really, really appreciate it, Carl. Thanks so much for joining us here on the desk. Come back and do it again soon. All right, that was Carl Brown there, who's the CEO of Trinity Capital. Marley, I'll send things back over to you.
And thanks so much. Coming up next, we're going to discuss tomorrow's FOMC announcement, gold's rally, and we'll get an energy pick from Dr. Preston Cherry. Stay with us.
Get my water to go. Gotta go beat a ripper. I'll see you back in a bit. Get my water.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Sam Vargas on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. Just a quick market update here. We've got about 30 minutes to go or so until we hear those bells, but obviously we have seen a nice intraday record for the S&P 500, managing to hold that there 0.5% higher at 69.83. So obviously we are closing in on that 7K mark, so everyone's getting their hats ready. A lot of this has been driven by obviously what we've seen in technology. We're seeing that rotation back, this positioning ahead of what's going to be a very big week on earnings with respect to 4 out of the 7 Mag 7 members. So we do have the NASDAQ sitting up quite comfortably. A lot of the memory names are helping fuel that as well. Western Digital among one of the biggest performers and the best on the S&P 500 today. So we are seeing some nice gains across chip stocks today. The Russell 2000 has managed to actually crawl back some of that lost ground earlier in the session. We were looking at an extension of losses, but now we're sitting up perky by about 0.2%. But we do have the Dow Jones lower, and of course a few components weighing on that, with of course what we're seeing in healthcare with United Health, and then also of course Boeing has been a little bit of a drag there as well, down 2%. A very diverse type of earnings day with of course the breadth of companies that we've heard from, some mixed reactions. Obviously we've got from the industrials, the defense names. US dollar has been a really big story for us, particularly because of the strength we've seen in the euro. Look at that, the Dixie at 95 right now. So that has been really a big driver and catching a lot of attention in the market. Crude oil, 62 bucks a barrel. So we are ticking higher, almost 3% right now. Bitcoin is trying to catch a bid here. We're at 88,000 and change. And then the 10-year yield, which has been holding pretty steady as she goes there at 4.23. We're back to those levels where we're sort of stuck in a bit range bound, maybe looking for a bit of a catalyst here. We're looking at the FOMC decision and what they have to say tomorrow. But as far as our sectors are concerned, pretty green across the screen, all but healthcare, which is lower on some of these headlines around Medicare, of course. And then, of course, we do have financials lower, and materials has just dipped below the line as well. But everything seems to be looking up pretty perky at the moment. As you say, see, it is very much green across the screen when you look at some of our major heavy hitters in the Mag 7. All right, let's look at the broader market now. We're joined by Dr. Preston Cherry, CEO of Concurrent Wealth Management. Thank you so much for joining us. What do you make of these markets today, given some of the uncertainty, given what we're seeing in the dollar?
Well, it may seem like we're in a breakout period, but I feel like I'm on the O'Hare tear mark a little bit. I think we're in a holding pattern a little bit. It's going to be a busy week with the FOMC, as you mentioned, and we have a lot of reporting coming up on the plate. We have Microsoft, Apple, Meta, Tesla, all going to report. I mean, so the information that's going to be coming to us this week could be a boon to portfolios, or it could be a barrier. We'll see what type of effect it's going to have on short-term and long-term investors.
Well, you picked an interesting tarmac to want to be on right now, O'Hare, of all the airports. It's cold, it's snowy, it's covered in ice. Maybe not a bad suggestion for sort of what we're dealing with right now in terms of the uncertainty in the markets. You know, they're not panicking, but uncertainty is certainly elevated, tied to geopolitical concerns, it being a midterm year, uncertainty around the Fed. You know, what's one or a signal that you're keeping a close eye on here to decide if this is just some headline risk or something that's more durable that's going to continue through the year?
Well, I think that Fed Chair Powell, I think his information, what he comments on, is going to tell us a lot. And the signaling of standing pat, which is the word on the street as far as rates are concerned. You know, inflation has been steady a little bit year over year, but it is elevated in a lot of factors that affect pocketbooks. Portfolios and pocketbook conversations are different. Portfolios are doing well. The last year, it was a great year. This year, we're seeing record highs already in the market. But pocketbook conversations are different. So when you're talking about healthcare prices, childcare prices, home prices, all those are inflationary. Unemployment is tepid a little bit, but it's still, you have to manage these type of areas, inflation and unemployment. So staying pat right now, not causing or adding to the uncertainty may be the best move right now.
One of the observations I've made in this market this week is the fact that they're able to look past some of these tariff threats. Obviously, we woke up yesterday, we were hearing about some of the threats on Canada as far as tariffs, and that was obviously over the China trade deal. And then obviously last night, we also heard about President Trump targeting Korea with respect to taking a bit too long as far as he was concerned to basically live up to its end of the bargain. However, stocks rallied through that, and in fact we saw the South Korean Kospi hitting a record overnight. What does that tell you about where investors are at right now?
Yeah, I think that, it tells us a lot because gold and silver is acting the way it is, and we'll get to that in a minute. But I think that the markets have been baking in for quite some time for the last couple of years of the known unknowns, which is uncertainty. And that is the Trump tariffs, the unfortunate geopolitical risks like Venezuela, Greenland, and all of these known unknowns that keep happening over the last couple of years and will keep happening. And it's been a known trend. And it looks like the market's been baking this in as their known unknowns. But that's not good for the economy as far as the pocketbooks are concerned, pocketbook conversations. This can't go on for long. And that goes back to Fed policy and trying to manage that out with unemployment and inflation. And like in the last segment, how are businesses baking this into their forecasting? So whether it be the markets, the corporations, or the economy, uncertainty, either geopolitical risk or continuing administrative this or that, cannot continue forever.
All right, you mentioned gold and silver, so let's get right to it. A very interesting day to talk about them. Certainly different than yesterday. Yesterday, we're talking about new all-time highs. I'm looking at gold. We're back above the $4,100 level in terms of gold, but silver turning lower today after touching 113, now down to 110. After 25% run-up in prices, we're no longer moving in tandem here with the metals. What is your takeaway on the action and the diversion that we're seeing today?
A lot of folks have recency bias with the metals. And I know gold and silver had a fantastic year last year. I think gold returning in the 60 percentile and silver 140%. That's amazing. We haven't seen returns like that since the 70s. And one thing that's been familiar like the 70s was the convergence of geopolitical risks, administrative philosophy changes during that time, inflation, and a whole bunch of aspects. Please turn the lights on. And a lot of aspects converging on at one time. There was a study here recently about the boom in gold and silver. It's not really attributed to one thing: geopolitical risk, inflation, or central banks buying because of a weak dollar. It's not just one thing. It's the convergence of it all. And then people are flying to safety, to what they know. And that is gold and silver, because there's lack of trust in what everything is going on. So they fly to certainty, and gold and silver are one of these things. And it's been kind of explaining what the surges have been.
Sticking with the commodities patch, let's just switch to what we're seeing as far as energy is concerned, and something that you've been paying attention to, and that is EOG Resources. Talk us through that one.
Yeah, very few people know about this, or maybe they do, but I'm a Houston boy. So I love the energy sector, and sometimes it's quite boring, but you know what? Everybody needs energy. The energy sector may be boring, but it does evolve with the time. And like the last segment was talking about AI. There's AI, then there's AI adjacent, and then there's AI adjacent. And AI is going to be taking energy. Energy is directly in the homes, obviously, and it's going to continue to have demand there. But then when you have AI, it's going to take a lot of energy all over the world. And EOG is particularly interesting because it's diversified and it's just not oil dependent. So it's about 60% oil, 30% natural gas, and 10% NGL. So it's diversified. It has strong balance sheets. It's shareholder friendly, so folks like a little income in their pockets. So EOG likes paying a base dividend over time and a special dividend during bull times and boom times. And they like being operationally sound and making good investments, high return investments.
Well, Dr. Preston Cherry, we want to thank you so much for being with us today, taking the time. We're out of time, but such a great talk here. Again, CEO of Concurrent Wealth Management. Thanks for your insight there. Coming up next, we're going to delve further into the drop in healthcare stocks today after United Health's report and the impact of slower Medicare spending increases. That's next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
I'm Marley Caden alongside Sam Vadas in New York. Healthcare stocks the worst performers in the S&P 500 today. For more on the sector and why we're seeing so much downward pressure, joining us now, David Tung, the senior analyst in healthcare at Argus Research. David, thank you so much for being with us. We've got this announcement on the new proposed rate for Medicare Advantage. Following that, we saw about $90 billion in market cap get wiped from these healthcare insurance sector today. What are your thoughts on the reaction we saw to this announcement?
Yeah, it was quite a surprise for the insurers, and clearly United Health on their quarterly call this morning, they said that, this is another year of a decrease in funding. These insurers have been coping with rising medical costs, rising utilization, and they really wanted those rising costs to be baked into the new rates, and so far they're not there. Now, I would point out that there have been prior years where the advanced rate would come out in January, and then by the time they were finalized in April, there was an increase. So I'm sure that the insurers are working with their CMS counterparts to point out all the cost pressures that they are coping with.
David, the response has been pretty ugly in the market. I mean, we're looking at double-digit declines there. I mean, Humana is down 21% right now. United Health was out with some earnings, but investors largely looking past that. This really is not helping things. It's down 19% right now. Given this is just a proposal, are the moves we're seeing in the market today, you think, justified?
Well, if they become finalized, I mean, we could be looking at 15-20% decrease in earnings just from Medicare Advantage. So you bake that in, but it was a big surprise, and when you have surprises, the market trades down.
And David, it was a big surprise in that it was so far below the range, 5% being the midpoint of what was expected for this increase, and for it to come in less than 1%. Historically, once the proposed rate is announced, does it stay put, or does, like the commentary we got from UNH today saying that it was grossly mispricing their costs and that it wouldn't actually cover them? Do you anticipate there being some upward movement of this level before we get that final number in April?
As I mentioned earlier, there have been prior years where the final rates were higher than the advance notice. There, as United alluded to, they're working with the people at CMS to point out, the impact of such a, of this funding. They have, rising medical costs, and they want to point out that if they, if they don't increase these rates, the insurers are going to have to cut benefits.
And David, obviously we're seeing that this sell-off is broad-based. I mean, you're looking across the entire space right now with red arrows, as I said, most in double digits. Do you anticipate that there are some that are going to be sort of better off than others in this scenario as far as more insulated from a plan like that?
Well, United is just, Medicare Advantage is one part of their business. They have a large commercial business, where they underwrite insurance for employer-sponsored plans. They have Medicaid, and they also have a very large, Optum Health, Optum RX business. United is going through quite a bit of transitions. They're repositioning their Optum business. They are in margin recovery mode in their commercial insurance business. What that means is they've increased their premiums on the commercial side, and they expect membership declines in there. They expect a small margin increase in profit margin in 2026, and a larger one in 2027. So essentially they're positioning themselves for 2027. There's a big near-term hit.
And David, sticking with United Health and their earnings here, I mean, technically they beat, but this annual revenue contraction that's expected obviously was not, well received. But I guess my greater question is, how much of this move to the downside do you think is actually tied to this Medicare announcement as opposed to the numbers themselves for United Health? Because I had a conversation earlier where someone indicated that they thought the numbers weren't terrible for United Health. It did actually indicate they were making progress. They felt in the right direction. It just simultaneously came at a headline that didn't help them.
Exactly. This was a shock. This was a big surprise. So you had a big, I would agree with you that the numbers weren't so bad. They are making progress to better profitability, but they're not there yet. And this places another potential headwind to that recovery. It's a tough day for the insurers.
Yeah. Certainly not good timing, at least, for that headline to have come out. David, thank you so much for your time today. Really appreciate it. David Tung, their Senior Analyst, Healthcare, Argus Research. Coming up, it's time for Overlooked Stocks. George Sillers has his eye on Cisco, not the tech company, which is having its best day in over 5 years after earnings. We'll tell you about that next.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Schwab Network. Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Sam Barnes on the floor of the New York Stock Exchange. So shares of Cisco, that's the food and beverage supplier, having its best day in over 5 years after a strong earnings report, and that is the focus of today's overlooked stock. So I'm joined by George Siller, Senior Markets Correspondent. Talk us through what we heard from this company and, you know, obviously the reaction we're seeing today off the back of this report card, George.
Yeah, I mean, if you think about what's going on with inflation, I mean, these food companies and food distributors like Sysco have actually performed quite well. Even though the margins have incrementally increased, it's actually been very accretive to the overall businesses. I mean, if you look at Walmart and Costco, just an example, Kroger. Sysco itself, not the tech company, but this is the largest food service distributor in North America. They service mostly restaurants and hotels, hospitality centers, hospitals and schools and so forth. And essentially, they're expanding their offerings to include their own what's called Commerce 360 software. So they're integrating digital infrastructure to compete with even Salesforce, specific to their business and to their customers. And they're also providing marketing for merchandise as well. But if you look at the report, it was actually quite good under the hood. They did post an adjusted earnings profit that beat the estimates by about a penny, coming in at 99 cents. That was higher by 6.5% compared to the same quarter last year at 93 cents. If you look at the sales, they came in around 20.76 billion. Now those were lower by about 14 million than the consensus estimates, but nonetheless they were higher by about 3% year over year. They did talk about the acquisition spree that they've been on. So they've got some inorganic margin growth expectations that are manifesting. And last year they bought a local Northeast food distributor, Ginsberg Foods. And the CEO did talk about how that's becoming more accretive going forward, especially on a gross margin front. And the other thing is the guidance the company provided, the midpoint prior was around the $4.57 range. They actually guided to the upper end of that range, over $4.60 now. I think that's posing quite nicely for investors with the stock over 9% today. The other thing is if you look at the metrics just under the hood, like I said too, they talked about how local volumes are up 1.2%. Now, if you look at that number relative to top line sales of 3%, the difference is pricing power, and it's a marginal increase. But if you look at net income margins of the business over the last 4 quarters, they're about 2.25%. That's very low in the context of any business, but not necessarily low when you have lots of volume that Sysco has. But those numbers are higher by about 50 basis points compared to 5-year averages. And they're doing that on gross margin expansion of only about 25 basis points. So that speaks to better margin profile, and that's why the stock is hitting some new 52-week highs. And in fact, it's encroaching on some new 5-year highs, which is, again, typical of a stock like this with those good earnings reports. But again, typically speaking, with the dividend yield that it pays at around 2.9% or $2.16, they do pay about 47% of the earnings in dividends. So that's why the stock over the last 5 years has been in a relative trading range.
Yeah, I mean, pricing power, gaining market share, I heard the CEO talking about today as well. I mean, it explains why we're seeing this sort of double-digit gain in the market today, and it's making up for some of that lost ground as well, because it has been an underperformer since around the back end of last year. I'm just wondering, I mean, the first thing that you mentioned, George, and the first thing that comes to mind with a business like this is inflation. I mean, particularly when you're talking about things like cattle, which has been a really, really big focus for some of these businesses as well. Was there anything in this earnings that seems that, this sort of turnaround that we're seeing is sustainable now, given that it has underperformed since the last quarter?
That's a good question. Like I said, if you look at this business, this is a business that I think is doing well now relative to the earlier part of last year or later part of last year, because the food stocks, I mean, if you look at General Mills, ConAgra, just to name a couple, they're actually performing quite poorly, the staples group. But distributors and wholesalers and retailers are doing well. So that's Walmart, Costco now recovering, and Sysco, which is in the wholesale distribution network. So these areas of the staples ecosystem are performing exceptionally well outside of the food brands themselves. So Sysco is brand agnostic. So that's what's nice about their business. But this is a company that doesn't grow very much. If you look at the revenue for the quarter, it was 3%, 6.5% earnings. So generally speaking, if you have double-digit growth rates in earnings relative to sales, in other words, a 2-to-1 ratio is what I'm trying to say, you see stronger trends. And this quarter actually proved to be quite good at 6.5% earnings growth relative to 3% sales growth. But the thing about this is typically, and this is why I denoted the 5-year chart, is this company does pay out quite a bit of its earnings and dividends. So you'll see a move like this today, but this is not a stock that is designed to be in an upward trend per se, just because of the nature of the business. It's not growing very much. It's a value and income orientated name. And if you look at the sales, 82 billion, market cap at 36 billion, that's a very low price to sales ratio. But the income is really, that's the investing component of this business. And that's how you have to treat it. So you're getting a pass-through through the dividend versus, again, capital appreciation over a long period of time.
Gotcha. Thanks so much for that, George, and helping us unpack Cisco for us today. I'll send things back over to Marley in Chicago for now.
Thanks so much to Sam and George. We are nearing the end of the market session. Alex Coffey will be joining us to discuss the action we saw today, as well as post-market earnings we have on deck from Seagate, Texas Instruments, and F5 Networks. Stay with us.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
We're back here on Market on Close. I'm Sam Vardas on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. We've just got a few minutes left in today's session, so let's welcome in Alex Coffey, host of Next Gen, to help close out the session here today. And obviously we've seen this S&P record intraday. Obviously we're closing in on 7K, although off the highs right now. Just talk us through what you're seeing as far as the levels here, as we've got 2 minutes to go in this session, Alex.
Yeah, I mean, at this point, 7,000's potentially right around the corner. Could be something that we see as, early as tomorrow, especially with some of those big mega cap names. If they do, go the direction that the bulls would like to see, which is higher, particularly, the Microsofts, the Metas, the Teslas post earnings, you could see that as soon as tomorrow. But yeah, new all-time highs. Probably a market that's more reminiscent of 2023 through the first half of 2025, which is more of a mega cap tech driven rally here today. You had less than half the S&P 500 names higher, but still had a record setting session. From a NASDAQ perspective, it was about 55.45. You can see those big boxes is where the green is. It's still idiosyncratic, stock-specific stories that are plaguing areas of the market. You think United Healthcare and some of the stuff going on with some of those insurance providers, and the Medicare policy changes potentially, or the changes being a little bit less in terms of those fees. But all in all, I think it was a nice session. I don't know that it will be ultimately a determinant session, given the fact that we just still have so much left on the calendar for this week. I sent over the team a chart that we could look at quick. This chart just, I think in my mind, illustrates the strength of the trend. We've talked about the relationship between this teal and purple line several times. That's the 5-day versus 21-day average. Short-term trend is positive. The brown box represents the movement through the end of the week based off of the volatility. Maybe basically 6,900 to the downside, or a new all-time high around 70.60 to the upside based off volatility.
All right, as you say, we are looking at a mostly high picture here, very idiosyncratic in nature as far as some of the stories are concerned. But we do have, of course, the S&P 500, which managed to hit an intraday record today. 0.4%, finishing the day up 69.78, as we mentioned, within arm's length of 7K now. Whether that's tomorrow, obviously looking at a number of earnings as a potential catalyst here, particularly from our bigger names. We've got the Nasdaq, which is up 0.9% to close out the session today, 25,939, as we saw some of the tech leadership back in the driver's seat. A lot of optimism around some of the chip names, the memory stocks as well. The Dow Jones, though, was our underperformer for most of the day. And, of course, we know very well where the drag was coming from with, of course, the unique and very individual stories driving some of the losses here in this market, particularly off the back of earnings. We had Boeing down almost 2%. We had United Healthcare down almost 20%. So, of course, these were some of the components which really dragged on the Dow today. But the Russell 2000 managing to recoup some of the earlier losses and make up for some of that lost ground, as we saw closing out the day 0.3% higher or so, 2666 there on the small caps. And so obviously as we look across the sectors, I mean, it looked very, very supportive as far as a broad strength here as far as the sectors are concerned. As I mentioned, technology very much was the outperformer, up 1.5% to close out the day. Utilities were also higher, up 1.2%. But I do believe we're getting Texas Instruments, speaking of some of these chips, hitting the tape right now. Marley, I'll send things over to you for those numbers.
Yes, we are, Sam, and we are seeing some seesawing in terms of the reactions. They're coming across the wire right now at more than 3%, but I want to give you these numbers as they are a miss across the board. EPS coming in at $1.27. Estimates we're looking for $1.30. Revenue for the fourth quarter coming in at $4.42 billion. Just a very slight miss, but a miss nonetheless. Expectations looking for $4.43. For operating profit, $1.47 billion. Estimates were for $1.46. Slight beat there. Free cash flow for the quarter, $1.33 billion. Estimates were calling for $884.7 million. That could be a number here that's important as to why we're seeing this move to the upside. And on their CapEx spend, they are going to spend $925 million in the fourth quarter. Estimates were calling for $1.25, so a lower than expected CapEx here. Also seeing some first quarter guidance here. EPS 122 to 148. Revenue 4.32 to 4.68. Want to bring you both back into the conversation, Alex, as we're taking a look at this, still holding on to this 3+% move to the upside from Texas Instruments. What's driving us upwards? Because the top and bottom lines for this quarter, at least, are a slight miss.
Yeah, I think a couple things stick out to me. First off, that's not a surprise. I think the thought coming in from analysts around this fourth quarter print was, hey, they're still in the midst of this recovery. In line with guidance would be considered acceptable. Now we want to hear about how the recovery's progressing. And you look at this first quarter revenue, this current quarter guide, which you can always take these current quarter guides when you have information to go off. Essentially, they have about a third of the relevant information now contained within this prediction. The numbers that they provide are a lot better than what the street was at. And so to me, then the next read through is, okay, if this quarter is progressing well, what does that say about how this year is going to shape up for a company that is really in need of some good news? Combine that with when every other big company we're going to talk about this week and scrutinize how much money they're spending, this looks to be like a company that's being relatively prudent. They saved about, almost, 300 full or 30 full million. The 300 million from the estimate on CapEx for their fourth quarter. That's significant, especially for a company that isn't performing the same way the Nvidias and the Microsofts and the Apples have over the last few years.
Yeah, you bring up a really good point that they aren't the same because their focus is in analog. And Sam, I know you were there listening when I was talking to Jenny Horn earlier today about Texas Instruments and some of the moves expected here today. Analog being highlighted as something that was of high importance. Analog revenue up 14% year over year, $3.62 billion, beating the estimates. Also, free cash flow has been highlighted to us repeatedly, not just for this name, but many names as being important, coming in at $1.33 billion, significantly beating the estimates for $884.7 million. How important are these numbers in showing, because they are structured differently as an analog first company, to why we're seeing this move to the upside now more than 5% for Texas Instruments?
Well, I think there was a lot more conviction for some of these names going into this report. Obviously, this is an analog semi-bellwether, as you pointed out, and among the first that are actually reporting here. So we're really getting a sense of maybe how things are faring, because this is not the sexy stuff. This is the stuff that's exposed to the industrial sector. This is the stuff that's exposed to the auto industry, which of course we know has been struggling as well. It's not seeing the same demand as we're seeing, for instance, for the AI data centers, which is really sucking the oxygen out of everything right now. So we're seeing the analog chips go into things like EVs. We know that that's been on struggle street a bit, and obviously some of the commentary going into this was around the fact that, you know, there were some more analysts getting a little bit more conviction, as I said, on these names. Still sitting on the fence. I remember covering BNP Paribas just recently, who actually upped this to neutral from underperform, and that was because they were seeing broad-based restocking cycles for semiconductors across the industrial end markets, and that feedback came from a lot of their conversations from CES meetings and their industry conversations that they were having. However, while they are seeing perhaps more of a recovery in the industrial side, which I'm just looking as far as the revenue is concerned, 34% exposure here, the auto demand remains low, which could see a recovery in 2027, so that might stay remain a little bit longer. But I see that Seagate numbers are crossing the wires as well, Marley, if you want to break down those numbers for us too.
Yeah, Seagate coming across a move to the downside here. We're down about 3% right now. EPS coming in at $3.11. That is a pretty considerable beat. Expectations were calling for $2.83. For revenue for the quarter, $2.83. Also a beat here. $2.75 was the expectation. For the third quarter guidance, adjusted EPS expected to come in between $3.20 and $3.40. Estimates were calling for $3, so we are 20 to 40 cents higher than that. Revenue expected to come in between $2.8 billion and $3 billion. Estimates calling for 2.78. So again, the range above expectations here. Now, Alex, I'm seeing numbers that are beating top and bottom line. I'm seeing guidance that is beating expectations, but I am still seeing Seagate pull to the downside here. They are reversing slightly, but still in the red. Is this just a case of the expectations were just so high, or are there unanswered questions here and we need the call?
Yeah, a little bit of both, I would say. What is the early kind of theme of this earnings season been through about 15-16% of the S&P 500 names? It's been better than expected beat rate, better than expected aggregate earnings of about 82% beat rate on 15-20% aggregate beat rate beat amount. But negative almost 1% one-day price reaction. We're a long ways from the open and then, of course, the close for basically 24 hours from now, where ultimately Seagate ends up. But one of the big questions I had coming into this week around a name like Seagate was, how can these really momentum-driven stocks at the moment, the ones that are kind of the focus of the market, when they give us numbers, how does the market interpret that? And the numbers are strong. No one expected them. Like, if these numbers were a miss, we'd be talking about something far different than this. But was just beating the expectations going to be enough? Now, it did turn when we started to get the guidance figures, which just objectively are really, really strong. I mean, you look at the current quarter EPS, adjusted EPS guidance, their low end of their bound is 20 cents higher than the midpoint estimate. For revenue, which is a little bit less volatile than earnings, is their low bound is higher than the estimate that was provided by the street. So when you look at that, it's hard to say that there's anything wrong with this report, but you look at the chart and say at some point it's priced in. So if I'm a Seagate investor, if we could open and ultimately close around unchanged after the run it's been on through earnings, I'd be jumping for joy.
Yeah, and Sam, I want to give you a couple more numbers that came across while Alex was talking. Gross margins, 42.2% versus 35% year over year. That also beat expectations. I know we've had many conversations about how important margins were going to be to the continued success of some of these companies that have had these massive run-ups. Free cash flow surging to $607 million, up from $150 million year over year. Of course, this company has grown 250% in terms of its stock performance over the last 12 months. As far as conversations you had, Sam, or notes that you read about questions that might come up on the call, what are you seeing in here that you think will be raised? Because as Alex pointed out, this earnings season has had a lot of beats and raised guidance, and we've still seen slight downward reaction. So as he's saying, if we hold steady at unchanged, that wouldn't be the worst thing.
Yeah, it's a bit of a head scratcher given that they cleared what is a very high bar as far as what has been set here. I mean, as Alex pointed out, I think a lot of the capacity constraints have been pretty well priced in at this stage, particularly with what this industry is dealing with respect to the tight supply and high prices as well. The analysts that I've been speaking to very much had pointed out that they do expect to see continued stability in these earnings, which we have very much seen, but they said that even little hiccups, minor disappointments could be very closely scrutinized. You wonder what the disappointment and the hiccup is with this one. But, you know, as far as some of the questions on the calls, no doubt is obviously going to be around the entire supply chain, because obviously across the DRAM, the NAND, the storage, the hard disk drives, which is what Seagate is in the business of as more of a pure play. And of course, if you look at the whole AI theme playing out right now, it's really a story of the fact that you can't have data without the storage. I mean, that's the no-brainer here. But a lot of these stocks are thrown in the sort of same bucket, and we're very guilty of that with respect to the whole memory space. And that is because a lot of them are moving in tandem, because very much they need to all work together in order to continue to grow, and they are expected to do that as well. Some of the analysts were also pointing out to me, which is interesting as well, probably not to do with the move we're seeing right now, but just something to think about, is that, you know, the way that these companies are established, your Seagates, your Western Digitals, in the storage and hard disk drive type of category, it creates a more sort of challenging barrier for entry for any of the other names in storage and DRAM, which is different to, for instance, the NAND, where you're seeing a lot of the Chinese players coming into the market as well, which are more competitive on price. But yes, I mean, all in all, I think it's a high bar which they've managed to clear here.
Yeah, certainly is, and we are seeing some more continued seesawing, still down about 1% here. Alex, final thoughts on Seagate before we move on to our last earnings at 5.
Well, I think you just look at the tone within the statement. This will probably be echoed on the conference call. Their CEO, Dave Mosley, a part of the statement saying, this performance highlights our team's strong operational execution, the durability of data center demand, and the ongoing ramp of our HAMR-based Mosaic products. That's going to be a big part of, I think, this year as they roll out those Mosaic products. So something to think about, and I'm sure a big topic of discussion for the conference call.
All right, and let's jump to F5. A more than 10% move to the upside, higher than what was factored in terms of the options. Expected move is only 8%. First quarter EPS coming in at $4.45. Estimates were for $3.64 here. Net revenue coming in at $822.5 million. Estimates calling for $758. Significant beats there. Also putting out second quarter numbers, $770 to $790 million expect for revenue. $747 was the expectation, so completely above range there. EPS $3.34 to $3.46. Estimates were calling for $3.41. So again, range above the expectations. Fiscal year up to be 5 to 6% in terms of revenue. They were previously saying they saw 0 to 4%. So we've got upward revisions here. We've got ranges that are outside of estimates, and we've got a beat on the top and bottom line. Alex, thoughts on this now 12% move quickly on F5 here?
Yeah, I think you highlighted. Whenever you can say, hey, before we thought maybe we'll grow 2%, 4% on the high end, and now we suddenly see revenue growing from 5 to 6%, it's going to be an easy sell to investors.
Yeah, it certainly is, and we're seeing that, you know, double the move now almost at this point that was expected from F5. They're up 12% after they reported a top and bottom line beat. Revenue grew 7% year over year. They saw product revenue growth 37% in systems revenue, which was an area of concern, raised their fiscal year guidance, raised their guidance for the next quarter, and we are seeing them rewarded right now, up 12%. Of course, the call hasn't happened yet. That's happening in about 15 minutes, but a strong report from F5. I want to thank Alex Coffey for being with us today to break down all of these earnings for us. And coming up next, we're going to dive into the earnings we got from UPS that sent shares to 9-month highs in reaction. Market on close. We'll be right back.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
sometimes, you know, you could have done better. Same goes for where you invest.
Okay, folks.
Level up and invest smarter with Schwab.
Well, ladies and gentlemen, been a day for me, that's for sure. Now I'm going to get out of here and meditate and watch my videos and see y'all tomorrow. Thanks again, everybody.